Good morning, my friend. How are you? It's
Good
Tuesday?
morning. Tuesday, it is.
Yeah.
All day.
How was Monday? Good Monday for you?
Pretty solid Monday. I've been running just all over town with this class thing, but
You're
it's
a
over with.
Renaissance man.
Yeah, I'm really a Renaissance man.
Again, you're here early. You're knocking out, showing so many other things. It's amazing what Frank does for the RFED for TastyFX. Took some time to work on the body.
What?
You went to work out in the afternoon.
So you think it needs work?
I mean, those brothers who do the rehabs are the first thing that comes to mind of the houses. The twin brothers.
Who are they? No, I don't know.
It's some.
Why are they like in really good shape or something? Or they're not
No,
in
they
good
just
shape?
do remodel houses that are in really bad shape. So it's a poor joke. Don't worry about it.
So they're gonna what? The twin brothers are gonna they need to remodel me, is what you're
Yes.
saying? Okay.
But no, you worked out, which was
Kind of
great.
a reach. It was yeah.
It was a reach. It wasn't a good one. There's way too much explanation that went into a non-funny joke.
Yeah.
And then you went to exercise your mind.
Yeah, my last class. Do you think I can get away with not having a car ever? Do you think I can get away with it? Because part of the reason I'm asking, yeah, I've been doing this class the last 4 days. Yesterday was the last day, and 4 days in a row, I've walked from the office here in Chicago is in the West Loop. I live in a neighborhood that's pretty close here, and so I walk to and from work. And then this class was on the near north side, was in River North, which is like maybe 2 miles from here. And I walk there, so I've walked there 4 days in a row, and I love walking. It's not like, oh, my legs are tired, or like I'm never on a walk and I'm like, oh
chilly,
man,
a little
I
gray.
wanna. It's a little chilly.
Yeah.
That's one of the only things. But after like 10 minutes, you get going, you don't really notice the temperature. But I'm starting to think, like, oh man, maybe I have some kids in the future. This whole thing.
Oh my God, we're already planning for Augie.
Can I get away with never have? If I pay a premium to always live in the city, close to the office and close to all these resources, do I ever need a car? Becomes a question. I don't want one. I don't like sitting. Do you like sitting in your car? Another question.
I like the freedom the car gives me to go places.
Yeah.
But in theory, yes. With kids, it's tough.
Yeah.
I mean, I remember we had a minivan, which I swore I'd never get.
Mm-hmm.
But once you do have kids, the sliding doors and the
3 small kids at once.
yeah, it was a godsend. But the amount of, especially when we went from, a single person to a man-on-man defense with 2, the amount of junk you took to go shopping at Old Orchard, which is just a shopping center by us, the stroller, the pack, you were like packing to go to war. So how do you do that all while maintaining a stroller mobility around the city? In the summer, I could see you doing it.
Yeah.
I think it gets a little bit harder when you've got to go to, pediatrician appointments and mommy and me. And I know you want to start him.
Mommy and me.
You want to start him working on his axe throwing skills at an early age, taxidermy at an early age, all of the things that you did as a small child, especially later on in life in Michigan. All those things are important.
Never did any of those. I did do kitties and crayons. Did you have a kitties and crayons
We
thing?
did not. But what I did is I had 3 kids who were all active in different kinds of sports.
Yeah.
And
They are all pretty different, actually.
And very early on, though, both my guys played soccer and played it well. They're in 8th grade, and to actually be able to have the skills to play on high school, you already have to start a travel team. And again, it's like they're in 8th grade. Why am I driving to Madison, Wisconsin, which is 2.5 hours? You can't find a team of other 8th graders between here and Madison.
Not competitive enough, I guess.
But it's also kind of, the coaches all get, I don't want to go down the whole conspiracy thing. Coaches get compensated for going to these conferences and championships. But it was a lot of travel.
Yeah.
It was a lot of, now, can you do that differently? Sure. But I would say that at some point it's going to be more difficult
Yeah.
to I would say the first couple of years, you probably be on pretty good
The
ground.
kid's not moving a lot the first year.
But where you need to move him to for his vaccinations, his shots.
Doesn't need any of that.
Okay. I mean, again,
joking.
when the kids were very small, I did a swimming class with them, which is basically just holding them and getting used to water. No, it was completely useless because my oldest now, who is a dive master, so he'll scuba dive to 250 feet. He's incredible. It took me 3 years to get him to go back when he was older to get in the pool to learn how to swim. So the dad and me, baby swimming did absolutely no good to get him comfortable with the water. But stuff like that, I know when you learn to swim, from what you had told me,
this will be good.
They basically tie 2 bricks on your feet and put you into a bathtub. And that was, go ahead, figure out how to swim. If you want to go, if that's your daddy and me swim class, yeah, you can do that at home. That works.
Who is my dad at this class? Is it like a cardboard cutout? Like, what? This crazy picture that you paint. Okay, so the traveling sports, I do now remember my upbringing. I did play travel hockey for several years.
Yeah,
and so
now you're talking about that
getting to Toronto or Detroit.
That bag of crap that you hockey. My boys never played hockey,
bad.
so
Smells so bad too.
My son would play. God bless him. He was fast. He would play. He was a wide receiver at football, so he'd go to football practice for 2 hours.
This is Ian.
Ian.
Okay.
Change in the car, and put on his soccer stuff and go to soccer practice for an hour and a half. That smell in the car,
unbelievable,
never came out.
Yeah,
I mean, whoever bought that used car, I have great pity for. So it was just, I mean, my wife is looking at me and she's like, this is unbearable. And I go, yeah.
Disgusting.
So, but do you need a car? You probably will at some point, but I get the idea of trying to be aspirational.
I remember I was told by this guy once, a friend of mine years ago. Maybe I was like 25 or 26, and he was like in his early 30s, and he made this remark like, "Oh, if you're 30 and you don't have a car, you're a loser." And now I'm 30, about to be 32. Never had a car. Feel great about it.
You had a fantastic car with a duct tape bumper and everything. It was exceptional.
My dead grandmother's car, I don't think maybe counts.
Yeah, but it was like the
fast. I banged it into 10 cars.
Right. For you, it was like Chicago Fast and Furious. You were doing like turns in the middle of 4-way intersections in the middle of the night without stopping.
Yeah.
It was definitely.
That was one of the.
It was Chicago Drift.
Sure. Yeah. It was not a good thing. I am a pretty good driver, though. I like. Sure. The only thing that stinks.
So is Rain Man.
I do have to rent. That joke plays now because I've seen that movie. Yeah. And he drives the dad's car, right? He likes to drive
on the driveway at Walbrook. Yes, yeah. He's an excellent driver.
he's an excellent driver.
Yes.
What's the word that he always says though? Not actually. But he says some word that's always like really funny.
Definitely.
It says something. Anyways.
Whatever.
Yeah.
So it will be hard. You can there's lots of people who do it. It just depends on, what you want to do.
Actually, I'm a great driver. Something like that. Anyways.
But a car in the city is really expensive. Like Chris has his car. My youngest has his car.
Oh, yeah. As long as I live in the city, I don't think.
He's got a Jeep with a soft top. So they're constantly breaking into it.
Yeah. That's
because it's just zippers.
Man.
And
I had a friend in high school who had a soft top Jeep.
Yeah.
He lived in the western suburbs, and we would
they
go
probably
nuts
lit it on fire every week. I mean, if you had that car in Beverly, it was torched every weekend.
Wait, so now you don't respect like Hinsdale in Western Springs and those suburbs?
No, they have the appropriate gates and fences.
Oh, they're okay. Okay.
Yeah.
For you, let's do this finally because we've never done this. So Pete is a North Side pretentious jerk, and he looks down on the South Siders.
Yeah, right. Am I right, guys?
They're laughing in agreement.
That was harsh.
And so there's always the North Side, the Cubs versus Sox thing. But I think that
there's
something
less about baseball.
I know you don't, and that's why I don't know what.
I love the Sox game because I can park and walk 30 feet and be at the stadium. That did it for me.
It's a great setup.
That's my favorite team.
It's a great setup.
Yeah.
Is the thing for you, is it that Beverly is like in the city? Is it like a South Side of Chicago thing? and like a suburbs versus city thing? Or like what? Or is it a north side versus south side thing? It could be like Orland or any of those places.
It's got
What
nothing
is,
to do
what
with
is the
north
difference?
south. I just know you and what made you, and then I've read the Beverlovian folklore about the city of Beverly. And again, I know you have been known to light a man's grass on fire.
Okay.
The home of Rainbow Cone is Beverly. Exciting.
Yeah.
Sounds disgusting, but it sounds, for some people,
It sounds disgusting.
because I don't like the idea of orange sherbet mixed in with ice cream. It's like, it doesn't work for me.
Okay,
But
anyways.
your thrill was to walk down the street and a fine gentleman, older gentleman, walking down with his rainbow coat, and was like, you know what? I've done well. I've retired. I'm getting my
it
rainbow
was a
coat.
McDonald's soft serve. He was wearing a suit. He was a guy in his like late 20s, early 30s.
And you knocked it out of his
He looked
hands.
like a yuppie, and he was wearing this whole suit. He probably just got out of his big bank job or something.
Again,
and he's
he had
eating a
ju-
McDonald's soft serve.
I mean, the man was
and
so happy.
that's going on the ground.
The man
it's
was
gonna go on the
happy.
ground.
He had just gotten through his parole hearing. And you had to yuck the whole yum
not.
with a parole hearing.
Absolutely not. Yeah, I had some pretty, bad friends
it's
that we
just-
did stupid stuff
It's
with.
funny, growing up
But-
north of the city, we had very little. The only time I would drive south of the loop was really never, except if I was like going down
So in
to
your
school.
mind, so it was like the way that like Cicero and like Romans would talk about like Germans. This is the kind of
I
thing
thought you were talking about
that you're
the town of Cicero,
No,
which is
I
by the
know it's
airport and it has a less
confusing.
reputable
It's
reputation.
Confusing. Good people. I'll rep Cicero as well. I'll take the whole southwest side. But anyways, it is like that. You didn't do any Latin studies on the north side? We oddly enough on the south side we studied Latin, Roman history, classics.
Here we go with the
And they would refer
the
to
enlightened man thing at parochial
They
school.
would refer to-
and your hang up on the benefits of the parochial education.
It was great.
How much
I loved
better it was.
I loved it. St. Barnabas, St. Ignatius. I loved
yeah.
St. Ignatius. Some of the best times in my life. Some of my best friends to this day. Anyways, in the Roman Empire,
See, I was of the people. We went to public school. And we all got along and we grew together. And it was a place where we would cheer and support one another. We weren't in
Well,
these
if you could-
hoity-toity public
if you could
private
price
schools.
out 99.5% of the population and just leave it for like a couple hundred rich people, it's probably it's
I
easy to
think
get along.
That's
But
an overstatement, but sure.
But the way that they would talk about like the Germans would be like kind of like, oh, they're these unknown people, essentially. Like we don't. They have their own cultures and their own thing, and so that's more what it was like. Anything south of the Loop, you're like, that's no man's land. Anything goes on down there.
Oh, I think people go down and never come back. Yeah. And
Like the edge of the earth might be there.
pretty much it. Yeah. If the edge were flat, it ends at like 12th Street.
12th Street South.
12th Street South.
I don't even think you hit Roosevelt. So
Yeah.
you've never even hit
No,
Roosevelt.
didn't hit or as I would say, Roosevelt. Yeah.
Roosevelt.
As I would
Yeah,
say,
maybe
Roosevelt.
Roosevelt's a different thing.
But I'm sure it's a fine community. Again,
I loved it. Yeah.
Yeah. And
I guess now that you bring it up, I don't go back very often. But I enjoyed it quite a bit. Anyways,
I imagine
What's going on?
the arrest warrants are probably something that you would want to avoid there.
also I haven't been back to Ann Arbor since I graduated.
Again,
Coincidence?
there's a lot of small possums, ferrets, and squirrels that want to take a bite out of you there.
You make it sound like
Well,
I was
'cause
like the
again-
bad guy in Guardians of the Galaxy.
No,
like there's the raccoon and
Michigan
it's like,
was a fascinating university. It was. I mean, it's so huge. It's just big. I remember driving by the stadium, which is what 95,000 people or something.
I think like
perverse thing.
120. Yeah.
Oh, even bigger, right? But the ability to, you majored in mathematics, very difficult program, but there you could see at Tulane we couldn't do that. We couldn't marry a double major in math and small animal
There it
husbandry.
is. I was
So,
wondering. I was like, there's too much nice stuff.
And so,
I knew it was coming.
yeah, that was exciting.
Also, I looked up small animal husbandry finally, and it seems like a very normal thing for like a certain part.
It does if you keep the
of the
animals
country.
alive, but when you tend to want to harvest the animals, it becomes a little bit different thing. So again, your curriculum was a little bit more disturbing, but it speaks to the
Let's talk about
interesting nature.
anything else but this. A lot of green on the board here.
Everywhere but in the land of yen, where yen's a little, dollar yen.
Let's take a look at
the yen's a little bit weaker.
Because this has been a really interesting one. We have the 15-minute chart here, and you can see U.S. dollar is trading near the highs against the yen for the last several trading sessions. But if you zoom out a little bit, this yen has actually been pretty strong the last several weeks. A nice bounce off of this 157, 158, right, which is like, I know.
It's high.
It's high,
yeah,
right? I know it might not look high on this chart because you'd say, oh man, well, we traded above 160. You zoom out even further, and the 157 area that I'm highlighting here is extremely rarefied air for the last 20 years plus in this market. Is this, in your mind, a little bit of a dollar bounce here? Let's just call that a rounding error. Let's say that we're trading around 150 to 152, 153, whatever. Is this just continued back and forth? Is this the new normal for yen? 145 plus trading?
I think so, and it is providing this contracyclical. Euro's up. It started a little bit up last night, and they put in a nice 20, 30 pips today. Aussie up, Canada up.
Commodity currencies are up
I'm talking just
today.
in currency terms. The yen is down, and actually, as the euro put in new highs this morning, right now, in the last 10 minutes, yen went right through its lows, or dollar yen went through its highs in the short term. So, is it acting in a different way? Is it the fact that the risk-off pieces? I don't go down the rabbit hole because these moves aren't enough to. But it is not getting the same. Euro's finding a bid, Aussie's finding a bid, dollar Canada is being sold, which means Canada's finding a bid. Even Kiwi's finding a bid down here. Yen and Swiss are having nothing to do with it.
Yeah.
So is that taking out a little bit of the risk off we saw them demonstrate last week? Yeah. So, I think when you look at, this is where you need to be mindful. If you looked at that, you would just say, well, the Swiss isn't performing in the dollar sell-off here. Dollar Swiss is higher. Dollar yen is higher. I should be selling dollar yen and dollar Swiss because they're going to catch up to the dollar weakness I'm seeing in euro, Aussie, Kiwi, and sterling. Doesn't work that way most days.
The correlation seems to have really broken
down. The correlation
down
to yen to anything, Glenn ran this Wednesday. I think the best we found in the yen was 0.18. Most of them below 0.1. So independent occurrences.
I didn't notice this piece here. We're 91 bid strong for this dollar Swissy market. Like this is, I mean, you look at it, Pete calls out the fact that Swiss franc, obviously Switzerland is a part of the European continent. Japanese yen, obviously Japan is part of the Asian continent, and Australia and New Zealand, and very close economically to the Asian continent.
So why don't they all move together?
So why don't they move together? The Swiss franc in Europe, kind of a flight to quality historically, let's say.
Can be.
Japanese yen can be a flight to quality, and maybe you saw some of that at certain points in the last couple of weeks as this yen, has bounced back a little bit. But I'm finding it hard to really make a case for either of these currencies being risk on, risk off, or definitely hard to make a case for them being tied to the pound or the euro or Japanese yen, obviously being tied to the Australian dollar or anything like that. They're kind of doing their own thing.
This won't play catch up. Yeah.
What is the deal with this Swiss franc, Pete? Why is it so weak? In the same time that euro and pound are relatively, they're closer to their lows than their highs, but this seems like it's weak in a different way. What am I right to think that? What's going on with this Swiss franc piece?
And I think it's never just one thing, but I think again, you saw those down moves when, especially early in the week when we had some stress in U.S. equity markets. They're just taking that back out, I think. So for me, it's not that interesting a trade right now. The traditional safe haven of if U.S. equities are collapsing, I would always want to be short. Whatever I had on another currency, I want to be short some dollar yen and short some dollar Swiss. I'll be at long yen, long Swiss. And that usually had a little contra-cyclical kicker to it. It hasn't worked as well lately, and I think they're just muddling it back from those kind of relatively weak attempts to have that, because we had some outsized days where Swiss was up, yen was up, and euro was flat. So, you look at that yen chart, we're still 6 handles off the highs.
Yeah.
Euro, we're 100 points off the lows. So it's just yen normalizing a little bit. I think this is very much, for me, dollar yen becomes a little bit more challenging now. It's kind of in a sloppy range a little bit. And to say what's driving it is U.S. rate differentials. It's always a number of different things. But right now, it seems like it is people managing a little bit of the people who might have used that as a flight to quality around tariffs or whatever aren't doing it so much.
Yeah.
So we'll see. I think Swiss is particularly challenging right now, and I like trading Swiss.
I know
It is an interesting. When it starts to go, it goes. You're going to find that it's a little. Swiss cash market is thinner now. Is that good for us? Do we like deep liquid markets? Sure. I think you have something here where you have decent liquidity. So the bid offer isn't euro tight.
Yeah.
But it's tight. But it will move. It will chew through levels.
Okay.
When it's moving. I like that aspect of it. You need to know what you get when you're trading it. So, what's cheap, what's rich? This is a pair that I always layer into. I never put just everything on at one price.
Okay.
I always want to layer a little bit. And whether that's layering in 3 micro lots or 3 full lots, depending on what you want to do, just be mindful of that because it is slippery a little bit.
Well, it'll be interesting because this is now, this morning, the 4th or 5th trading session in a row in the upward direction for U.S. dollar, downward for the franc. And we are 91.30 and staring at 92 even, which has
That's
been
a great way to look at it. If we go to day number 5 and we print a higher day, we know statistically 5 days in a row up is getting us
very
into
improbable. Yeah. It's rare type of
a little bit of a pot
movement.
odds play at the upper end of the range.
Well, and yeah, you're just also the fact that you're staring at this 92 high. Obviously, this market can do anything, but you've seen it bounce off of that price a handful of times over the course of the last year. And I do want to do some historical work because, yeah, this is not the same type of extreme as that Japanese yen. We've traded to parity with this dollar Swiss franc market in the last couple of years. So letting you know that, 92 cents, of course, is not the end all be all for where this market could go. But to your point, Pete, it has been just kind of bouncing around this little area here, 90 to 92. It'll be interesting if it gets to that 92 again and if it moves through it or bounces off of it.
But you just walked through a great point. If we get to 5 or 6 up days, statistically, that's a little bit of an anomaly. It gives us a little bit. Chances are the next day is a down day. It's not always. We've seen this run 9, 10, 11
Sure.
days. You're at the upper end of the range. You know where you're wrong. If it prints 92.30, you're wrong. Okay, now I have a statistical setup with a reasonable out, and I want to lean a little short.
Sure.
That's one way to take it apart, and that makes it interesting to me. Let's jump over to Aussie and Kiwi a little bit, just because and this just goes to show you, Aussie, we're having a little bit of an up day, albeit it's back to the upper end of that 62.85.
Similar to equities, started the week in that like very momentary down move, and since then has trended towards the upper end of this range, looking at 63 cents.
Let's remember this. Sorry, guys, you can't see this, but 62.50 to 62.90 is kind of your range for going back through the week.
Yeah.
40 pips isn't a huge amount of range.
No.
So, but here we have gold down substantially this morning.
Okay.
Copper down. So why would Aussie be up? It's supposed to be the precious metals play. We know that isn't a great correlation anymore. So I think when markets bottom, they never really do. They use the classic bottoms. Markets are much less deep. You get a V, this downdraft, and then a real correction. Markets price much more efficiently now. There's so many more participants. You tend to, when you put it at a bottom, and you want to argue 61 cents is a bottom, it's cheap. It doesn't go straight up. It tends to challenge. It wears you out a little bit. You bounce between 62.5, 62.80, back down to 62, and then it may get some legs. They rarely just take off from here. So it's a little bit of patience around what you want to do, but we're seeing a little bit of dollar selling in some of these pairs.
Yeah, we'll see if the dollar selling continues, because, I mean, it's been, obviously, you zoom out like this, and it's been a hell of a run for the U.S. dollar going back to the fall of last year, and now we're entering, we're in February of 2025.
This is going so fast.
And
this
the
has
U.S.
been a
dollars,
great FX year.
Yeah, U.S. dollars kind of held on to a lot of these gains. We saw the big high against Canada last week, obviously, but I mean, it's not moving through these highs for U.S. dollars, so we'll see if this is the inflection point. But I believe we're out of time if you want to take us out of here.
You wrap us up, my friend.
All right. That'll do it for today's episode. Pete and Glenn will be back tomorrow, but stay tuned for Tom, Tony, and Vanetta coming up next. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime, Monday through Thursday, only on tastylive.
Stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hello.
Hola.
And welcome to Movie Phone.
Tom, you got your beret today. You're all good.
Yeah. I'm back in business, as they say.
Yes.
When you got home from work yesterday, did you just like give it a hug and you're just like, oh, I missed you?
No. Nice try, girl.
People on social were very surprised. One, like that you had hair, and two, like the quality of your hair.
My hair is really quality. Yes, I have a lot of quality hair.
I mean, you made a liar out of me on social for 14 years. I've been telling everybody you're bald, and that's just like hair coming down that we glue on to the beret. So you made me a liar.
I could do that. I would do that someday if I have to.
So why do you wear the beret? Like, because people think that it's you need to go to Turkey and get a hair transplant situation.
Plugs.
You have.
Who was I talking to the other day? They wanted plugs. I forgot.
Everyone wants plugs.
Why?
Because if you can go to Turkey and get like a full body, procedures done for.
Why do you have to go to Turkey?
Because it's super cheap and it's very luxurious, and all the TikTokers go to Turkey.
Okay, it's your body. If you're going to go someplace and get something done, you're not going to go to Turkey. Please have some self-respect for yourself.
We all don't have Sosnoff money. Some of us need to go to Mexico and Turkey for our medical procedors.
I'm not going
Then
to
you don't
Turkey.
need it.
I'm not going to Turkey for hair plugs. First of all, I don't need them. Second of all, I want to go to Turkey though.
Sure.
Because
I thought you'd been to Turkey. Oh, your daughter's been to Turkey.
My daughter's been there. I've never been. I want to go to Istanbul, and I also want to go to the Turkish coast.
Oh, okay.
I've heard it is spectacular.
I also want to go to Turkey because they are known for their free-roaming cats.
I want to go to Turkey because they're known for their doner kebabs. And I love a doner kebab. We have a Turkish like takeout. It's like takeout, I guess. Mm-hmm. And the doner kebab. I mean, that is a beautiful sandwich.
Okay.
They're all there's two basic food groups.
Okay. Oh my God.
There is everything that resembles a dumpling.
Yes.
Whether it be
like gyoza, dumpling, pot sticker,
ravioli.
Ravioli. Yes.
The whole deal.
Yes.
Okay. And then there's everything that is like wrappable in a pita or some version.
Some sort of flatbread, right?
Some,
like your hero.
some version of flatbread.
Hero, a shawarma.
Yeah.
A doner kebab.
Everybody's got a version.
Sure.
Everybody has a version of
taco.
Basically.
Yes.
Everybody has a version of, of some kind of sauce, whether it be tahini, tzatziki, whatever it is. Doesn't matter. Mm-hmm. And every one of those sandwiches are great. Like, nobody does it bad.
We're more alike than we are different.
The whole world. It's really amazing. Like, you just go from country to country, you just eat stuff and wrapped up in meat off a skewer, wrapped up in bread. It's good no matter what.
Call it a pita, call it whatever you want. It's
exactly.
Still good, huh?
It's a flatbread. It's a roti.
Yeah. Lavash, pita,
whatever
you want to call it.
It doesn't even matter. That's what I'm saying. Just call it whatever the hell you want to. And it's delicious everywhere.
So wait, can we get back to this? So you made it a day without the beret. Why do you need the beret? Did you trade better or worse yesterday?
I traded good yesterday.
Okay. Is it just to keep the hair out of your face, or
no?
Like it's just because it's your signature look?
Yeah, whatever. I don't have anything. Yeah. No, I have no reason.
I mean, you can't trade any worse without it. Maybe try that. I mean, I know maybe at one time it was like a Samson kind of thing. You needed it to trade. I think we've proven that you don't.
No, I traded good yesterday without it.
I mean, now that was kind of an option, I would like to see a beret in like different colors.
It's too much work to get the beret to be the right size to fix. It's too much work.
No, like a Oprah situation.
Wait. You gotta read between the lines, Evan. Did you hear what he said? It's different sizes. We can't get one to fit his head.
Yeah, that's true.
People think
they're all the same size initially, but you have to stretch it out. And
you could get a Milner to help you.
A what?
A Milner?
What's that?
I think someone that makes hats.
It's too much work for me.
Okay.
Milner. A
Yeah,
Milner.
I think that's right.
I don't even know what a
Yeah.
Milner is. It's really someone who makes hats?
Yeah, I
No.
think so.
No. I've never been into a hat store in my life.
Okay.
But actually, I have. I got dragged in there with my wife once to a hat store.
Oh, I'm sure. Like in Louisville, and all the fancy hats like they have in Aspen. I'm sure your wife has one of those. They're nice.
Who knows?
They're expensive.
I'm searching this mill nurse, and it keeps going to MILF nurse on my computer.
That's your own algorithm.
I have rented
sorry,
hats.
sorry.
I have rented hats in Louisville before.
Did you get your deposit
Derby.
back? You didn't get that deposit back, did you? Because you stretched it out.
No, not me.
Oh, for your wife.
Yeah,
Oh, yes. No, she's lovely and has a normal sized head.
probably. Yeah. Yeah. But I find it just really funny that you can rent a hat for a day. So to buy a hat is like, let's say it's $1,000.
Sure.
But how much does it cost to rent a hat for a day? $500.
It's not $500
It
a
is.
day to
Yeah.
rent a. Like, so you're telling me I can either get like a Chevy Tahoe or a hat for a day to rent? I'm just saying.
In Louisville for the day of the Derby?
Yeah.
Yes. I'm telling you that's exactly what the market is.
Wow.
The market is because they'll have a price on it. It'll say like this hat's
They
$1,000.
gotcha.
They got you. Right.
They got you.
This
Nothing
hat,
you can do.
this hat's $1,000 to buy, which you're gonna wear one time, right?
Yeah.
Or you can rent it for $500.
I should have become a milliner. Like,
It's a great scam.
yeah.
I mean, they got you. You have no choice.
Man,
Yeah.
I should
Yeah.
be done with this whole writing crap.
Yeah.
Paying off.
And God help you if you're go to the Kentucky Derby and you're a woman without a hat on.
Oh, well, no. Oh,
Yeah.
It is just simply not done.
They throw eggs at you.
Yeah, I mean, they will throw eggs at you.
Well, not in this economy, but
That's right.
Now they'll throw
Not
popcorn
this
at you in this economy.
you see Costco levied a limit on eggs.
I think that's good because I
I
saw.
think that's good. Yes,
I was
people
there-
aren't hoarding them.
I was there last weekend and some guy filled up his entire shopping cart with eggs.
Sure. He might own a restaurant.
I'm
though.
sure he does, but
Yeah.
Yeah.
I'm just saying it's not fair to everybody else.
Sure. Well, we got one guy here that's got like that liquid gold, Thomas Westwater here, who's on
Got
the
his own
show.
chickens.
Mike and Nick. Yeah, he lives in like Burr Ridge or Park Ridge or something, and they're allowed to have chickens, and so people are like pulling him over in the hallway. They're like, psst, like, psst. They're like, I need 6
You know
brown.
what? I had 6 of his eggs.
Yeah,
They were delicious.
yeah.
They're delicious.
Did you pay him? Did you compensate? Because he's got to feed the chickens. He's got to take care. Like, did you?
No.
You just,
Can I bet? I would like to say Tom did not compensate.
First of all, he left them out on the table
okay, but as a goodwill gesture, you
with
can
a sign that said, "Please take one."
Donations accepted.
Okay, but
Donations
you-
accepted was
But
the
you,
sign.
as a good person, like I would have
He
been
said,
like,
"I'm a good person."
okay, well, that's true. Yeah, I kind of shot myself in the foot there with that. But like as a goodwill gesture, if I had taken some of his eggs, I would have been like, hey, I was like, do you want me to bake you something? Or like I would barter. I was like, or I'm just going to give you money because I care about the welfare of his animals and he's taking.
Other than the Waffle House, though, I don't think restaurants have raised the price of eggs.
How do you know?
I went out last weekend and got some eggs.
Do you use eggs at Bad Coffee? Sorry.
Only if you got avocado toast, you can choose to have an egg on top.
Oh,
Yes.
okay.
I don't know what.
But you don't know what your cost is. You have no idea how your business works.
I know we lose money on every piece of toast we sell.
You lose money on everything that you sell.
Options, toast.
I'm gonna tell you
eggs,
something
it
right
doesn't
now.
matter.
Buildings.
I figured out the restaurant business.
Buildings.
I figured out not a restaurant, but the coffee shop, whatever. Every single piece of toast that we sell, we lose money on, and they're really beautiful pieces of toast. You could raise the price from let's say $10 to $50. We'd still lose money. It's impossible to make.
What is your business model, man? Is just a tax write-off for you?
You can't make money selling toast.
Okay.
He makes it up in volume.
Yeah, we make it up in volume.
So how sustainable is this? That like it's just like
You can make money selling coffee.
oh you can. Well,
Yeah.
you know, Arabica futures hit an all-time high, right? On the ice. Like the all-time high. They're already up like 60% like for the year. But don't look at me like that. I mean, I was gonna cover it for news, but we don't cover the ice. But no, like and Brazil and Vietnam are like, we can maybe get our coffee back on track, but in like 2026.
Oh, whatever.
Yeah. I'm drinking mushroom tea now.
Are you? Oh, the Rise? Is it Rise?
I'm just kidding.
Oh, I get those ads on Instagram. I was curious how it tasted. The Rise, it's mushroom coffee.
I have
And like
Yeah,
mushrooms
no, I haven't
much?
done that yet.
No,
I
okay.
have never tried mushroom tea or mushroom coffee.
It sounds really good. It doesn't taste like mushroom. A lot of the podcasts that I listen to, they're like, "Oh, use our code." No, you don't listen to Crime Junkie. No, okay.
No.
It's not the same.
What'd you say, Beth?
It's not the same. I've had it.
Oh, you have had it. Okay.
Not the same.
Yeah.
Yeah, it's not my thing. I mean, I don't really.
I'm easily influenced.
Same girl.
What'd you do last night? What'd you get up to?
Oh, we were. I was out. I was
Oh
out.
my God.
I was out running around, charging around. I was just charging around. No, I was out
Look,
running errands.
If you went to drag night, you could just say you went to drag night. Like,
Well,
we
what
don't
night-
judge.
What night was last night? Monday night?
Yeah.
Yeah, I was out just running errands.
You know it is drag night at Hamburger Mary's. They do drag bingo.
Have you ever been to Hamburger Mary's?
I have been to Hamburger Mary's. I'm in an all-women's motorcycle group. Of course I've been to Hamburger Mary's.
A couple of times.
First of all, can I just say the food there is horrible.
It is so bad.
If you're sober.
The food there is not edible. And the only thing I like about that place is the fact that they give you your bill in a shoe.
Okay.
No, that's kind of cute.
Yeah.
In a high heel shoe, they give you your bill. The weirdest thing about that thing is I'm not trying to say, this is not a statement at all. I never can figure out if the server,
No. Well, I'm just going to stop
can
you right
never
there.
figure
You're
out.
not supposed to. You're not supposed to. That's the whole shtick.
I know. I never can figure out what the gender of the server.
Honey, it's the illusion. Honey, it's giving fantasy.
There's no fantasy, okay? There's somebody bringing you a bowl of chili. I just can't
That's
figure
okay.
out.
You and Shark G are sickos. That's okay. Shark G can't figure things out either. It's okay.
Well, I guarantee you can't figure this out either.
Oh, no.
I've been there.
All
I can't figure it out either.
We're going to just
Nobody can.
Gonna leave that there. Bat, how was your evening?
I'm good. Unlike Tom, I didn't go out. I stayed home, but we did have hockey practice at 9 o'clock. We got a big game against the Leafs on Wednesday. I know you'll be there, Sadnov. I believe it's in Romeoville around 9 o'clock at night, Wednesday.
You're going to
night.
drive in a snowstorm to
It
Romeoville.
probably is going to get canceled, Bat. Like, real talk. Like, we're in for, a lot of people are in for a ton of bad weather.
Yeah, I'm going to be in
From
Romeoville.
Kansas to the
If
mid
I'm in Romeoville tomorrow night, I got kidnapped.
Yeah, hockey don't get canceled.
I don't know. Just be careful. Like, I'm probably going to call an audible and work from home tomorrow.
I don't know. They said we're
Me
supposed
too.
Yeah, putting that out there. But we're gonna get a half a foot of snow. Like we're at a 15-inch deficit for normally what we
haven't had any snow.
Right. Yeah. So that's what I'm saying.
How much snow they said tomorrow?
15 inches. Like 75% chance of at least 6 inches.
Oh, all right.
So
Like a man 6 inches or a real 6
no,
inches?
hey, just gonna keep that there. Just gonna keep it moving. And I did see, and I'm so excited. We are getting Prince Street Pizza on Thursday.
I know, but I had to make sure. I had to talk to Tori about this order because she doesn't know.
Please don't harass Tori. Tori is a lovely, lovely lady.
Whatever.
And she's the glue that holds this whole shit show
Whatever.
together.
Whatever. So I had to talk to her because I had to explain to her, the kind you have to get the pepperoni there. That's their specialty.
She knows that.
I don't think so.
She knows that.
She's like, "What do you mean?" And I had to explain everything.
Okay. That's
Trust
all
me.
they have. It's not like they.
No, they have everything.
Okay. Well. Okay.
Okay. I haven't been there yet, but they have everything. I've been to the one in New York.
Sure. I've been to the one in New York.
I don't think it's going to travel.
Yeah, I think it could be a little.
It's 2 blocks away.
It could be a little Pequodish on the traveling, but
Yeah.
I will say the one thing she did work out, which I'm proud of her on, she got the first order of the day.
Nice.
So she's got a chance.
She's got that A1 slot.
Yeah, she got the A1 slot.
Yeah, nice.
She got the pre-opening order. Because
So what you're telling me is I'm going to be eating pizza at 9:30 in the morning on Thursday.
10:32. 10:32.
10:32. Okay. Done. I just won't eat breakfast. That's fine.
I think Prince Street Pizza will be a first-time hit here.
Oh, of course.
Yeah.
You were going to see people in the office that you have not seen in years.
Not since we used to get barbecue.
Oh, yeah. But
Yeah.
I'm very much looking forward to that. But JP Graziano's today, Chicago favorite. So
Yeah, it's not my jam.
you're just scared of the Italian women who work there.
Yeah, but it's not my favorite Italian. It's not my favorite Italian sub in the
Was
city.
Bari is your favorite?
Way above this.
Yeah.
Yeah.
Well, you could have a salad.
Fontano's and Bari.
You could have a salad.
I make friends.
So is
with
JP
salad.
Graziano your number 3?
Maybe after D'Amato's 4.
Wow.
You don't make friends with salad.
Why don't you tell him that to his face when he drops the sandwiches off? Be like, you're my number 4 seed.
Plus, I don't like their jardiniere.
Oh, I like their jardiniere.
It's very average.
Wow.
It's very average, not that spicy.
I do like Bari's.
Theirs is great.
Yeah, but I can't. The Bari too hot.
Bari is way too hot.
Yeah, it's too hot. Anyway. Okay, hey, we got a great show for you today. Just a bunch of bewildered boomers. It is a terrific Tuesday here on Tasty Live. In the top of the 8 o'clock hour, we're going to do an options jive. The good and the bad of bullish credit. What's bullish credit? Oh, what?
Bullish credit spreads.
It just says the good and the bad of bullish credit. That's it. Those are all the words.
I'm sure it's just credit spreads.
Oh, okay. So wait, what's bad about bullish credit spreads then? Like,
I don't know. You're going to have to watch the show and find
I will
out.
have to watch and find out. And then we got Victor Jones in the house, 840. Hear me out.
No. Today would be Chris Vecchio.
That's a mistake. Our fault.
Okay, my bad. Hey,
Our
that's
fault.
fine. We're going to do Chris Vecchio. Last week it was flip-flopped because they were filling in as guests. What are you talking about with Chris today?
I don't know.
Okay, this is going great. I am nailing my job this morning. The 9 o'clock market measures. VIX expansion, separating reality from fear.
Yeah, it's a good piece. I went over it yesterday afternoon. It's very good. Strong.
Okay.
Like bull.
And then we got live from the trade desk. We got big boy Scotty S. He's going to miss all this snow, but he's also going to miss Prince Street Pizza. So it's a toss-up. But he's going to count down the top trending tickers over at Tasty Trade. And in a repeat performance, TP will be joining Jenny, filling in for Liz. Did you see Jalen Hurts was at Disney World yesterday?
No.
Yeah. I mean, I might have some Google alert set for Jalen Hurts, but he was riding the Tron cycle ride at Disney. So I guess they really do go to Disney. You know those old commercials. You're like, you just won the Super Bowl. What are you gonna do? And they're like, I'm going to Disney World. But they held a gun to his head and they made him go to Disney World.
Is Jalen Hurts married?
He engaged.
He's engaged, yeah.
Engaged, yes. He put a ring on it. So he
put a ring on it.
Yeah. She's stunning, by the way. I do not know her name, but she's stunningly gorgeous. Of course she is, but yes, they're engaged. So congratulations
Got it.
to the Hertzes.
Hertzes.
Hertzes? Yeah. Okay. Hey, anyway, that's our run of show for today. Do you want your daily dose?
If you must.
Yeah. All right. Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire. Leading story. Top story. Just in.
Today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a terrific Tuesday. It's February the 11th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure, go ahead.
Mr. Bat, any earnings?
None you're really going to like. There's a handful of them. CME, for those who like to play that. Cisco, VRT, BIIB, CVS. Nothing you're really going to like. Shop is down 8 and Humana's up 4 from yesterday.
Ugh. Well, that's kind of
Oh,
gross.
Shop is down 8. It was up 3 this morning. I thought I saw it a Putty Cat.
I thought.
It was up
Cat.
3. Must have been before the number. Weird. Okay, good.
Now it's only down 4.5. Just letting you know.
Okay.
All right, good times. Hey, 5 former Treasury secretaries warned on Monday that recent actions at the Treasury Department by Trump administration officials and Elon Musk's Doge team raise substantial cause for concern that the United States financial commitments are being unlawfully undermined. They've never done this before. I've never seen 5 Treasury secretaries. I'm also just mentioning this because this never happened before, and there are some questions being raised about eliminating, large sectors of the government and then also the ability of America to pay its debts. Is their concern justified or is it overblown?
I mean, there's no reason for concern because nobody cares about anything anymore. I mean, I don't even know why you'd remotely care about this. Five ex-Fed governors, who cares?
Okay. All right. Not Fed governors, Treasury secretaries.
Treasury secretaries.
Right.
Even less importance. I mean, the way our government's running themselves right now, who cares?
I do care about bonds. Do you want to talk about bonds?
Sure, they're down 20 this morning, and I just bought some.
I was going to say it's going to be close to your number.
Yeah, they're getting very close. I just sold some puts in the 10-year notes, and I sold some puts in the bond options. And I'm offering more of the 110 strike, and I sold the 108 strike in the notes. So,
nice.
Yeah, I'm trying to buy bonds this morning. I'm hoping that we get a couple more down ticks. They're down 18. They were just down 20. I need them down about 24 to get filled.
Okay. It's certainly possible.
Yeah, I
and
think this is
there's some more economic data that's coming out this week.
I think you might get a nice little chance here to sell some bond puts if they get into the little bit lower. Maybe even I would like to see them trade into the 113 handle, but they're 114.26 right now. I'd like to see them trade at least 4 or 5 ticks lower, and then maybe even 20 ticks below that if they could.
Well, you might get that chance because Fed Reserve Chair Jerome Powell is going to testify to Congress today and tomorrow, where he will discuss the state of the Fed Reserve's battle against inflation. Sometimes when he does testify like this, it can move markets incrementally. Don't make that face at me. Literally just doing my job. Powell might also discuss the independence of the Federal Reserve, which in recent months has been threatened. So I'm just letting you know that he's testifying today and tomorrow in front of Congress. So JPZ.
He doesn't look good in that picture.
Honey.
I'm just saying. He looks
Honey,
like
shade.
Do you see what we got to do to your pictures for crying out loud? My pictures? I mean, we all got to work on these things.
He looks like really skinny and frail. I don't know.
Okay. All right. Well.
Looks weird.
He's not looking for a date.
I'm just saying. It's just kind of a bad picture.
The AAA rating of the World Bank and other top multilateral lenders would be at risk if President Trump slashes his country's support for them, according to credit rating agency Moody's. Moody's is warning that the U.S. is a key shareholder in a number of multilateral development banks. Hence, it would be credit negative if it materially reduced its commitment to them.
Well, lucky thing, we don't have any money at the World Bank.
Okay. This is going to be your attitude all day.
I just don't have any money at the World Bank. What do you want from me?
Oh, gosh darn day. All right, that's fine. Hey, I'm going to keep it moving. Let's talk commodities. Oil gained 2% yesterday, despite trade war concerns. After posting their 3rd straight week of losses, can oil turn it around?
Well, oil is up another 2% today, but, this oil's gotten murdered. So they brought it back a little bit. I don't think it has anything to do with trade war or anything else. I think it's just the fact that oil got a little oversold.
How about for you, Bat? What do you see?
Oil backed off for the last 3 weeks. It's had 2 or 3 days of up move. It's got a low IV rank of 17.
Yeah, that's no good. Any oil ETFs or any other oil adjacent products? No.
Not for me. No.
Okay.
No.
I was just curious. Hey, we keep hitting new highs in gold. Gold surged past 2,900 to a new record. Last week, I did report that Citi analysts are looking at that 3,000 print, and that's when gold, was around 2,800. But now, gold at 2,935. Gold up more than 1.6%. Where do we go from here?
I'm super bearish on gold. I'm not that sure.
No, Liz is a gold bull, and I like Liz better than I like you. So.
Okay. I am super bearish on gold here. I mean, personally, I think that it's so overbought, it's ridiculous. But I haven't gotten shorted yet,
Okay. I would like to see you lose money. Go ahead.
but I am super bearish on gold.
How about for you, Matt?
Gold Ivy rank hasn't been higher than it is today at 71. Last night it had a huge move higher. It was up around $25 or $30. It's actually down $20 right now to $29.14. It was $29.68 last night. Got a lot of emails about gold and its move higher.
You got to buy those dips.
I don't think so.
I'm super bearish.
Are you not going to do gold for your podcast today, Bat?
Oh, every Tuesday and Thursday. You are good. That's right. Option trades today. We'll see what comes up.
Or
I'm the world's worst commodity trader. I usually stay away from
Would you do
commodities.
something in like a GDXJ or any of the other gold like ETFs or miners?
I don't. Honestly, I have had a really hard time making money in any of those gold ETFs. I don't know if they're just
or GLD even
price to perfection, whatever.
They have relatively low monthly implied volatility for the.
I just don't do very. GDXJ, it's not liquid enough for me. GDX is kind of cheap. GLD, which I try really hard to make money in, I just don't make any money in there. I lose money. I don't know what the hell it is. I can't make any money in that stupid stock.
Okay.
So maybe it's because vol has gone straight up all year.
Sure, that's true.
And
yeah.
Because I haven't been short gold. I want to get short gold.
You're saying
here.
the vol expansion that's what's being frustrating
all
in that
year.
position.
The vol has never come in gold yet. It doesn't come into the upside.
Mm-hmm.
Vol comes into the downside. Like right now, gold down $20 there, whatever it is, we'll make money in gold.
Right.
But because vol gets crushed to the down moves. On the up moves, it hasn't worked, and gold's near its high. So I'm not short gold, but if I had my choice here, I would sell the crap out of gold rather than buy it. I don't like it here.
Okay. Hey, in other news, President Donald Trump says he's ordered the U.S. Mint to stop making pennies, which he says it does. It's true. It does cost more than 1 cent to produce. It costs around 2 cents, and it's very wasteful, he said in his post on Truth Social. But now there's a bigger problem, and that's the nickel, which costs even more. Should we just get rid of hard coins? So without the penny, the volume in nickels would have to rise to fill the gap. And then far from saving money, eliminating the penny shifts and amplifies the financial burden.
So what do they do if there's
that says American for Common Sense. Get it? They are a pro-penny group. I didn't even know we had pro-penny lobbyists. What a time to be alive, America.
But what do you do if everything gets rounded to a nickel, if there's no more pennies?
Right, yeah, and then you're going to have to produce more nickels, which that's not also cost effective.
So it's only something can only be penny if it's credit cards.
We're building the plane as it flies with all these. I don't know.
I got some pennies at home. Maybe I should stockpile them.
I don't know. Bat, are you in favor of getting rid of you seem like an old Italian guy, got all the change in his pockets,
we're going, this is only a matter of time. We're going to a cashless society, right? I mean, so this is just the first move.
For me, that's fine. You guys complain all the time about like your kids or I rarely carry cash. Like I don't carry cash. And
I want to see how they're going to work it out at casinos with cashless. You're going to scan your Apple Pay at the black.
No. You're going to have to scan your welfare card.
No, your ACH.
You're gonna scan your Apple Pay at the on the blackjack table. It's going to
pay with my watch.
Okay. All I'm saying is
I don't gamble.
That is not. I haven't figured out how that's going to work yet.
Sadloff, they're basically cards right now for the slot machines and stuff. So,
no. I know slot machines have cards, but I'm just curious how they're going to do it with.
So they'll just put a reader on the table.
So wait, here's something interesting. So according to the U.S. Mint, a penny costs 3.7 cents to make. That's 3 cents for production costs and 7 cents per coin for administrative and distribution costs. But a nickel, what? 7 cents. Sorry, I'm so sorry. But a nickel costs 13.8 cents. What are we doing? That doesn't make any sense. So it costs 11 cents just to make a nickel and then 2.8 cents of administrative and distribution costs.
Yeah, that makes no sense.
Or that literally makes no sense.
Yeah, so they can change. I mean, they can either change whatever they use.
So they tried to make fewer nickels last year. No, this whole thing is interesting. I don't know what's going to happen.
So in 1964,
Oh my God.
in 1964, they changed from silver in dimes and quarters, right?
Okay.
They used to make silver dimes and silver quarters
I have no idea. Okay.
up till 1964.
Okay.
And a copper penny.
A copper penny, but they put silver dimes, silver quarters
Okay.
till 1964. So what we would do as kids, because we finally figured out that we needed to find a way to make money, and we had like maybe $10 or $20 total to our names.
Yeah.
That's it. We'd
That's a lot in 1964. That's like $10,000.
Oh, this isn't 1964 because 1964 I would have been too young.
No, $20 in 1964.
So this is like late 60s, like
Okay.
67, 68, whatever. We were like 10, 11. We'd go from bank to bank with $20 and get just like as many.
$203 in today's money.
Okay, I'm just telling you.
Okay.
So $20. That's all I had was a $20 bill.
Which is $203 in today's money.
And I would go from bank to bank and just to see how many silver dimes and silver quarters we get each place. And then
You're still telling this story? Okay.
Yeah.
I saved those.
Uh-huh.
All that stuff I collected in the late 60s until 1979.
Then what happened in 1979, girl?
That's when the Hunt brothers tried to corner the silver market.
Oh, I thought you spent it on like
and
Donna
so-
Summer records.
So silver went from wherever it was, maybe
In the
like,
teens to like 30 or
well,
something?
no, it went to 50. It got up into the 50s.
Okay.
But I remember I had this whole drawer that I'd saved of quarters and dimes, and I had them from when I was like 10 years younger.
God, this story's still going. Uh-huh.
So I can tell you the story. So
God.
I'm away at college.
Banana.
Uh-huh.
So away at college.
Uh-huh.
And silver goes to $50.
Oh my God.
Right? Now I have all this stuff probably at like 10. So I remember calling my mom, collect, and saying, hey, you got to go in my drawer, in my room, and take all the silver coins and take them to a coin store
Right?
and sell them for whatever
Your poor mother.
whatever the weight is. on the
Right.
thing. So she went, she took all the coins, she got it. How much money do you think? Okay.
You got $35 more than you should have got.
No.
value.
I got the exact amount of money that I should have got, but how much money do you think after I did this?
How many pounds? How many?
I did this for like a year, going around like from bank to bank just to get a roll of nickels, a roll of quarters, whatever it is, and go through it for the silver.
$100.
What do you think I got total?
$125.
Oh no, it's better than that. I did a lot of work.
$1,000. I don't.
$1,000.
$1,000. All right, hold on. I'm gonna plug that in.
I got $1,000.
I got a better story for you. I got a better story, and it's a lot shorter. I used my coin collection to start trading. I sold it to start trading in 1981.
Oh, that's good. See, that is a better story. So $1,000 in 1964 is $10,180.
No, this is 1979.
Oh, 1979. My bad. So 46 years.
And that
ago.
was $5,000 more than I had in my trading account.
It's around
I started with $5,000.
$4,347. Hey, I gotta keep it moving. GameStop and MicroStrategy shares were in play yesterday after Ryan Cohen posted a photo with Michael Saylor. They went Instagram official. I have no idea what's happening. But GameStop was up more than 7%, and MicroStrategy, now known just Strategy, was up 4%. I don't know what's happening.
What is GameStop trading for now?
Well, it closed at $27 and change. It's trading right there right now.
Yeah, these guys are such grifters.
Okay.
They're just grifters.
All right. Well, what's Bitcoin doing this morning? We can't talk about that.
97,500, same price it was yesterday.
Oh, okay.
Unchanged.
I mean, it said down $700, but
it was up about $1,000 last night and unchanged now.
NVIDIA shares gained yesterday, leading all the other chip stocks higher. The surge helped lift the broader tech sector and the major U.S. indices after losing ground on Friday. NVIDIA shares were up close to 3%, getting closer to when their earnings are, I believe, February 26th.
Yeah,
You
it's
are
down,
correct.
down about $1 this morning.
Do you have an NVIDIA
But the market's
position?
a little bit weaker. Even the S&P down.
I
20.
do not have an NVIDIA position. I mean, I have one, but it's tiny.
How's the IV in
So
there,
you-
Bat?
So he lied to us. The IV is pretty good at 46, but like you just explained, you got earnings coming in 2 weeks.
Sure.
NVIDIA's been on a 5 or 6 day tear here, going from around 100 and I don't know, in the teens to 130 and change.
Are you doing anything in the other chip stocks or like SMH or anything SMCI or AMD?
SMH, no. AMD, yes.
Intel?
Intel, yes. Intel was up actually pretty good yesterday.
Nice.
So Intel were long, AMD were flattish, NVIDIA were flattish. What other chip stocks are there? I can't think right off the top of my head.
SMCI.
AMD can't get out of its own way.
Yeah.
Yeah, SMCI we do not have a position on. It was up
That's
big
for the
yesterday.
best. Yeah, it's been on a little run. Hey, French President Emmanuel Macron on Monday announced investment pledges to bolster France's AI sector, totaling 109 billion euros. They are right now in the middle of the Paris AI Summit. It also includes plans by a Canadian investment firm to invest 20 billion euros in AI projects in France. Sacre bleu. What? No? Okay. No?
I mean, I don't know what you want me to say.
No, hey, in other AI news, Bat tried to break this story to you during last call, but you didn't really care about it. So I'm going to try again. We'll see what happens. But a Musk-led investor group has offered $97 billion for OpenAI, to which Sam Altman had a hilarious reply. He was like, "Why would I take less money for you to come in and make this company worse?"
Exactly. But you know what's really funny about this? How do you...
This is a lowball offer.
Yeah, of course. But how do you make a hostile offer for a non-public company?
In a non-profit company. I mean, they are trying to be.
No, I understand.
for-profit,
But how do you make an offer for a company that's not public? Like you can't. They don't.
Well, you could buy a non-public
Oh,
company.
of course you
just
can buy. You can buy a non-public company, but
not hostile.
But how do you make a hostile offer? I mean, they don't have to. You know what I'm saying? It seems
I like Sam Alton's reply was even better. He goes, "I'll give you $9 billion for Twitter."
Oh yeah, he did.
So
He's like,
they
"I'll give you $9 billion for Twitter."
I missed that. That's great.
You're not on Twitter. He tweeted it.
That's great. I'll give you $9 billion for Twitter. That's good.
The two are locked in a legal battle. Elon Musk actually did have a hand in OpenAI, but he left the nonprofit in 2018, and now he and Sam Altman have been fighting over it.
Yeah, I think this is just this is just a contest to see.
In other OpenAI news, this is interesting though. OpenAI is pushing ahead with their plans to reduce their reliance on NVIDIA for its chip supply, and OpenAI is developing its first generation of in-house AI silicon. So that's something that's pretty impressive. You can't trade OpenAI, but you can trade Microsoft. Bat, what's Microsoft doing?
Ooh, good question. Mr. Softy, MSFT is trading at let's round up and say 411, down $1. It's been on the low end of its range. Good IB rank, well, not a good IB rank, 21.
Reddit is set to report their fourth quarter earnings after the market closes on Wednesday, but the stock has soared nearly sevenfold from its IPO price in 2024. What are you going to do in Reddit? It's tomorrow.
I have no position in Reddit. I haven't traded Reddit since we bought it and sold it.
Oh, wow. Okay.
So I held Reddit for 1 year, and I got out of all my stock in the 60s.
Bat, what's Reddit doing this morning?
Oh, you're just setting me up for failure here. $223. Hasn't had a downtick since 60.
It's the most amazing move I've ever seen. But I don't look at it. You know what? I don't care. Because I got it at 28, whatever. I'm happy.
All right. Well, you
Sure.
do then. Hey, in other news, this is fun. You might have seen the Super Bowl ad where T-Mobile is going to roll out Starlink access to all users, no matter what carrier you use, but it's causing some confusion. So this headline just says, no, the latest iOS update won't give Starlink access to your phone. People took to the internet because they were like, is this like the U2 album all over again? That this means like Elon can see my phone? No, sweetie, it doesn't mean Elon can see what's on your phone. Elon doesn't care what's on your phone. But you have to have iOS 18.3, and then you can join Starlink if you want to, which is cool if you're in like a remote area or whatever. T-Mobile is opening it up to people that also use AT&T and Verizon. But people were concerned because, again, it's hard when you're an entrepreneur, but you're also so politically, charged, that some people were like, great, I like the service, but they're like, I don't want anything to do with Elon Musk. You know what I'm saying? Like,
Yeah, I don't want anything to do with Elon Musk.
okay, but if you're stranded in the woods and you need to get out.
Stranded in the woods, I'm dead. I'm telling you right now, if I'm stranded in the woods, I am a dead man. There's no way out for me. If I'm on a hike and I'm stranded in the woods, I'm dead.
Yeah.
I'm dead. I'm just dead.
Actually, if he's stranded in the woods, he's already dead because we put him there dead. Okay.
Yeah,
He's not going there
I've
alive.
done plenty of hikes. Last year, my hiking.
Plenty of hikes, sweetie. You do one hike a year. You go in Door
You
County.
go for a casual stroll, for crying out loud.
Right, you
for
go
an
in Door
hour.
County, and then after that hike, you eat a fish boil. So you do
And a pie.
One hike a year is not plenty of hikes.
I've been on plenty of hikes in my lifetime.
Okay,
I have been a little bit lost a couple times, but that's never happened. But last year, I did a really tough hike around the lake, whatever the hell that was. That was
At Peninsula State Park.
that was really hard.
Okay, it was.
And I'm never doing that again.
Sure. I saw a toddler do that hike in Crocs.
That almost-
wearing a tutu.
That hike last year almost killed me.
Without his diaper.
Here's something interesting.
Literally almost killed me.
Researchers from Microsoft and Carnegie Mellon University warn the more you use AI, the more your cognitive abilities deteriorate.
Yeah, but I don't know anybody that uses AI for anything. That's the problem.
We use AI here. Dr. Data and his
Really?
team
Do we use
work-
AI here? We already
Yes.
shut down our AI platform.
We use AI here.
Really? Where do we use AI for? I'd love you to tell me.
Why are you so salty today?
I'm just telling you that like the idea that we're all using AI.
I literally got, I don't want to blow up your spot here, but I'll put it up on the board. Beth, can you pull up the email we got from IG internally about how we all have access to Claude now?
Yeah, you have access to Claude if you want to ask a question about IG support in Europe. I mean, I'm just saying.
But so is that us not having access to AI? Pick a position, man.
What I'm trying to tell you is there's no chance that like in your daily work here, you're using AI.
I do use AI sometimes here.
Oh my God. Oh my God.
I was gonna keep it going. Rivian is opening up commercial van sales to all fleet sizes.
Thank God.
What is wrong with you? More than a year after ending its exclusive deal with shareholder Amazon, Rivian, known for its R1S SUV and R1T pickup trucks, has seen demand beyond Amazon for its commercial vans, and they've been testing them with large fleets. What are you doing in Rivian?
I'm long it.
Okay.
Small, long
Trading
Rivian.
just under $13, going sideways for what seems like eternity.
Right. We're short some 12 puts.
Lyft is eyeing a robo-taxi launch in 2026. Lyft is working with Mobileye and Japanese conglomerate Marubeni to manage the fleet. They will be robo-taxis using self-driving technology. They will launch in Dallas as soon as 2026.
If I was Lyft, I would be all over this robo-taxi stuff because I don't know how they're going to stay in business.
You don't think it's too late to get, like, they're not even going to have their first car on the road till 2026. Like, Waymo's already, like, light years ahead. I'm just saying. Like,
I don't think it's too late because I think the taxi business. I don't think it's too late.
Okay.
Because
That's
I
good,
think
enough because you'll get a chance to trade Lyft today if you want to for earnings. It has earnings after the close. IV rank of 82 is pretty good, trading around $15. It's been up around $2 this week.
we have a position already in Lyft. We're slightly long, but it's not really an earnings trade, so I got to look at it today.
Okay. What about how's your Uber?
Actually, Uber's been tough the last couple of days. The stock is
Because of Bill Ackman.
Yeah, Ackman. I mean, the stock was down after earnings. It got down to about 64, 65. And we were a little bit long it, so we adjusted, rolled down some calls, and now the stock's like 80. I mean, it's just ever since Ackman came out. But here's the thing. I love Uber.
I know you do.
But
But you hate Bill Ackman.
I do hate Ackman. I think he's a complete idiot.
What do you do?
And
when your nemesis takes
not my nemesis. I just think he's an
kind
idiot.
of your nemesis.
No, not at all.
I mean, he looks better than you.
He doesn't look good. He looks like a typical, like, I don't want to say. But anyway, Uber at 65 or 60, wherever it was, I really liked it. At 80, it's a lot less attractive because, again, I'm not sure how Uber is going to compete.
Sure.
Unless they change their model. You know, I mean, once you've been in the Waymo and stuff, you're starting to think, you know.
But Waymo is only sort of allowable in certain major metropolitan areas. But Uber is available everywhere. Like that's still like bread and butter.
Yeah, when I was in Vegas, we Ubered everywhere.
Sure.
I didn't take one cab, just Uber.
Hey, McDonald's reported their earnings yesterday, and their sales kind of took a dive because they had the whole, E. coli outbreak.
But their stock was up huge.
Well, their sales took a dive then.
Oh, okay.
Stock was up. Well, Angel Reese has become the first female athlete with a McDonald's meal special. It launched yesterday. It has the Angel Reese barbecue bacon quarter pounder with a new special barbecue sauce that is spicy. Ooh, like a spicy barbecue sauce.
I like that.
And a Hi-C.
Maybe you'll be going to McDonald's.
Oh,
yeah, it is smoky, spicy sauce, also with a Hi-C orange lava burst or drink of your choice. It comes with cheese, bacon, onions, pickle, and that spicy sauce.
That sounds pretty good.
When's the last time you had a quarter pounder?
I couldn't even remotely tell you. I don't think I've had a quarter pounder with cheese for 20 years.
You know, in France, it's called
are you a quarter
pounder?
Are you a quarter pounder with cheese, or are you a double burger with cheese?
Oh, that's a good question. I think if either the same size.
Well, because they have the metric system. They don't know what a quarter pound is. It's a Royale with cheese.
Pretty close.
Royale with cheese.
I'm a double cheeseburger. Gotta go that way.
I would probably go double cheeseburger, I guess, if that was my choice. But I don't know that I've ordered anything from McDonald's. The last time I went to McDonald's, actually, I'll tell you, we were at the headquarters here, and we went there to try the international McDonald's food.
When was that?
When we were in our old office.
Where was I?
Somebody took us there it was a social visit. We were like doing a social media thing.
It was a social experiment to see if they can interact with regular people.
Did you hallucinate this?
Oh, weren't you there, Tony?
Why is there not video footage of this if it was a social?
No, I remember it.
Yeah, Beth, we went to the McDonald's international headquarters.
Yes.
And we ordered all the international food.
It wasn't
Where's
a bit.
the
No, I don't
video?
get to go to international McDonald's. I don't get to go to Europe. I don't get to go to Brazil. I don't get to go
There's a big difference between international
Tokyo.
McDonald's headquarters and going to Europe.
Hey, just real
That'd be a
fast,
good start.
BetMGM and DraftKings scored the most successful Super Bowl in history as football bettors' winning streak came to an end. Sportsbooks were really looking for those fly Eagles to fly, and they wanted an Eagles win, and they got it, ending one of the most customer-friendly NFL seasons to date. The party's over for NFL bettors. MGM, DraftKings, and Flutter all coming out on top. I don't know if you're trading DraftKings or MGM at all.
I do not have any position, but the weirdest thing was when I was walking through the casino, because it was an MGM property.
Yes.
What they're trying to do was just, if you would sign up and download the MGM app, they would give you a $200 bet on the Super Bowl for free.
Wow. Did you do it?
No.
Why?
Because I didn't want the app.
Why do you hate free money?
I don't want the app.
Okay. All right.
But $200, Tony, $200 to download the MGM app when you're there.
Not too shabby.
No, it was a very fair offer. I just didn't want to
So
do it.
you want a microchip implanted in your arm, but you don't want the MGM app? That's where you draw the line?
reason I don't want the MGM app is not because
you make no sense.
I'm telling you why. Because I don't want to sit there because I have an addictive personality for that kind of stuff and start betting on every single point game. You know, I don't.
See, that's very good that you know that about yourself. Then.
Right. I don't want to sit there and just be tied to my MGM app and just sit there and go nuts for every single game. I'm done.
Hey, I've gone over time here.
Sadnov, that's a good offer by MGM, but it's nothing like the $500 you can get for bringing an account to Tasty Trade that's between $25,000 and $100,000. Or you can get up to $5,000, Sadnov, if you got $1 million.
Hey, finally today for my viral video of the day. This is kind of just very inside baseball, but I mean, it's still a humorous video. But one of our coworkers, Tracy, she sent this to me because the guy in this video bears an uncanny resemblance to our producer, John. Do you believe in doppelgangers?
Yes.
I mean, okay, look at this dude. Tell me this is not John McGloin. Watch this.
Oh my God.
I think that is John.
This is so good.
Oh my God.
I think that was John.
Awesome. John can cut a rug.
Right?
Yeah.
Wow.
That's impressive.
I feel bad for your doppelganger. Anyway. Hey, that's my time today. Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live immediately following these messages.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I mean, I watched an hour and a half of TikTok, and that was enough for me. Skinny waist, what is it? Skinny waist, pretty face.
Yeah.
I finished that song.
Yeah, that's Meg the Stallion. It's not safe for morning television.
Skinny waist,
Body yada
face,
yada
face,
yada
face, blah,
yada
blah,
yada
blah.
yada. Body yada 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 yada. Yes, Tom, you have.
I got it down to a science, Beth.
Yes.
I'm practically a TikToker. Skinny waist, pretty face, big bang, boom.
I didn't even know TikTok had music.
Yeah. I mean,
here you are, this big-time brokerage CEO, media mogul, TV star. You're a full-on celebrity, and you're running around singing TikTok music like a 16-year-old girl.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
I found very early on that I was comfortable with having risk, and I liked the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York when I was a young kid. I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader. People are always asking, where can they find my podcast? There it is, son. Look at that, Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow, Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. If you didn't know that, I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 82,
83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market, Sadenoff, because we're running a little bit late. Even the S&P's down 26, trading near the lows of the day. They were weak all night, down around in the teens, somewhere between 10 and 15 or so. They're down 27 right now, making new lows. NASDAQ down 159, Russell down 19, and the Dow down 125. Volatility up 13 cents, up to just under $17. Bonds down 19 ticks, made a new low here to 114.22 this morning. They're about 3 ticks higher than that right now. Bitcoin hanging out at 97,000, getting a little bit softer. Oil up $1 and change, which is just off its highs that it made the last couple of days right here, about 30 cents higher than where it is right now. Gold down 10, doesn't tell you the whole story there. Big move in gold higher last night, trading over 2,900, 2,907. 2,968. It got as low as 2,907. It's sitting at 2,923. And for earnings, you had SHOP. It's been all over the place. Let me take a look at it right now.
It's up now, actually.
Yep, it is. It's up $3, almost $4.
Yeah, that's where I saw it earlier today. That's a weird, big move, pre-market. All right, anyway, let's go. We're running late. Confirm and send emails that came into us overnight. How much money do you think someone needs in order to get started trading? Is there a minimum?
Well, I can tell you there's no maximum. I don't know if there's a minimum. Obviously, there's no minimum to open, move, transfer your account. You don't even have to bring cash. You could just keep it in kind when you transfer it. But to start trading options, I mean, if I could have my wishes, it would be an over $25,000 account, just so you don't have patent day trading rules or anything else like that. That would be my wish for everyone.
Yeah, I mean, if you want to get your feet wet and just start, you can start with any amount. You know, the minimum for a margin account is $2,000. That's not a tasty rule. That's That's a regulatory rule. So let's just say the absolute minimum is $2,000 because you can't really do much in a cash account. So $2,000 would be the minimum. But like Tony, and so if you want to start with 2,000, 5,000, 10,000, 15, whatever, 20, it's all cool. If you really want to trade more actively and be able to get in and out of stuff, you need over 25,000. Average account size is around 50. So that should give you some idea. 25 to 50 is a decent number to get started with. But 2,000, if you just want to get your feet wet, learn the software or whatever, that's totally fine. Let's go to the next slide. I am short a deep in the money straddle in XYZ, and they have an upcoming dividend. What do I need to know with respect to the dividend and how it will impact my position?
Well, XYZ is a real stock now, so you can't use that moniker now. I think you might have to go to ABC or make something else up.
Yeah, I hate the fact. I absolutely hate the fact that they gave them the acronym XYZ.
Yeah, it's block.
Yeah, this
now,
is not.
XYZ.
The person that wrote this is not trading XYZ.
I know that. Yeah. I'm just teasing. So you have a short, deep in the money straddle. So that means from that, I don't know, because it's short, deep in the money straddle could be a put. Your put could be in the money, or your call could be in the money.
In this case, they're short a deep in the money straddle, and the call is deep in the money.
Yeah, so it's really not a straddle. A straddle is at the money. So, but I understand what you're trying to say here. Both your short strikes are the same, and they're in the money, and we're going to assume it, like you just said, it's the call side. So
yeah, I can explain it better. The stock, they're short the 100 straddle, and the stock is 120, and the 100 puts have no premium.
Yeah, then you're probably at dividend risk here. Remember something, whatever the put, I know we're talking about the short call right now, but just a back of the envelope, quick little trader hack here to find out if you have any dividend risk is to look at the corresponding put. If the put price is higher than the dividend, let's just assume the dividend's 80 cents and the put is trading for 90 cents or $1, then you have no dividend risk, no matter how deep in the money your call might be. If, again, the dividend is 80 cents and that put, like Tom just said, is basically trading for 0 or 10, 15, 20 cents, then you are at risk of being assigned and having to pay the dividend.
What's important to know here is if you're short a deep in the money straddle like that, like the stock's trading 120, you're short the 100 calls, and the 100 puts have no value, you're going to be assigned. But here's the thing. It's not going to change your risk at all, just so you know. Like your risk is going to be the same. It's going to change your capital that you're going to have to put up. It's also going to be you're going to lose the dividend. So what you want to do in this case is you either want to close the position. You can close the position. B, you can roll the position to the next month if you want to keep it on. Or C, you can adjust the strikes. Those are your three choices. Close the position, because you don't really want to get assigned. You don't really want to deal with the dividend or anything like that. A, close the position.
That's not why you put that position on.
Yeah. So A, close the position. B, roll the position to the next month. C, recenter the strikes. Let's go to the next slide. When you enter a strangle, do you always sell the strikes with equal delta on each side? Do you ever sell equal amounts of premium instead?
When you sell strangle, do you always sell the strikes with equal delta? Not always, but typically, yeah, I'll look for a delta neutral strangle, which will put me further away on one side or the other. But there are times, and again, it would have to come down to your directional bias, that you can sell the same amount of premium on each side, which would make you long or a little bit long or a little bit short delta on that strangle when you placed it, because there'll be skew. I'm assuming there's skew in the product.
Yeah. So I actually do sell equal amounts of premium most of the time. I don't use the delta as much as I use premium. It's just a matter of preference, by the way. It's not like one's better than the other. It really is just a preference thing. So don't overthink this. If you want to use delta, use delta. If you want to use the amount of premium, use the amount of premium. It doesn't matter. Okay, let's go next slide. Do whatever you want. I use premium mostly. I know you guys talk about using 5% of your net lick for undefined risk trades. Do you base that 5% on your net lick at the beginning of the year and keep the same throughout the year? Or do you change your position size as your account size changes during the year?
No, we would look to change it up or down depending on how things are going. I mean, to be completely frank, I mean, I don't go through it with a fine-tooth comb like this, but I know I'm wrapped around that number from the beginning of the year to the end of the year.
Yeah, I'm going to agree with Tony. We don't like, we're not tied to some, like if our position size, let's just say, is 5 contracts, we're not going to tweak it that much based on our net lick moving up or down, a few $1,000s or a few tens of $1,000s. We're going to be a little more, consistent, and we're going to keep the same size. But it's dynamic. It's always based on currently where our account is. It's not based on what we started at the beginning of the year. But so we'll dynamically move that. But we don't change our size very often.
Yep.
Let's go next slide. If I'm trading only naked puts, is maintaining 0.3% theta to net lick ratio still considered safe?
Still considered safe. I mean, I hate the word safe, but because you never. I mean, I don't define what safe is, but yeah, sure, you're in the range. I have no problem with that.
It depends on your account. I wrote back to this person and said,
of course, right.
I wrote back to this person and said, it depends on your account size. If you have an average or a small account, 0.3 is fine. If you have a very large account, 0.3 is a little high for just selling puts, because if your single strategy is very correlated, meaning you're going to have long deltas and you're going to have single strategy risk. There's a bunch of things here which I don't love, but if that's obviously been working because the market's at record highs. So 0.3%, sure. You're on the upper end. If it's a small account, you're fine. If it's a larger account, it might be a little high. But I like a little more diversification strategy, but still, you're fine. You're at the top end of the range. Let's go to the last slide. I have an iron condor on in crude oil, and I collected $3 17 days ago. I can take it off now for an 80-cent profit, or just under 30%, but it's still at 35 DTE. I just watched the 2021 best practice episode where we gave guidelines for managing early straddle, strangle, short puts, and calls. You had a chart for percent of max profit versus average days held. Is the management the same for defined risk positions as it is for undefined risk?
Yeah, I mean, we're still looking for the same 50% credit as the optimal and home run, even if you want to go that far in 17 days. These strategies typically work within 3 weeks, which is around the 21 days, if they're going to work, where you're going to reach somewhere close to that 50%. 30% on an iron condor in 17 days, I'm probably running like a thief in the night. Now, I would take a look at what the IV rank is in the product I'm trading. And we talked about oil earlier, and it's in the teens. That would be another reason for me to close the trade. So I would be looking to close this trade and not sit and wait for the 50%, just because the IV rank is relatively low.
I agree with Pat. I would base this on a couple different factors. I mean, first of all, 30% in 17 days is pretty good. 80 cents on a $3 credit is great. The other thing is IV rank is so low in there, this would be a no-brainer for me. An iron condor, is looking for volatility contraction. You got it. The IV rank's in the single digits. You take it off.
Very good, sir. Hey, listen, you ready? Let's take a quick 90-second break and come back. We got more Tasty Live immediately following these messages. We'll be back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And tastylive in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
If you missed the live show, here's our cherry on top weekly recap.
I went to the pool at the.
You went to the pool at the Soho House?
Yeah.
And you didn't go to my pool?
Yeah.
Do you think he wore his Crocs?
100%.
100%.
You can't.
100%.
You wear your jorts? You wear your booty jorts with like your ass hangs out just a little bit in the back? I'll gross myself out.
I just threw up in the back of my mouth a little bit.
Daisy Dukes in like a crop top with Crocs. Meow.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped down before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on?
Enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
It's options. Jive. Tomas, it is time for an option jive. Go. Even the S&P is down 25.
Yeah, it's running kind of late, so we got to move on here. Let's take a look. The good and the bad of bullish credit. Let's see what that means. So over the past 20 years, 54% of the trading days have seen the SPY close higher than the day before with an average annual gain of 9.2%. Over the long term, the bulls have done well. really well. For premium sellers who choose to accept risk in exchange for high probability of profit, being bullish means selling puts some way. How have traders who have persistently sold out of the money puts, either naked or credit spreads, fared in the long term? And what sort of downsides have they had to endure in the short term? Well, they've obviously fared pretty damn good in the long term. The question is, on the downside, I don't know. Let's go next slide. So 15 years of data, we sold out of the money puts, either naked or vertical spreads. 45 days to expiration, closed all the positions at 21 days, 50%, or left them go. And we examined the long-term net profits as well as the worst-case drawdowns for both the average trader who started at a random time and the unlikely trader who started at the worst 5% of all times. That's the CVAR. All right, let's see it, Beth. First slide. Da-da-da-da. We don't sell a lot of 50 delta puts this is for people that just want to get flat out long, okay? If you sell a 50 delta put, which is the at the money put, with a 50% profit target over the last essentially 2 decades, you end up with $115 in profits. If you close at 21 DTE, $75 in profits, you held through expiration, $149. It's a beautiful world. So why wouldn't everybody do that all the time, forever? Because it worked. And the answer is because sometimes the max drawdowns can scare you. Held through expiration, the max drawdown on a one lot, $9,280. $3,000.
Yeah, a lot of people aren't sitting for that, right? And this is just putting the position on and holding it, right?
That was the 9,000. But at 50% targets, its max drawdown is 2,000, and at 21 days is 3,300. And the worst 5% of all cases, the numbers are pretty big. So that's what keeps people awake at night. Let's go to the next slide. So if we go to the 30 delta, which is more along the lines of what we do, the numbers don't change that dramatically. This is the interesting thing about this study, is the 50% target, it's $89. The 21 days is $58, and the held through expiration is $88. Everything's kind of the same. The max drawdowns are less, 1,423 and 8,300, but 8,300 is still pretty big. So the worst ugly moves are still ugly, and the drawdown, the CVAR drawdown, which is the worst 5% of all cases, is still pretty damn ugly. So just when you think, oh man, all I got to do is sell puts. Yeah, but your timing has to be pretty good, because the reason that the 50% target's only $89 is because there's a lot of losses built into that too.
Sure.
Let's go to the next slide. And the next slide is when you sell a put vertical, like a 2040 put vertical, which is fine. So you collect a little bit of money, but the 50% profit targets make $27. The close of 21 days makes $16. Held through expiration makes $43. But again, on a relative basis, okay, the $20 wide vertical, close at 21 days, which is kind of where we're at most of the time. You're talking about, you can lose $1,300. The most you can lose if you hold to expiration, because it's defined risk, $1,300 too. But in all these cases, remember, you're making $16 a trade over the course of 15 years, and your drawdowns are big. But that $16 includes those drawdowns. But I guess my point in the end is, it may feel like you're taking a lot of risks to make a little bit of money. It paid off. It paid off in all these cases being bullish, but it wasn't easy. Is our point.
So how do you read these slides? How do you read this whole thing? I mean, I know the takeaways you're going to get to them right now.
The takeaway is that it paid to be bullish, but it wasn't easy. I think that's
pays
the takeaway.
to be bullish at all-time highs.
It pays to be bullish, except nothing's easy. And I think that's my takeaway. Let's see what the team wrote. Next slide, please. So rich puts at a bullish market emit profits for put sellers over the long term, provided they have enough capital to survive when things don't go their way. That's right, because there are definitely times when things do not go their way. Closing trades early helped limit the size of the individual risks, while managing winners helped to avoid taking several losses in a row. Either technique was effective for limiting drawdowns on naked short puts. The long wings of the defined risk trade, however, already limited downside exposure, making managing trades less vital. And there is no way to be sure if the immediate future will be good. Both proper mechanics and sizing, you can set yourself up to eventually reach the long term. You know, my takeaway from this is exactly what I said. We've been in a bullish market. Selling puts worked, but there are some nasty drawdowns, and you just got to deal with them if that's your approach.
As in anything that has risk. Good job. Let's take a quick 90-second break and come back. We got more Tasty Live with the opening bell coming up next. I'll be back in 90 seconds. Let's Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Tomas, we are back, my friend. You know what? The opening bell is imminent in about a minute or less. The E-mini S&P's hanging right here, down 24 and change. We haven't had too much movement throughout the morning, although we had a little bit of movement from last night. Gold had the biggest reversal after being up to 29.68. It's down to 29.24. That's your biggest mover so far. We'll see where shop opens this morning. It too has been all over the place. It's back up, Sadnov. It's up around $3, $2.50 to $3 right now.
trading 122.
Yeah, I would be.
and a half.
My experience in shop is I might be a little careful in there on the opening because their markets tend to be kind of wide.
As are a lot of stocks when they first open on the opening bell. Markets that are typically, penny or 2-3 wide, they might be 20-30 cents wide, for a minute or two until they kind of tighten up there. But
Yeah.
shop can have wider markets too.
I mean, I put some.
Apple's up this morning on a good partnership with Baba. Baba's up $2 also.
Nice. You know what stock's down again? It's been down like 10 days in a row. It feels like it's Tesla.
It does feel like it's 10 days in a row. It's not quite 10 days in a row, but it is lower again today by $5 and change. IV rank of 38. Tesla has fallen from its highs. I don't know. Let's just call it 470 or so down to around 340. Really, without a little bit of an uptick. If you want to go a little bit close to that, 425 to 344, where it is right now. Tesla taking it on the chin.
Yeah, it's interesting. Baba's up a little bit, but Baidu's down $5 today.
Baba had a good, my Taiwanese sources told me Baba has a partnership with Apple to put ChatGPT in Chinese phones. Apple up about $1.80 and change, and Baba was just up $2. It's only up 50 cents right now. Even the S&P is up 19.
I am looking around right now, and let's take a look. Did they open Shopify yet?
Let's take a look.
Yeah, it looks like they.
If the options are green and red, then they are open. If they are white, then they are not open. My Taiwanese sources also want to remind you that Jay Powell talks today, Sadnoff, in about 30 minutes. Top of the hour. Volatility up.
Love a little Jay Powell talk.
Volatility up small, about 5 cents.
We did a 1-by-3 ratio spread in
shop.
We did a 1-by-3 I think that's actually going to be a pretty good one.
Of course it will, because the bat gave you that one.
No, you didn't. The bat hated it.
I had 1-by-2 for a larger credit. Would have made more money, but sure.
So if I did it for a credit,
and you buy it back for a credit, that's a good thing. If you buy it back for a debit, well, if it's less than the credit you paid, then you made money. So right now it looks like it's basically unchanged. With the stock up $4.
No,
you bought it back for a 30-cent credit. You're good. You made 45 cents on the overall trade.
Yeah, 45 cents. That's pretty good.
Yeah, for a guy like you, oh my God, that's a winning trade. I mean,
45 cents the hard way.
45 cents the hard way. Yes, sir.
All right.
Stick with me, kid. Stick with me.
Now I got a bunch of other positions on in this Shopify that I'm going to want to get out of, but I can't figure out what I have on. So it looks like I'm delta neutral, so I'll just leave it. All right, looking at some stocks. You know what stock has really got me not happy? Palantir was a very challenging. It's a very challenging underlying. It's a stock that
up another $2 today, or $1.70 and change right now. New highs for Palantir. Hasn't had a downtick since since it was $50.
It has not had a downtick. Taking a look at a bunch of other stocks just to see if there's anything kind of in the crazy wild out here that's messing me up today. And I'm going to say that other than Baidu, which is down a lot, we don't have any other problem children.
Baidu's down a lot? Yeah, down $4.70. That's a big, almost 5% move in Baidu. You are correct.
Yeah, we have
89 and change. Baidu has earnings coming on the 18th. It looks like so about a week.
Yeah, we have.
Quiet day even the S&P's volume wise yesterday. Even the S&P's down 18 right now with Jay Powell speaking at the top of the hour.
Yeah, I have very small positions. I feel like my positions are very small. One position that, well, I probably have to adjust is Boeing. You know, Boeing's one of these stocks that every day when it opens somewhere, like you're like, you know, it's down $2, up $2, and you're always thinking, I got to adjust my Boeing. And 3 hours later, it's going the exact opposite way. Like Boeing is a stock that loves to mix it up intraday.
Yeah, it's a tough one to trade. IB rank of 14 also. It's kind of low, relatively low.
Yeah. And then the other stock that I find next to impossible to trade, but I trade it anyway because I'm just
because you're gifted.
Because I'm a glutton for punishment, is AVGO.
Yeah, AVGO seems to have your number, although it is down 4 today. AVGO been on a little bit of a rally after getting hit from around $240 down to around $190 or so, back up to $230, down $4 and change right now today. Good IB rank of 66, and earnings coming in March 6th. Even the S&P is down 16.
Yeah, I don't make anything yet of this S&P move this morning, you know, and I'm sitting here watching bonds. We opened some positions up in bonds this morning. Other than that, just looking at my positions.
Everything's copacetic, kind of in a holding pattern here with even the S&P is trading by appointment. It looks like I'm looking at the futures are hardly flashing.
I mean, doesn't it look like that? I mean, they're moving, but it's not, you know.
Doesn't seem like there's panic in the streets one way or the other right now. It's like that holding pattern. We're circling the airport right now, Sadnov.
There is definitely no panic in the streets. Definitely no panic in the streets. All right. Anything else to do here?
No, sir. Let's take a quick 90-second break. We can do that. We can bring Chris Vecchio in the house. We can also talk about, whatever Chris wants to talk about. We'll do that on Let Me Explain next. We'll be back in 90 seconds.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
I got Joe. Joe in Houston, what's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so just, I really appreciate you guys. And I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with this man. Let me explain with Chris. How are you, my friend?
I am doing well. I am getting ready for some snow in New York. How do you guys prepare for snow? Are you guys salters ahead of time? Do you shovel in the morning?
Oh, yes, we're salters ahead of time. What are you?
Preppers.
What are you? What do you think we are?
Do you know us?
We're pre-salters?
Listen, my Taiwanese sources say ask Tom about his pre-salting technique.
Oh my God! I'll tell you what my snow move is. I make sure my guy's going to be there to clean off my.
Honey, do you know where the shovel is? Is basically what he says to her. Make sure you have the shovel where you need it, babe. He doesn't do anything.
You're strong like bull. Get out there and shovel.
That's it. You come from good stock. I'm fragile.
Yeah, I'm fragile. No, I got my car wash guys clean my shovel in front of my house. They're great.
That was my first real job. The plows in our neighborhood wouldn't actually do people's walkways, and they would pile up all the snow in front of people's garage doors. Mm-hmm. So we would just walk around. Me and two buddies would walk around and follow the plows and then knock on people's doors and say, like, hey, we'll clean this up for you. And so we'd, in snow delays and days off, we'd make like $10 a walkway, go out there for a few hours, make a few $100. It was good work. So I see snow as like money falling from the sky. But these lazy kids these days, they don't shovel.
You can't even get your own kids to shovel. I guarantee his 15-year-old's never even picked up a shovel in his life.
Not true. Not true. He has. He does it all the time, and he likes to use my snowblower now. So he'll go around and snowblow. But in the suburbs, everybody's got a service. You can't. It's not like growing up in the city where you could do that. It's the suburbs. They come in the middle of the night. You're all done. I don't live in the city.
Do you have a Bobcat, Tony?
I do not have a Bobcat. I don't live in the rural area of Illinois, but I do live in a gated community that only allows certain plows in.
I live in the city, Chris, and my neighbor owned a couple doors down from me had a machine supply rental company or something. So he had Bobcats. So he had a Bobcat in his garage, and he would plow the neighborhood sidewalks, which in the city of Chicago is amazing. But then the bastard moved. And I just
left you guys all high and dry.
I finally trained the guy how to do it perfectly, and then he moved. You know,
how dare he?
You trained him.
Oh yeah. So but the hardest thing in Chicago that I think people don't realize, Chicago's a little like, it's built on an alley system, so it's more like Brooklyn or something. So it's all alleys.
Mm-hmm.
So everybody has an alley behind their house, and the problem in Chicago is not the shoveling in front of your house. It's when is the city going to shovel your alley?
Yeah, they don't go down the alleys.
They don't like shoveling alleys. Anyway, what do you got for us today?
Do you know why? Well, before we go there, do you know why New York has alleys as opposed to a significant, like, actual legitimate system? There were these two guys, DeWitt and Randall, who were tasked with outlining the grid layout of Manhattan, and they were given a year to do the project. And they basically sat around and drank for 11 months on the taxpayer's dime. And then in a few weeks, they're like, take out the fucking ruler, and just drew a bunch of grids and didn't even think to account for trash. So New York doesn't have alleys because some drunk 20-year-olds came up with Manhattan's grid system that we still use to this day.
Unbelievable.
Wow. I didn't know that. So they were slackers even back then.
Yeah. Yeah. Where was Doge back then? 11 months on the taxpayer's dime?
That's the worst part about New York, that the second you get in New York City, you realize, why is all the garbage out here?
Yeah.
Because that's the first thing you notice is like, why is all the garbage on the street?
Yeah, there's a certain joie de vivre, a je ne sais quoi to the air, and it's the trash.
Mm-hmm. Yeah.
That's why in Chicago we don't have that, which is nice.
That's true, but, what can we do? New York's New York. It's always going to be that way. But let's talk about earnings here, because we're done, or at least most way through earnings season. 62% of companies have actually reported. 77% of those companies have reported a positive EPS surprise, and 63% have reported a positive revenue surprise, according to FactSet here. The blended earnings growth rate is 16.4%. It's the highest year-over-year earnings growth rate we've seen since Q4. But in terms of how the market's been rewarding or punishing companies that are doing well, I think that's the important stat we care about. They are rewarding positive surprises less than normal. To date, the market's rewarding positive EPS surprises by less than usual, an increase of 0.3% for the 2 days before earnings through the 2 days after. This is below the 5-year average price increase of 1% during that same window. Whereas on the other hand, the negative surprises have been seeing a 2.4% decrease in the 2 days before and after. That's a little bit weaker than the 5-year average of a minus 2.3%. So when we've seen this in the past, this is kind of the behavior that the market exhibits when you're coming into I would say, near-term top. If only because it's a market that has very, very high expectations, and even when we do those great things, it's just a pat on the head. It's not necessarily pushing us up to new highs right now. It's one of the small sentiment signs on the roadmap to seeing us perhaps a near-term setback, if you will, that suggests traders should be lightening up here. On the long delta side, obviously equity markets are a little bit lower today, but generally speaking, earnings have been good. Companies have not been rewarded. I guess my question here is, have you guys found anything particularly frustrating this earnings season? Or has this been an earnings season that more or less met your own expectations, produced the results that you guys hoped for?
I mean, I can speak for myself. I think this earnings season has been pretty mellow in the sense that
pretty tame, right?
Yeah, pretty tame. I can't think of a situation. I can't even remember right now. What did we get burnt in? Was there anything?
No, not really.
There was one upside. There was one upside move. I can't.
Earnings have really been pretty much a non-event for us. I mean, they've worked out well. We've stayed small. We haven't gone crazy.
In general, I have stayed small. I've been a little bit more directional. It's kind of worked out, and we haven't done. I don't think we've done anything crazy on either side. I think we lost once on an up move, and I think we've been pretty successful otherwise. A lot of small wins, a lot of singles.
Yeah, you have stayed relatively small. You have taken a little bit more directional risk too.
Yeah. That's all I can say. I've traded almost every major stock, like anything that's really liquid and big, I've traded.
What's been the most surprising thing this earnings season for you, Tony? Has anything stood out in particular about markets perhaps saying so tame and within the expected moves?
Nah, volatility's been hanging in there kind of on the lower side. I know it's $17 overall in the market. Earnings have been pretty much a non-event. It's really been status quo. I mean, more chatter from tweets has made more movement in the market than anything earnings related, I believe.
It certainly feels that way. Within the earnings reports this year, we've seen that the S&P 500 companies have been talking about tariffs more than they have since the second quarter of 2019. 146 different companies have cited the term tariff or tariffs during their fourth quarter earnings call. What companies are talking about tariffs and potentially being something that could be materially negative for their business? Those companies in the material sectors, 82% of companies in the material sectors are doing that, and 80% of companies in the utility sector have cited tariff or tariffs on their earnings call for Q4 here. Nucor just put out a release actually saying that as a result of the tariffs that are being slapped on steel and aluminum, they need to rework the cost of all their existing contracts for rebar, for steel rebar, if you will, for construction. That letter went out this morning here. So this is, we talk about earnings being good in the rearview mirror, but there's now these new risks that are starting to crop up right now in the short term. I struggle here with, though, and this is something, Tom, perhaps you could speak to. There's a lot of negative news flow, or at least news flow that seems like it would be very disruptive to the markets in the world at which we know them in front of us right now. Yet these risks aren't necessarily materializing in a significantly negative way for a variety of asset prices. So how do you separate the noise from the signal here, the signal from the noise, the wheat from the chaff? How do you know what to ignore and when to pay attention?
There is one of the things that this market's become, the market, it has this learned behavior. So it learns, right? The market's always learning. And the market has learned, how to discount the noise. It depends on who's making the noise. So the market has learned how to, Trump, because it's the nature of who he is, he creates more noise than anybody else ever. That's his thing. He's a noise creator. So the market's learned to discount that. If it was somebody else who was president, the market might not discount the same way. But for Trump, they've learned how to discount the noise. So I think that, from a market perspective, they realize that it's, it just doesn't play that big a role. And I think that's what you're seeing, which to me actually makes the most sense, because the market should discount the noise. Like, we've been discounting the noise forever, like literally forever. Like, since the day we started Tasty, there was a whole thing about, no news. I don't care.
Right.
The noise is irrelevant to me. The noise comes from the market. I can tell you, based on how things are trading and how much my screen's blinking, how much whatever role noise plays in the market. And so for me, this is actually what I prefer, which is the market to discount the noise and let the market just do its thing, whatever it's going to do. Because I just think that's the way trading has always made sense to us. I think it's proving, I think the market's actually proving what we've been saying for the last 15 years, which is just ignore the noise and trade what's in front of you.
Yeah, but noise does bring opportunity, and opportunity 100%. Is what we do. Look,
100%. Noise, it's not just noise that brings opportunity. Price brings opportunity. Noise brings opportunity. Anything that makes the screens change colors faster brings opportunity. Whatever pops your vol type of thing. But I
Whatever
think the
pops
market
your
has
ball.
learned to discount certain types of noise. And, you know, the Trump noise is the loudest, and I think it's learned to discount it. Not in a good way or a bad way. It just discounts it.
Yeah, I mean, the last few weeks we've had these big gaps, or relatively smaller gaps, I should say. DeepSeek, of course, tariff round 1 with China, Canada, Mexico. We have the steel aluminum tariffs to kick off this week. The gaps are getting smaller and they're being covered quicker. DeepSeek, that was a 5-day gap coverage. We have the first round of tariffs that's covered in 2 days. Yesterday, or at least at the start of this week, we gap open lower. Within the first hour of futures being open, the market covers back to Friday's close. So maybe there is a bit of a boy who cried wolf phenomena that's playing out here in real time where, yes, these threats are real. Yes, we know the tariffs are coming, but if it's just noise, then the signal is basically to ignore it right now and not necessarily get worked up about the latest tweet. And I think what you guys are pointing out is something that I've reflected on. How come I'm so much more focused on the news, and why do I care more about this than necessarily you guys? I think about how I learned how to trade. Like my trading experience comes in 2008, 2009 with social media and financial media. I'm not sitting in a pit, right? The only thing that you guys see when you guys start trading are the numbers on the screens and the emotions of the people around you. You don't have Twitter in your hand, right? Elon Musk isn't sending something out that's moving the market every hour. Neither is Trump, and I'm not getting a notification for it while I'm trading. So maybe it's a function of the fact that you guys are better suited. And people like myself need to learn that skill set of ignoring the noise a little bit more because, quite frankly, the world that we've grown up in and traded in, there's always that bell ringing on our phone that such and such headline is coming out, and we need to react to it. Maybe we don't.
Yeah, I mean, there's a lot. There's a lot of truth to that, which you just said, and it has nothing to do with us growing up in a different generation because the products haven't changed that much, the strategies haven't changed that much. You know, the technology we all have access to, but it's the way your generation relies on that kind of the dissemination of all that information because that's how you process things, and we would process things differently. There's no question about that. I think that we always process things from within what I would call market structure, meaning that we always looked at things from inside out, and I think that you looked at things from outside in, and that's the difference. And I'm not talking about just you, Chris Vecchio, but it could be you, an entire generation. Like I think that my kids, you know, Tony's kids, Nikki, and that whole age group, think of things the same way that you do. You looking outside in, like I feel like we were part of the machine, and you guys are figuring out that machine. And so I think we look at things differently. Like here, I'll make it even simpler.
Sure.
We were part of the original group that learned how the sausage was made. And you guys came in and just started eating the sausage. And it's a little different. And, you know, like you never got to see how the sausage was made. And I think that's the difference.
Yeah, and you and Dylan had a really good conversation last week on Truth or Skepticism about the importance of storytelling, right? And I think my generation in particular, we're more interested in learning what the story is and then working backwards from there. Whereas you guys say like, well, if the market plumbing is doing X, Y, Z, then we can tell you what the story is, right? I don't need to see the non-farm payroll print to know if it's a good or bad number. The market prices will tell me it, right? And so you're kind of working backwards to the same, well, we're both trying to get to the same solution ultimately. But in this environment, like filtering out the noise, I think this actually poses a problem, more of a problem for people like myself, because trying to figure out the story is a lot more difficult, and avoiding all that noise perhaps is the most important thing. So staying within your mechanics, as we and you guys always preach, but staying within your mechanics and having a system is really important here. And I found my way, at least as a macro person who tries to trade those stories, the longer duration stuff is absolutely your friend here. I find myself going out beyond 45 days right now. It's more buy and hold than day in, day out trading, but it's the way that I am able to avoid the noise, if you will, avoid the Noid, like it's an old Domino's commercial, and keep my head on a swivel.
Yeah, we definitely look at things very different than that, but I get it. I get it. I did.
People need to know there's more than way to skin a cat here in this market, and you don't need to be overwhelmed. But you should perhaps think about adapting if you're struggling in the first 22 days here since Trump took office.
I do like the discussion I had with Dylan on bark versus bite, on which is that's what we called it, and but I do think that if you guys had seen how these, if you'd seen the industry from the inside out, you would be the same as us. Like that's the whole thing. Like, I think if you had seen, how markets are made and how order flow works from the inside out, you would think the same way we think. That's why it was so hard for us.
It's a lot easier. It's a lot easier to become a strategy expert than it is to become an AI expert this week, DeepSeek expert the week prior, tariff expert now. I mean, it makes it a lot easier to just say, this is the noise. What strategy can I apply for the noise to benefit my directional assumption? And that's where we come from. One of the really different.
The funny thing is, Chris, on all the software that we've built from Thinkorswim all the way through Tasty, one of the reasons that we never focused on having news in the platforms, and we never focused on having charts in the platforms, and we never focused on all the things that everybody traditionally uses, is because we only focus on how the actual market structure works. Like, to us, the structure, the foundation behind the market structure was the whole reason why prices move, how everything works. And that's why we never cared. Like, we literally launched Thinkorswim with no news and no charts because we didn't care. Nobody ever used that stuff on the trading floor. When we launched Tasty, we launched it with no news and limited charts because we didn't care, because that's not how we want people to think. So, I mean, yeah, we've
well, for the people out there that do think like that, they can join me on my wild ride twice a day here on Tasty Live as we try to.
Well, we realized at some point that we had to concede, or we wouldn't. We had to concede certain things. Like, we had to give a little bit back because there was too many people like you and like others that said, I'm not going to come over unless you have like the very basic things that I need. So we're like, fine.
Some people like to go for it on fourth down, Tom.
I like to go for it on fourth down. But, we always felt like we're playing a little bit different game. That's all.
Mm-hmm. Mm-hmm. Sure. So before we wrap this up, there was one more piece of news that was interesting, and perhaps a quick let me explain here legitimately to fulfill the show's spirit, if you will, of the title. OpenAI apparently received a $97.4 billion unsolicited bid from Elon Musk and a group of accredited investors who are interested in taking a controlling stake in the operation. Now, at first blush, you look at the news last night and go, that doesn't make any sense. Didn't they just get $40 billion from SoftBank to bring their valuation up to $240 billion? Why on earth would they do this? Because as OpenAI transitions from a nonprofit to a for-profit entity, Sam Altman has to theoretically buy the assets from the nonprofit itself. Submitting an unsolicited bid attaches a value to those assets, which now complicates OpenAI's ability and Sam Altman's ability to transform the company from nonprofit to for-profit. Whether or not this means that Grok 3 is going down the tubes or Elon Musk actually wants to acquire OpenAI is another story. But in terms of how this is actually a piece of like corporate chess, I would think of it more along the lines of trying to throw some, stones or a stick in the spoke of the bicycle tire rather than a legitimate bid itself. And maybe it's coming from the fact that we do have a Stargate $500 billion White House-led financing program here moving forward to build out AI infrastructure. In any event, I thought it was an interesting bit of clarification that was worth sharing with people. Musk is certainly being a savvy businessman here.
Either that or this is just you're 100% spot on. And that's because that's the first thing everybody said. Well, with a $250 million bid, why would, what's the point? And this is petty bullshit. and you know it. This is just like ridiculous. You know, this is like Musk sitting around, you know, getting high and saying, you know, screw these guys. I'm just going to put $100 billion bid in just to make him pay more for his own company, because he would rather chop his own fingers off than sell it to me. You know, never going to happen. And they know that. Like, he could have made it $200 billion, except he tried that with Twitter and it didn't work. So he doesn't want anybody to face him, because that's the biggest risk for him. Is the last time he got high, put a stupid bid out there, they basically sold him the company, and he doesn't want another Twitter to show up. So this time he put a bid in that's actually, you know, that at least he maybe, you know, he knows they're not going to do it. But this is just this. I don't know what's gotten into that guy. I mean, it's just like almost like he can't get enough headlines. Meanwhile, it's not helping his Tesla stock, that's for sure, which is on its way back to where it was pre, you know, it's not quite there yet, but, you know, he spent a lot of money.
It's pretty close, Sadnov, to where it started December.
No,
December.
I was going to say where the election, you know, the November election, which I think was
93% after the election, and it's off like 30% from its post-election high now.
Yep.
So.
Yep.
Well, I mean, Musk spent, you know, whatever, 270 billion on Trump, and then, you know, it turned into about $150 billion winner for him with Tesla at 480, but Tesla at 340 on what looks like on its way back to 280. You know, I'm not so sure he's playing this like the genius he thinks he is, because people clearly realize that he's got a lot of stuff going on, and one of them ain't Tesla.
Chris, let me help you here for a minute. But I thought news means nothing. Waiting for you to answer, Tom.
Time for a quick 90-second break, Tony?
It seems like it. Let's take that quick 90-second break. We'll come back right after these short messages with a market measure. Try to help you, Chris. I just try to help you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
So you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads.
One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to. In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win!
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with this market measure. Even the S&P's hanging steady, down 16, even with Jay Powell talking.
They haven't
Bonds
moved
down 16 ticks. They haven't moved.
They haven't moved all day. You want to see something? Do you know what this is?
Nut dish?
Do you know what this is?
That's an empty nut dish.
How do you know it's empty?
Because I heard you bitching on the break that Beth didn't bring you her nuts.
Really? We're going to do this live?
This is a nut dish that Beth bought me, but it's empty.
Beth bought me a refrigerator, and I fill it myself, Sosnoff. So it's up to you to get your own nuts.
What am I supposed to do with an empty nut dish?
This is so pathetic.
Not right.
This is not a good color on you.
The poor guy is famished.
I know.
Dying over here.
I forgot your nuts. Big mistake.
Big mistake.
Big mistake.
Big mistake.
John doesn't make.
John doesn't make that mistake.
Yep.
Yeah.
No,
Come
he doesn't.
sleet, snow, hurricanes.
There's John.
John doesn't forget.
I'll try to be better.
Yeah, you got to do
Can
better.
we get more light on you, Beth? We would like a little bit more light.
Yeah, why are you so dark?
Relax. No answer there.
No, you look like you don't have any lights.
There's plenty. I'm not the star. The lights are all for you.
No, you should have lights.
Oh.
All right.
People want to see you.
Easy. I'll throw those nuts somewhere.
All right. Let's
Market measure.
Yeah, but before we go to the market measure, we do have to promote Nikki, Mike, and Katie. So we're doing the next live event we have is in Chicago, on Sunday, March 9th. And you can sign up for the wait list. The event itself is all full right now. But you can sign up for a wait list, and hopefully, somebody will cancel for you or that kind of stuff. Small show, Sunday, March 9th. Doors open at 5 p.m. And we're going to be doing it on the coffee shop stage. I think you're going to love it. For people that have been coming to these events, they absolutely love them. And this one is Mike Butler and his whiteboard. And also with Nikki Batista and Katie McGurkle. They will be there. And
those are the friends. Those are what they call friends.
Those are friends.
Yes, it's Butler with his friends and his friends.
It's going to be a very fun show. You're going to get 3 different perspectives. It's 90 minutes. That's it. And so, but waitlist only at this point. However, if you want to see the same show a couple weeks later, 3 weeks later, on Saturday morning, flip up the next slide. Beth, this will be the last one. On Saturday morning, on March 29th, we will mint this and play it back to back. There'll be tens of thousands of people that sign up for this all over the world, and you can own it for free and watch it anytime you want. And it'll be the same show, except it'll be a little cleaner, more produced. And just sign up for it before March 29th, and you own it.
Beautiful.
That's it.
You can always go back and watch it.
Yep. And it's, like I said, it's Mike and his whiteboard along with Katie and Nikki. So far, Mike and his whiteboard, I want to say we started that segment, had to be 10 years ago or something like that. And
oh, yeah.
Yeah.
I mean, with a legit whiteboard. I mean, that's why, he would just take the strategy that we would talk about and simplify them.
I'll tell this story. So Mike we had a couple of interns one summer, and Mike was sitting at the big table that we have, and he was teaching the interns what we do. And he had a whiteboard out, and he was drawing up a bunch of option strategies on the whiteboard for these. I think it was 2 interns, and I'm watching them, and I'm like, this is a show. I'm like, this is a show. And so I'm like, Mike, this is a show. He's like, what do you mean? What's a show? I go, you and this whiteboard. This is a show. This is fun to listen to. And we made a show out of it. And I want to say to date,
it's one of the most widely watched shows that we've done. I mean, we don't promote it as much.
I want to say we're well over 10 million views, on our way to 20 million views of Mike and his whiteboard, which is a lot for option strategies in this world.
Sure.
So over 10 million, probably close to 20 million. Now, I haven't looked in a while, but just a fun, crazy idea we had 10 years ago or something. All right. Anyway, so if you haven't signed up for it, please go tastylive.com/events for both the live show and the digital collectible. But the live show, like I said, is sold out. The digital collectible will never be sold out. We can mint as many as we want. So anyway, that's it. And after Mike's show at the end of March, we will then post our travel schedule for 2025. It includes some international locations. and it includes a bunch of U.S. stops and a brand new show for this year, among other things. All right, man, let's go.
Let's do it.
So we're going to do some VIX expansion, separating reality from fear. VIX expansion, separating reality from fear. This is a market measure sponsored by SIBO, and let's do it.
Let's do it.
So selling premium and high implied volatility is ideal because the trader will likely benefit from a volatility contraction. Volatility, as we talked about yesterday and many other times, is mean reverting. So when it goes up, it's at some point, it's going to come down. Sometimes it stays high for a long time, like 2008 to 2009. Stayed high for almost, I want to say, almost 300 days or something. But usually it's 5 or 6 days. And volatility gets high, and then it contracts. But with selling low volatility, there's the risk of implied volatility expansion. That's volatility going up. How serious has this risk been over time? Because we know that volatility goes up. We know that when volatility goes up, it goes up really fast. And we know when it comes down, it's like, it could be torture sometimes. But
sure.
How much of a risk is volatility exploding? What do you think? Let's go next slide, and we'll give Tony some more.
I don't know, like on a percentage basis.
Let's give him some. I'm going to give him some more information before I ask.
Content. Yep.
So we're going to look at the SPY. We're going to look at Tesla. The reason we chose Tesla is because of all the stocks that are out there that's consistently been in the top of the most actively traded ones. Like right now, it'd probably be, I think NVIDIA is the most actively traded options.
It's always been the one with some of the most volume.
But Tesla's number 2 right now, and Tesla's always been 1 or 2. I want to say for the last 5 years. So we're using SPY and Tesla. They've been 1 and 2 for the longest period of time. We're selling 16 Delta Strangle, 45 days to expiration, managed at 21 days, and we compared when the VIX ranges when it's below 15, between 15 and 30, which it is right now, and then above 30, which it is a very small percent of the time. In fact, I want to say, based on the research we did yesterday, that I kind of remember that number to be like around 7% of the time. I don't know if that's right, Tony, but I think we're above 30 about 7% of the time. We're between 15 and 30. We're between 15 and 30, probably about 40 to 50% of the time, and then obviously the balance below 50.
In the last calendar year, from February to February, it's probably even less than that. It's only 3 or 4 times in the whole year.
Yeah, but it says BOLO. I'm sorry, BOLOW. Just change that to an E, so we look perfect. Thank you. Let's go next slide. So, for example, when the price of the SPY 16 Delta Strangle will be higher when implied volatility is higher, resulting in a lost seller. Okay, obviously, when volatility goes up, premium sellers lose money. So if implied volatility is 15%, you collect 335. If it's 25%, you collect 505. And if it's 35%, you collect 735. So it's obviously when volatility goes up, proportionally, the amount of premium goes up. The other thing is when you're selling 16 Delta Strangles, when volatility is cheap, you don't make a lot of money. When volatility is expensive or at least higher, you make money. So that's the most important takeaway from this entire slide. It's that the return on investment is a negative number when volatility is low. That's why we use IV rank to tell us when to get into positions and all that kind of stuff, because we don't do well unless implied volatility is on the higher end of its range. And we're talking about IV. We're talking about straight VIX, but we use IVR to help us with individual stocks to put context around everything. You can see the higher the implied volatility, the better that we do. The buying power, the probability of profit, everything's going to be kind of the same. But the average P&L and the return on investment is better when volatility is higher. Let's go next slide. So to put context around volatility expansion risk, we examined the frequency and the magnitude of expansions. We recorded the VIX on day 1 and day 45 and computed the difference. This was done every trading day since 2017. You can imagine the amount of data in here. This is almost 8 years worth of stuff. Let's go next slide. So for SPY, in very low implied volatility, 75% of the 45-day periods saw a VIX change of less than 3.7 points. So it was fairly rare to see a significant change at the end of the period. Yes, and I think this is the important thing. You can't, and I can't tell you how many times we've stressed this, you cannot time a VIX expansion. That's why it's so difficult to inventory long VIX, because you know at some point it's going higher, but you cannot inventory it because it's untimable, if that's actually
and it's
a
so
word.
expensive to hold if your timing is off.
Yeah, you cannot time it.
Mm-hmm.
So what happens here is that you can see that the biggest risk to the upside is when the VIX is below 15, and the least amount of risk to the upside in the VIX is when the VIX is above 30. But, again, it's a very difficult thing to time. You have almost no risk. I shouldn't say no risk, but long term, when the VIX is above 30, it contracts. Long term, when the VIX is between 15 and 30, it also contracts. But when the VIX is below 15, it expands. Let's go to the next slide. Even for individual stocks such as Tesla, when the implied volatility is very low, 75% of the 45-day periods experienced a VIX change of less than 3.8 points. Very similar to the SPY, almost a tenth of a point of difference. But as a result, the significant changes by the end of these periods were relatively rare. So if you're betting on implied volatility going higher in Tesla, again, it only happens from very low levels of implied volatility. It does not happen when the VIX is above 30. It's interesting to see how close the VIX and the SPY are to each other when you just look at this stuff. Let's go to the next slide. So the other main factors that drive P&L of a short premium trade are delta and theta. Trade P&L often comes from time decay, theta, and from price movement, delta, more than it does volatility. That's a very fair statement. We're volatility sellers, so we're more dependent on volatility contraction. But here's a good little slide. Let's go to the next slide. As shown in our previous studies, selling premium in low implied volatility and low IVR can be profitable, even if it can be minimum, though it's reasonable to mitigate IV expansion. So again, when IV is really low, reduce the number of contracts and overall size and maintain some short delta to offset the Vega risk. The Vega risk is just that volatility expands. And that's mostly going to happen in down moves. Let's go to the last slide. So some of the takeaways. Volatility only rarely ended significantly higher than where it started. This is a crucial takeaway because those of you that are trying to time volatility expansion, it cannot be done. And when you have volatility expansion, you can't bet on it lasting. Because again, volatility only rarely ended significantly higher than when it started. We gave you every single day for since 2017. While traders don't benefit from volatility contraction and low IV, the profit from theta has generated enough compensation for the risk. And try to stay mechanical and keep your occurrences going, but consider hedging with smaller size and shorter delta and short delta.
Good little back test there looking at VIX and how many times it happens. And Sadnov, on our Tasty Live back testing, you can now back test things by using the VIX. How about that?
You can. I think it was released. Was it released yet? Okay,
yes,
perfect.
Sir. Yesterday or the day before. Yes, sir.
Oh, yesterday, the day before. Beautiful. Okay, great.
Yep.
Yes.
Yep. Thank you very much for your time, Sadna. Appreciate you playing. We're going to take a quick 90-second break and come back. We got more Tasty Live. Everything's quiet on the Western Front, although the E-mini S&Ps have rallied about 10 handles. They're only down 7, and volatility, since we just talked about that, is completely unchanged. We'll be back in 90 seconds with Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. Number 1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. Number 30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. Number 6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. Number 18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Tomas, we are back, my friend, but enough out of you. Tasty Trade World Headquarters, your friend of mine, the very popular, very handsome. That's right, Mr. Scott Sheridan for the Scott Sheridan Studios.
Good morning.
How are you, sir?
I'm excellent. I just need, for your benefit, because I assume you're in the office today. Please tell me it's pizza and not Taco Tuesday.
No. First of all, he's not here, as typical. And second of all, it's JP Graciano's.
You just said yes. You just gave me one of these, like kind of going along with it. Wow, that's where we are now.
Because if you can't tell, that's how good it is.
It's JP Graciano's.
I like JP's. You're not a fan.
Yeah, it's fair.
The bread's a little too tough for his dentures.
It is, because they make it yesterday. That is Joe. I do think they make them yesterday. Put them in the refrigerator, then bring them over.
Honestly don't. I don't think they make them day of. I think it's kind of. They piss me off.
Yesterday's. I do. I think it's yesterday's. I agree with. But I like it. It's a little crunchy. I get it, Tom. Like, kind of have to gnaw.
Yeah.
So maybe
it's not as good as Barry or Fontano's.
I know. And nothing is as good as Barry or Fontano's. Right.
Hey Scott, just changing subjects for a quick second here. I saw an article that said Michael Jordan's like old car
and BMW.
Yeah, you saw it? Like $24 million. Now you had...
No, it wasn't $24 million. It went for like $5 million, I thought, didn't it?
Oh, I'm just making it to hurt is all I'm trying to do right now. I don't care. I just don't care.
If I still had the Monza red Range Rover, which was really orange, with blacked out windows, Tom's laughing right now.
I'm only laughing because...
You had it. You bought it. You owned it.
I did. And I basically gave it away. Back then, who knew that, listen, Michael was Michael, but now he's Michael. Right? And people pay anything. It's crazy, the numbers that people pay. I don't know if that car's still on the road. Hopefully somebody took it and stuck it in a barn somewhere, and it's not going to hit the market. And I'll be sad when I sit that over.
Didn't you keep the title?
Yeah, somewhere. I've got it.
Oh, you're like Sadnov and his gold bars. You don't know where it is. Man, it must be nice to you guys.
So it's funny because when I sold it to the dealer, I was like, yeah, there's no value to it. That was Michael Jordan's. That doesn't really help us. And after I sold it, it's like, can we get a copy of that? Can we get a copy to show that it was Michael Jordan's? I thought there was no value to that.
You could have had $5 million. You gave it away for, a couple of $10,000.
Well, you're coming at me hard today. Like, do we need to go over Turks and Caicos and talk about what that could have been for you?
Oh, that hurt. That hurt.
Okay. Vacation that you no longer have could have been like a $10 million palatial estate on the ocean.
Oh, that hurt. Two of them. I bought two.
Listen, all his stuff, he couldn't sell his house for 20 years, okay? Is it not that everything he ever touched is golden, okay? That car...
I couldn't sell my house for 20 years because I didn't own it anymore. The wife took it.
That car was a freaking pimpmobile.
That car was a pimpmobile, Scott.
That car was a pimpmobile. That car would be worth less today than you sold it for.
I never saw more people disappointed, like in front of Oak Street, when you would pop out of it. It was so disappointing.
That's true.
With all due respect, I was embarrassed to get in that car.
No, you weren't. You're like, this is cool. Could you pick me up? I want to drive in this thing.
No, I never said that once.
Now, the one disappointing part about that vehicle was he smoked cigars and it stunk. I could not get rid of that cigar smell.
Oh, really?
You get extra for that. You get extra for that.
You do?
Yeah, well, that's worth extra.
The things that he did in that car that I don't need to know about, but we'll leave
if that car, now that's the whole thing. If that car could tell stories, then that car would be worth a lot of money. If that car had video or audio, then it's worth money.
Oh yeah, worth money for sure. Yeah, it's true. What are you gonna do? I tried. So this plane crash that happened out here. Did you see video of this thing?
No.
You didn't see this?
No.
So Vince Neil from Motley Crue.
Yeah.
Yeah.
His Lear. It's a Lear 35. They said, which it's like from the 90s. But I mean, planes have to go through annual inspections. So just because it's from the 90s doesn't mean anything. But it landed at Scottsdale, and they think the brakes or something failed, because you can watch the video of this thing. The plane's coming in, 100 miles an hour, and it's fine on the runway, and then all of a sudden just veers hard left, slams into another parked plane. Somebody died.
Yeah.
I mean, I think the pilot, and I'm guessing that they were trapped in there. So that couldn't have been good. Nothing good about this.
Yeah.
So we got to stop having plane issues. No, this one wasn't air traffic control. This was a malfunction of the plane. I mean, there was literally a parked plane, and they ran into it. Crazy.
Yeah, it's been a bad run for planes. There was a plane that got lost in Alaska. There was this thing in Scottsdale.
Yeah, did they ever find that?
They did.
Where was it? How do you lose a plane? It just falls out like in water, or where'd it go? In the forest? Where was it?
It was partially submerged in ice and chunks of ice.
Did they all die?
What? Everybody died.
Oh, was it like a sightseeing plane? Or
No. It was a local. It's a local. I mean, in Alaska, people go from it's just
one place to another.
Yeah, it's just a small regional airline that flies from one city to another with 10 passengers.
Wow, can we go back to making fun of Scott? I mean, you guys really took it to a different place here. I mean,
I think what we should do is go back to some of the words that we were talking about that I didn't know you could talk about.
Ben, what was the word? What was the word of the day today?
Tom's nuts. The pistachios. He didn't get any, so he's hangry.
Omaha.
Right? He's hangry. I get that. I get hangry too. I find I don't know if it's I get older. I don't know. I can get hangry. I'm good with that. We'll leave it at that. I don't know. Wait a minute. What am I missing? Am I getting set up for something? Is this three friends and a stranger, and all of a sudden, you guys are playing some video or something I don't know about?
No, we're good.
No,
we got nothing going on with you. It's a slow day. Even the S&Ps haven't moved. I mean, they're down.
I mean, they moved
10
handles all day, and they haven't done. I mean, they were down 15, pretty much sitting there. Bonds maybe towards their lows, but this is a market today. It's all Apple.
It is a market with all Apple. Apple's up $5.76.
It is all freaking Apple today.
Did they sell an extra iPhone?
They sold 3.
They made a partnership. Sorry, go ahead.
With what AI? Go ahead. What is this going to be? This
with Baba in China.
They sold a couple of. Yeah, they did sell a couple extra iPhones.
Baba's at all-time highs too, Sadnoff, just a couple of dollars away, trading $115 right now. Remember when Baba was $85 a month ago?
I mean, it's not an all-time high.
If that's not all-time high, Baba was.
I'm sorry. Recent highs over the last year are approximately 120. It's 115 and change. I think the high is around 117 and something. It's trading 115. I thought we were friends here, and we can.
I'm not going to say anything. I mean, if you want to get into some details, I'm looking at some 280s, but I mean, 320s. Oh, here's one. How about 313.50?
What year was that? 2019?
Looks like 2020.
Okay, sorry.
Hey, just calling it the way I see it.
I said the last year. I mean, wow. I'm sorry I mentioned the $5 million mistake you made.
All right, that's it. We're done. All right, that's it. More importantly, what sports are there now? Like, seriously, what is there to watch?
Right
you
now?
got great hockey coming on Thursday. Wait a minute, you got a four country, USA, Canada.
What is it?
It's all the NHL players that are going to represent their countries. It starts on Thursday. It's going to be awesome. I think Norway. I think Norway's the other one.
How are they doing this during the season? Is it getting close to the All-Star game, so they have a break?
Say it again.
How are they doing this during the season? Is there an All-Star game, so it's almost a break? What are they doing?
That's correct. It's going to be great.
Okay, that's 4 games. What else we got? I mean, now that football's over, baseball hasn't started. Chicago hockey's non-existent. Chicago basketball's pretty much non-existent. So what is there? And you can't watch the games. Have they figured it out yet in Chicago? Still can't watch them. On this thing.
No.
Yeah.
No, Scott,
what if we were advertising? What if we were still advertising? How pissed would you be?
Mad.
Right?
Because they wouldn't have given you your money back.
Right. They're going to go, well, although I do know that when NHL went on strike, it was into the context that they didn't play a certain number of games, that I guess playing games is different than not letting anybody watch the games, but they did give the advertisers money back if they didn't play a certain number of games. But anyway, I know you don't watch basketball. I got it. And you don't watch TikTok.
No, I just read now.
No, you just read. When was the last time you picked up a book? I'm reading a book right now. But when was the last time you literally picked up a book?
I picked up a book like the other day.
Well, I picked up a book to read it, not to move it. When was the last time you actually sat down to read a book? Has it been in the 2000s?
Oh, yeah.
Wait, you say that with such confidence?
Oh, yeah. Yeah. No,
He's such a liar.
Picked up a book to read. I don't know. I have to think about it. I've read a lot of books. I'm a big book reader. What? Mm-hmm. Your sound's not on.
Yeah, we lost Scott.
Oh my God!
Oh no, I still see Scott. He's still in the room. To answer your question, Scott, it would be bluefish, redfish, greenfish.
Okay, and Vinny's 15, so that was when he was 3, 4.
No, Vinny's actually a ferocious reader. He can't add, but he likes to read. And I'm serious. He's got his mother's brain, unfortunately. He can't do math, but he loves to read. He's in honors algebra. Honors English algebra. He's can't even spell it. Yeah.
Listen, you know what? As he said, everybody excels in a different room in the house.
Everybody excels in different rooms in the house. I ain't judging. $185 an hour for a freaking tutor. That's what I'm judging.
Is he a good writer?
He is.
Okay.
What, you need him for the team? You want him to clean up some of Sosnov's emails?
Listen, so I have to say, writing is a dying art. It's a great skill to have.
I told him, I said, look at Vanetta. You want to be like Vanetta? That's your future. Either that or start learning how to do a little bit of algebra.
When it's coding's off the table.
Gonna be a tough one. I think it's gonna be a tough one. But with AI, you can do anything now in a minute.
Pretty much.
Yeah.
Pretty much. All right, so about doing anything in a minute. Should we get the top 15 symbols?
Sure.
Give me another couple minutes. Booze are gonna be up on the day.
They're up on the day now, almost. The NASDAQ is already.
I said booze. What's going on today? Did I do something with you guys?
It's the nuts.
I said, seriously, it's your nuts.
I told you.
You don't get your nuts thing, right?
I'm so sorry. It's my fault.
Can't you just put that, like the trough? Can't you just put the Kirkland 5-pound bag and just let him put the paw in whenever he needs them? Just leave it on the desk. Problem is, then they're salty.
I got him a nice gift.
You got to make sure you drink a lot of the D-Scholar.
No.
That would be good for you. An automatic, like just buy them in the shelf. A machine that just takes them out for you. Says, here you go.
No. I do not
He
like
has people for that.
I don't like
your people.
I don't like the nuts deshelled. No.
Me either. Right? That's part of the fun.
It's part. You
we
can
talked
buy
about
them
this.
deshelled. I don't like them.
Right. Yeah, that's for Johnny's. The problem, we talked about this. I don't remember where they came from, but the red ones when we were kids, which
You gotta have the red ones. Your fingers gotta turn red.
No, because then you get the mess. It's like, what do you want that for?
They gotta turn red. You have to. You have to.
Can you even find those anymore?
I don't think so. No more red dye number 3.
I think Kennedy got rid of that. That's red dye. That's red dye. We're done with that. It explains why Sadnov is the way he is.
Well, actually, the 6 shut me down from Doritos because apparently
you can't get a vaccine
Doritos
or red dye anymore. I love red dye too.
Doritos, right?
You can't get an untested vaccine or red dye. That kills people. That's correct.
Does that mean hot dogs are done? Because those have to have a lot of red dye.
What?
No? Hot dogs. Can you get a good hot dog? Or
Only in
are
Maine.
those done?
Only in Maine.
In Maine?
Yeah. Where they have the old
tamales?
school. They have the old school red hots.
Kosher?
I don't think I've ever had a red hot.
They're
wait a minute. You've never how about a hot tamale? The candies? Cinnamon candies?
Oh yeah. I've had those.
Hot tamale. Bring your mind back, okay? This is not where we're going. Okay. The candy.
Yeah. I had those. Yeah.
Those
Not my favorite. I don't like cinnamon.
Every day I learn something else like this.
Yeah, I'm not a cinnamon guy.
Cinnamon.
It's not a cinnamon guy.
It's the greatest dessert. You good cinnamon roll? No.
I don't mind a cinnamon roll. But I don't like cinnamon.
All right, I can't.
I'm very complex, Scott. Very complex.
Can we get to the top 15 symbols? Go up through the system. First 40 minutes today. No broad-based indices or futures. Tom, for you, number 15. MSTR at a 23. For everybody else, Tesla at a 35. NVIDIA at a 45. Shop at a 24. PLTR at a 67. Apple at 31. Intel at a 56. SMCI at a 64. Baba at an 83. Coke at a 40. AMD at an 11. Amazon at a 14. Meta at a 10. TEM at a 17. TLT at a 23. And number 15 for Tom, MSTR at a 23. Rounding out the next 10. GLD at a 69. BBAI at a 58. IBIT at a 30, TQQQ at a 34, AVGO at a 66, ACHR at a 50, and SLV at a 39.
As foretold by Mr. Tom Sadnoff, E-mini S&Ps are up 50 cents. Thank you for playing, Mr. Sadnoff. We appreciate it. And that 4-nation round-robin all-star substitute, Sadnoff, is Canada, U.S., Sweden, and Finland.
Who's
much better than an all-star game.
Oh, they're not doing an all-star game? They're just doing this in lieu of an all-star game?
That's what I believe. Yes, sir.
Oh, interesting.
So much better.
Are you paying attention? Can you hear us?
Yeah, I can hear you. I don't know what you guys are babbling about, though. It's like, you're just like this. This is like two boomers, two boomers suffering from dementia talking about like something. Like, can you watch it on TV or can you do whatever? I'm like, I don't know what you guys are talking about.
It's not you. It's us.
Oh, that was good.
Yeah, I mean, you're just sitting there like, I don't know. I can watch this on, on Boomer Network. Like whatever.
Scott, I'm going to let you go, my friend. I'm going to take a quick 90-second break and come back. I got more Tasty Live after this with TP. That's it. TP's coming. We'll be back in 90 seconds. He's amazing.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered.
The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! I know Eliminate! You were on Eliminate! Oh my God!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
You get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's that woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "Oh, I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custards and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can't because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, like, Sosnoff, grab the drill, and then it's like man work and you got to grill.
We got to drill
the hole.
Tony is going to counter that and say it's all about catching the fish. For sure.
No. I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Everybody, and welcome to the TP and J Show. TP, good to see you this morning.
Thanks, Jenny, and thanks for having me on again. I know Liz is traveling.
Well, yeah, I was just telling John she was in Florida, supposed to be having a lovely time in Florida, but she was sick when she left, thought she would get better when she got in the sunshine and the warm weather, but she got worse. So she flew home. She's at the doctor. She thinks she has pneumonia. We'll find out. We will find out shortly. So
let's keep our fingers crossed.
She does get it. She does get it. I think because when she gets sick, she just keeps on going and going and going, and then I don't know. Then it hits her. Then it hits her down.
And pneumonia is so weird. We've known about it for how many thousands of years or whatever, but still they can't cure it. They can't, there's no real, I don't think there's a treatment for it. Fluid in your lungs, they can't get it out.
But she'll get, they'll put her on steroids and give her an antibiotic, and I don't know. But she sounded terrible, and I felt bad her flying home. I don't know what's worse, flying home sick or just staying there and living sick in a hotel. I'm not sure. I don't know.
She's probably better off home.
That's what she thought.
It's like a 6-hour trip, right? Between going to the airport, waiting at the airport, flying, getting out, getting home. It's, what is it, 6 hours total? It's probably better to do that than sit around in the hotel where nothing's familiar and you can't get anything. Anyway, keep our fingers crossed for Liz.
Yeah. So normally we're live from the SIBO on Wednesday. Not sure. I'll let everyone know who's late at some point today. We may be remote tomorrow. We'll see how she's doing. TP, I'm glad I have you on because I had, I was glad I was going to see you. I had a terrible morning. You have so many animals. You live on a ranch. I have bird feeders and I have lovely birds, cardinals, woodpeckers, whatever, lots of birds, but I also have a lot of squirrels. And today a hawk came and he was right on my fence and on my tree and moving from spot to spot, trying to get one of the squirrels, I think. But I went outside in my robe and slippers and he would not leave. He didn't care what I was doing. He wasn't afraid of me. He wouldn't leave.
They're very bold. They're very bold. In the old days, Jenny, a hawk would fly away from you. But these days, they are bold. I don't know. They spend so much time on social media. They get these ideas, and they're so disrespectful. So disrespectful.
I was throwing little pieces of mulch at him. I didn't want to get attacked by him. I didn't want to get too close. I took my snow shovel and was shaking it at him. He wouldn't go.
Get off my fence. So, Jenny, I don't think you can harm a hawk. If you hurt the hawk, I think that's a federal crime. Something like that. Yeah. So it's you got to kind of, it's one thing to throw a snowball at it, but if you start smashing it with a shovel.
I wasn't going to hit it. I was just trying to scare it.
Oh, yeah, they don't scare.
But it didn't budge. It just stared at me get, get out of here, lady. I'm not leaving. I'm not leaving without this squirrel.
So here's the discussion at the Preston Ranch, and it's getting a little tense here. Okay. So I don't know. You've probably heard about the bird flu, the avian flu.
Yes. Yes.
It's killing all the they kill all the chickens when the chickens get it and stuff. So it comes with wild birds, right? Sparrows and cardinals or whatever, right? So I like to feed the birds outside, right? I have my feeders, and I like watching the birds sometimes. And so my wife says, well, you can't feed them anymore because they could have diseases, right? If they die and the dogs, the cats eat them or whatever, they could bring them inside and bring the virus inside. And, so she's not allowing bird food anymore.
There are people like that in my neighborhood too, TP, but I still am putting it out. But there are people who are in the same camp of they stop putting out their bird food. But I feel bad. We're supposed to get 6 to 8 inches of snow tomorrow.
I know. And the birds are out there looking at me through the window. Like, where's the food, dude? Where's the food? And
I know.
I feel bad, We
have a family of woodpeckers. I like them. I don't keep putting my food out, and I would feel bad not putting it out because they're just used to coming here for it.
Yeah, no, I leave up dead trees. Trees die and they start rotting, so I leave those for the woodpeckers. We have two kinds of woodpeckers here, downy and something or others. I don't know. Anyway,
weren't you on your anniversary? Didn't you say you were going bird watching? I think I can't remember, but I know it was recently your anniversary. And didn't you say you were going out on a hike and bird watching?
Yes. So, it wasn't bird watching exact. It's not we're not bird watch. It's not like we keep a log of the birds we've seen, but it's like, oh, look at that bird. Look at that bird.
I remember there was a guy from the OEX pit. I think he was from the OEX pit. I think his name was Al Wibberall, and he was a real serious bird watcher back in the day. That's what he would do on the weekends.
No, the only thing, I'll leave you with this. So down in Texas, we have two kinds of vultures, the black vulture and the turkey vulture. And the turkey vulture you have up there by you. So you can tell the difference. And this is what I inform people how to tell the difference. So the turkey vulture, which is up by you, you tell when they're flying above you, they have long white stripes under their wings, under the trailing edge of their wing. It's a big white stripe. The black vultures have white tips on the underside of their wing.
Oh, okay.
So when they're 400 feet in the air, you can tell which ones they are. Because the black vultures, I think, are a little more aggressive. They might actually attack you. Not that I've actually seen that. No, so maybe. The vultures, they all eat dead animals, and you see them by the side of the road all the time. But the black vultures, I think, sometimes actually kill animals. Maybe, I don't know. But again, I'm not a bird expert by any means, but I know how to tell the difference.
It does scare me a little bit. But you have more dangerous animals and lots of snakes, scorpions. How many scorpions did you collect this summer?
Nah, not a lot. Maybe one. They're just, for whatever reason, there weren't a lot. I think maybe because it was too dry. I don't know. I don't know scorpion physiology, but yeah, we have snakes. We don't have any rattlesnakes. They're around maybe, but not on our property. We have coral snakes. Coral snakes are probably one of the more lethal ones, but
and they're on your property.
But they're sometimes we find once every few years. But they have tiny mouths and they're not aggressive. But if you keep stomping on them with your bare foot, yeah, they might bite you and you might die. So don't do that.
Well,
don't stomp on a coral snake.
That's why, I don't like the cold winters, but I don't mind the nature around here. We don't have anything really that deadly.
Yeah, I guess so. You probably have mountain lions though, and you don't even know it.
You think so?
Probably. Probably. So we're getting a little
Okay.
bond sell off, contrary to what I predicted, Jenny. The bonds are selling off a little bit this morning.
Well, I didn't put in, if we can go into the platform, I did not put in that ZN trade yesterday. So I pulled it up thinking we could put it in today. We looked at it yesterday and I didn't push the button.
Yeah, you were smart.
So no, I guess it's better off being lucky than smart, but I am going to put it in today. So again, if my choices are 10-day, 17-day, 24-day, 38-day, where does the bond expert go?
I would go 38 days just to be social. Let me just see. So the IV is about 12% in bonds, 12.3% in bonds, divided by 6.8%.
I'm going to just show people what you're talking about. So if I go to ZB and you look over here at the implied volatility, you could see in the 38-day, 12.
Yeah, it's like 12.3%.
On the right side, 12.3%. And so what you're looking at is that this 12.3% versus in ZN.
Right.
It's
like 6.8%. And so that ratio is about 1.8%, which to me, it's I mean, look, the volatilities are correct. I'm not saying the volatility is wrong or anything. It's just that that indicates that the ZNs have a little bit higher volatility than they normally do.
Why? What is
Just
it
a little.
silly?
Like, I don't know, 185, 190, that sort of thing. So it bumps around. But just, in other words, if you're going to trade these things, I like to have...
Can you explain this for someone who is in 7th grade? What is the math you're doing? How are you figuring it out?
So what I like to do, Jenny, is I like to sell premium in the products that have higher implied volatility. Okay. I get a little more premium when volatility is higher. So when I'm looking at two products and they're not the same product, right? Bonds, 10, 30-year bonds are different than 10-year notes. They have different volatility. So how do I tell if bonds have a higher volatility than notes? I don't know. How do I do that? So what I do is I divide bond volatility, 12.3%, by note volatility, 6.8%, and I look at that ratio.
Okay, so if I take my calculator, because I want people to be able to do this at home on another day. They're looking. Yeah. So I go to ZB. And I take this 38-day 12.3, and I go to ZN. And I take this 6.8, and I get 1.8.
Right. And
if it's over what, then I go with ZN instead of Z.
Like 190, 190. So in other words, if it's my opinion, and it's just my opinion, 190, 195 bond premium is higher. ZB premium is higher. And if it were 175, it would be screaming ZN is higher.
Okay.
So it fluctuates around that. It's not.
So the lower the number, you're going with ZN. The higher the number, you're going with ZB.
Perfect. See, I didn't think in those terms, but you're absolutely right, Jenny. So lower ratio, note volatility is higher. Higher ratio, bond volatility is higher. Does it make one better than the other? Not necessarily. It's just putting a little bit more edge on the notes. That's it.
We briefly talked about it yesterday, but if you're not here and we're looking at this, how do you get the number and what's the number that you're looking for? So
that's how you do. Yeah, that's how you do it. And so I used to do bond arb, and I still do this sometimes. I'll sell bond volatility, or here I would sell note volatility and buy bond volatility. In other words, sell strangles in ZN and buy strangles in ZB. But that's a little bit more advanced and kind of capital intensive and takes more managing.
Now, if that gets to an extreme, if you see the number at a certain extreme,
Yes. So if it were like right now, I just looked at it, it's not really setting up. But if it were 175, absolutely, I would say sell note volatility and buy bond vol. So sell note strangles and buy bond straddles, that sort of thing.
Okay, so
And
you're and sold like the 30 Delta Strangle in ZN,
yes,
and that's taking an $828, and then go into
ZB.
And in the same cycle, 38 day.
Yeah, you might buy, I don't know what you're going to get, but buy a wider strangle because it's not great. But yeah, buy like the 111s and the 119s or something.
Okay, so here I'm paying $734.
Right.
It's not that capital intensive. This is using $760, and the other one was using $1,500.
Yeah, I mean it's if you have a $2,000 account, it's a little much. And so, but and this doesn't necessarily work with iron condors. In other words, if you want to reduce the capital in the notes, it's because they don't make money. You can't make money in an iron condor in this stuff. But and like I said, the difference between the credits is about $120, $130, whatever it is. That's not very big. I wait for it to be bigger. But
the difference, like here where we're paying $734 versus we were taking an 8 something. You wait for what, at least $200 difference?
Yeah, like more like $400 or $500, that sort of thing. So I like richer credits for this trade. But again, it takes a lot of, and I used to trade bond options. So this is kind of second nature to me. So I just kind of look at this stuff, and if it sets up, I do it. If not, I move on.
Yeah, so this is your wheelhouse. And how often do you think that sets up? Like, how many times last year were you selling one?
3 or 4 times. I'd have to look at my trading history, but yeah, like 3 or 4 times. Not a lot.
And when you see that you're getting a big credit, if you're getting a big difference, then are you like, okay, great, this doesn't happen that often, I'm going to load up on this?
No, I don't load up on it. No. See, that's just it. So 25 years ago, I would have, because all I traded was bond options. In other words, this had to pay out for me because I didn't have anything else.
Right.
Now, because I have 60 other symbols that I have positions in, this is just one little piece of it. And I have other things to manage. So no, I don't put on 50 of these things. I'll do one.
And if you see the difference, and where you're collecting $500 more or $400 more than you're paying when you put the ZBZN strangle swap on, what is the profit potential you're looking for?
About half. So so if I've taken $500, I'll look to make $250. If I can make $250, I am out.
Okay.
Just get out.
It's a new trade. This is a new trade for all of us, TP.
Yeah, this is why you always have to keep learning. Just like I said yesterday, Jenny, when you pulled up the CBOE website showing all the most active contracts and the big orders that come through, I had seen you guys show it before, but it's not something that I looked at regularly. I'm going to look at that regularly.
It's kind of cool to see what's happening.
Yeah. And so you always have to look for new things. And maybe the big trades coming through the CBOE, maybe bond volatility, maybe that's not what you're going to do. And that's okay. You don't have to trade on it. But just knowing it's out there, I think is helpful.
I think it's so nice to find new trade ideas, because this isn't something I would have come up with on my own without you telling me. We used to have Frank Caberna on every Thursday with a futures segment, and he would bring some really cool futures trades on that we wouldn't think of. And we really miss, and our viewers do miss, Frank coming on every Thursday with his futures trade ideas.
Frank's great.
It is nice to get ideas from other people.
And it's just another set of eyeballs looking at stuff,
Right.
So Jenny, you had some questions. Do you want to talk about that collar trade again?
Let me first put in I'm just going to sell the put spread. Yesterday we were looking at the 108, 106 put spread. Would we keep it the 108, 106, or today would we move it down to the 107 and a half, 105 and a half?
You could try this. You could try the 105, 7 and 8, 105 and a half, 7 and 5.5. Yeah, move it down a strike, see what you get.
Well, only 218. That's not that great.
No, I would move it back to the 6 and 8.
Yeah, for 328.
328 versus $1,000. Yeah, it's about the third of the width of the strikes.
All right. I'm sending that. Sending that today. Phil, that was quick.
Oh,
right,
no,
so,
it's not a third. That's okay. Yeah, I like that trade. It's not a third of the width of the strikes, but that's okay.
no, that's all right. That's okay. We're
Because you got to be aggressive.
we're buying that put just to not really that I don't know. So it's tricky. Sometimes we buy options to just use less capital where it's not a spread where we're looking for a third of the width.
And so I remember talking to Liz. This was back, I think you were taking it, you had something to do, and I did a show with Liz last December or something. She says, what are your what the resolutions for 2025? And that I want to be more aggressive trading. Even more so, it's being more aggressive trading. It's once you get to a certain experience level and you know how to manage stuff, and it's not like it's complex trades. I want to do more complex trades. That's not it. That's not what I would want to do. I just want to be more aggressive. In other words, sell verticals that are a little bit closer to the money, sell them in bigger products like NDX, that sort of thing.
Take more credit. Taking larger credits.
Yes.
TP, you learn from trading, right? You learn from trading. Selling a put for $1 and taking it off at 50%, making 50 cents. If you make 50 cents, 50 cents, 50 cents, or $50, and then you lose 800, it takes a lot of winners to make up for that one loss. So I agree, like taking bigger credits, trying to increase your collection. It makes a difference.
100%.
Makes a big difference. I did a study. So last year on the road, one of my strategies was the Jade Lizard, and I used the back testing feature, and I back-tested Jade Lizard in a handful of products. And instead of selling a 70-cent put and a 30-cent call spread, I found that the Jade Lizard performs better if you sell a 16 delta put, so bring it up and collect more, 16 delta put, and a wider call spread where you're not actually covering the whole width of the call spread, but you're collecting more from the call spread. Yeah. And so we changed the mechanics of the Jade Lizard after back testing it last year.
Yeah, Dr. Data, Mike Reckentine built that back testing feature by himself, and it's on the platform. It's very cool. It is a very cool tool, and it's different. Don't confuse back testing with paper trading. Okay, so back testing is just let you compare two Jade Lizards, right? I'll do a Jade Lizard with a 1-point call spread and a fire out of the money put, and then I'll test a Jade Lizard with a closer put and a wider call spread, and see which one gets better results over the past year or 2 years or whatever. That I think is helpful. Paper trading is, I'm not really going to trade these Jade Lizards. I'm going to see how they work. I'm going to put them in a paper trading account and watch my fake P&L move up and down with a position that maybe I don't really understand, right? Maybe that's why I'm not actually trading it. You will never be a trader by paper trading. You get stuck in that. We've had the reason we had paper trading in the old days was our disaster recovery platform. Okay. It was this, in other words, if somebody nuked our servers, we could immediately flip over to an identical set of servers, the platform and an identical set of servers, and be up and running immediately. So we basically had two live trading platforms, but we couldn't have them both running at the same time. So we just said, well, okay, let's make one paper trading, right? Mm-hmm. Nobody ever, you guys have a paper trading platform. Nobody ever went from playing on paper trading to becoming a trader. Nobody.
You don't
Not that
really
I know.
learn. If you really don't have skin in the game, you're not really learning it, right? If
No.
you have your own money on the line, you're watching it, you're seeing what happens, you're managing it, you're learning from your trades. If you're just paper trading, you don't care enough to really watch it and manage it and learn from your trades.
No. And so, yeah, you're going to lose money on trades. Some trades will lose money. Yes. Okay. Get over it. And if when you see that $30 loss on a vertical or that $70 loss on a butterfly, whatever it is, and it really bothers you, okay, maybe trading isn't for you. Maybe. Okay. Maybe. If you're throwing up in the morning thinking, oh my God, my spider put spread is losing money. Okay, it's not worth the stress. But if you can look at it and say,
the more you do it, the less then that stress goes away, right? It's like the first.
Well, I think it does. I think it does. But if you're going to kill yourself, don't kill yourself. Don't get pneumonia, okay, over this stuff. But my point is that you have to actually, as you said, have skin in the game because you don't care. Just like putting $10 on the football game, then I watch the game. Because I don't watch football just, oh, hey, it's a football game. I don't care. But if I have a couple of bucks on the game, sure, I'll watch it. Just as, hey, I win. It means something then. So paper trading is useless. Backtesting, though, like you said, yes, that can help fine tune your strategies or, Jenny, give you new ideas.
Give you new ideas, right? And like you said, fine tune your strategies. And Dr. Day is amazing. He's been working so hard on the back testing tool. They just added, which people have been asking for. The viewers ask, and our team does it. They just added the VIX to the back testing tool. So now you can say, put on a Jade Lizard only when the VIX is over 18 or so. So now you could plug VIX into the backtesting. It's a new feature on the backtesting tool, and the backtesting tool is there for everyone. Where is? Oh, it's right here. So you click on the side
just
here.
Below.
You hit backtesting, and then it pulls it up, and you plug in all your numbers. I don't want to get into it today because we do have a lot to do. And Dr. Data is happy to come on our show. He's come on before and has done some backtesting examples for us. So,
it's a very powerful tool. All right, Jenny. So let's talk a little bit. Go ahead. What were you going to say?
Yeah, I know you brought up the collar. I'm going to pull up his email or his tweet about the collar that he came in yesterday.
Oh yeah. Yes.
So the SPY collar, he bought the stack at 600, and he talked about, rolling up his put, and the market fell, and then the put got expensive. So when you're collaring stock, at what point do you sell your put out? Do you ever sell your put out? Do you personally ever place collars?
No. So, all right. Let's explain, and maybe let's go on the platform and show a collar. Just pick a stock. Let's pick SPY. Well,
he's got SPY, so I'll just look at this. If I
do SPY.
If I bought 100 shares, then basically, I think he said he had the 602 put. Let's say he has the 602 put for $8. Then you would just go and sell a call for $8 to cover the cost of that put.
Right. So this is what's called, and they've been doing this for 100 years, a zero cost collar. So you buy an out of the money put. So you buy the stock, you're long the stock, and you buy a put that you think would be a good hedge for that long stock, and then you find a call to sell that is at least as much as the put you bought. So then there's a net credit, right? So
you're not, making your basis worse. You're not paying for that put. You're actually you're at least covering the cost of it.
Exactly. Now, so this is if you only look at the stock and one option at a time. So let's you don't have to click into this, Jenny, but just think about this. If I'm long the stock and I sell the 610 call, I just have a covered call.
Right.
That's all I have. If I buy the stock and I buy the 602 put, I have something that just looks like a long call. It's a synthetic long call that it looks like it acts like it has the same P&L as buying the 602 call. Okay.
Mm-hmm.
So what and I don't know if we want to, you don't have to look at a graph on this. I don't want to get too much.
Yeah, I could pull up the analysis because I like where you're going with this, TP, because here it is,
Jenny.
analysis on the
Jenny,
analysis page.
It's hard to do, but I try to impress you. You're
TP,
very
I like having you on because you're a wealth of knowledge. Like I said, I came with a list of questions.
Jenny, you're very demanding, and so I have to put on my A game. So here's my point. So what you've done, look at the way that graph looks. It loses money when the stock goes down, makes money when the stock goes up, and it has this diagonal line in between.
Mm-hmm.
Okay, so let's keep that in mind. Let's go back to so let's also look at this. The buying power effect is $30,000. Holy crap, that's a lot of money.
It's $30,000, and if you look at your max profit, max loss, it's max loss 277, max profit 524. It doesn't seem like it's worth $30,000.
So let's clear that out. Clear that trade out.
I'll go back to the table page.
Yes, please.
So I will clear this out. It was the 602 610.
Yes, and so buy the 602 call. Sell the 610 call for $5.
For $500, and it's only $500 in buying power.
It has about the same. It has about. Jenny, look at this graph. It's the same graph. Okay, so I'm not saying that the viewer did a bad trade. That's not what I'm getting at. I'm not getting. I'm not saying it's bad to do this, but what I am saying is that if you're just starting, if you have no position and you say, I want to have a defined risk, bullish exposure on SPY, instead of doing a caller, buying the stock, selling the call, buying the put, you can do the same trade with a long call vertical.
Now, TP, people will ask and say, well, then you're not getting the dividend.
Right. That you're not getting the dividend. And that's if the dividend strategy is part of what you love about the SPY, okay. But keep in mind that the option values, the amount that you buy that 602 call for and that you get for selling the 610 call, factor in the dividends. There is no dividend arb in here. The market won't let you get any advantage from that dividend. So buying the stock and selling the call, buying the put, that doesn't. There's no benefit to the caller. Okay. Mm-hmm. Now, Jenny, here's the exception to this discussion. If I have long stock from a corporate, a share owner, a profit sharing or, something like that where I own corporate shares, or I have stock that I was given, as part of an inheritance or something, and to sell it would create a huge tax liability.
Mm-hmm.
I don't want that. A caller is a good way to define the risk of that long stock. So if you come into a position, if you just have long stock for whatever reason, and maybe you have a portfolio of, maybe you were with, before you watched the Liz and Jenny show, you were just buying stocks and you like collecting dividends, you built up a portfolio of stocks and you don't want to sell them. Okay, selling callers against that is a way to do it. Okay?
It becomes tricky though when it runs up so far, because I have a couple people I know who have wanted to sell callers against their company stock, but then we've had situations where then the stock blows through the call, then what?
Then you're stuck. It's a first world problem. right?
Right.
So if you want to continue to own the stock, then you have to either close the short call or roll it up or roll it out to a different expiration.
And pay to
pay. So that's the hard part about selling covered calls. Like if I'm assigned on a short put, I'll sell some close calls just if I get called away, great. Stock goes up a little bit, great. But to go to the viewer's question, and he said, the S&P sold off, and the 602 put has doubled in value. What should I do with it? Okay. Well, if you sell that put, then you'll be left with a covered call. Nothing wrong with that, but just understand what you're doing. You'll be left with a long stock and short call. Would you buy another put at a lower strike? Okay, maybe, but what you're doing then is just widening out your vertical.
Right.
Nothing wrong with that, and so what I want people, or what I really want that viewer to do, because there's no best answer, right? There are only choices, right? Options give you an amazing amount of flexibility. Different strikes, different expirations. I could even do these in different months. Okay, sure. I could buy a March put and sell a further out an April call. I could do that. I can stagger these things and have diagonals and get really fun with this stuff. But you have to understand why you're doing these trades. And if you're doing it for protection, just understand that if you're rolling that put to a lower strike, okay, but you're increasing your risk. That's all.
Now, this kind of, I received an email question for you, TP, and I feel like it's a good follow-up to this discussion. Say someone they have their trading account, they have the money they're trading with, and and I know, it's hard to scale up, right? Let's say you get more money. It's hard to scale up because you get comfortable with your size. You get whether your size is 3 lots or 5 lots or 10 lots, whatever. You get comfortable with your size, and it becomes hard to scale up when you get more money. So if someone has their trading account and they're comfortable with their size, but then they get another influx of cash, what else on the platform could they do with it? Or what are you trading everything on your platform, or are you trading a portion of it and then the rest of it is doing something else?
I'm trading right now. I'm using about 30% of my capital because volatility is relatively low, but that's just me. Okay. And I'm looking to add some stuff because I need to make some money. I have bills to pay, Jenny. And so in the interest of being more aggressive. And so I also, in fairness, I took some off before the show. So took some stuff off. So the numbers may be a little bit lower than it normally is. But what I would do is, if you want to increase your size for whatever reason, because volatility is higher, the first thing I would do is look at more expensive products. Okay. So one of the things I know people like to do is, when you're starting out, is to use relatively low priced stocks like Ford, right? Or, IBIT or whatever, right? Yeah. It's the margin requirements are smaller, so I can experiment with a naked short put and I know, we don't like to talk about WBA, but Liz hates Walgreens. I get it. We can talk about WBA with you, okay?
Well, here, I'll pull up Intel, because Intel's something most people have, and even smaller accounts. Like my son has short puts in his account. Look at it, up 10% today. That's bonkers.
I sold
on the move.
Yeah, I sold a put in Intel, and I think I took it off already. But my point is, you can start off with small products like this. When you want to start taking it to the next level, look at Netflix. Okay.
So like here, for example, you're getting $1 and using 350. So you're getting $100 and using 350. But
on a $20 stock, right?
But if you're
trying $21 stock.
But you don't want to do, 50 of these if you're trying to, scale up to a larger account.
Right. So pull up Netflix. right?
Okay.
Which is $1,000. Okay. So I can go out and 10% away is what's the 900 or even just the 925, 900.
900, you're getting almost $500.
Yeah. So my buying power requirement is much higher. It's 30 times higher, but I'm collecting a much bigger credit.
Right.
So I don't know. You may not necessarily want to go into something that's 50 times more expensive, but this is what you do. You go into bigger products maybe sell verticals on it. Coin
Like your coin, I pulled up
271.
coin. There's a lot of premium in coin. You want $500 in coin, you're at the 215 strike, and that's
right.
Whoa, that's using 15,000.
Yeah, and what I would do is I'd buy the 205s. Turn it into a 10 point. And just look at that, Jenny. So
you know what? It's got to be crossing with some of my other positions. I don't think
yes.
That
so
much.
pull up Nvidia. Nvidia is another expense. Or how much is Nvidia?
Yeah, 133.
No, because they split. We'll do
But
NDA.
still, you can get bigger credit. So here's $400 using 4,000.
Yeah. Right. Right. So that's the first step. That's the first step is look at bigger products because, Jenny, option prices are linearly related to the stock price. And I always have to practice saying the word linearly. Okay. So it's a straight line. So if I take a NVIDIA, okay, $134 stock, if volatility is the same, okay, if volatility is the same, days to expiration is the same, if I look at a 10% out of the money put on a $134 stock, it will be 10 times bigger credit than a 10% out of the money put on a $14 stock.
Mm-hmm.
Okay. So if I compare NVIDIA and, I don't know, Ford, what's a $14 stock?
Oh, maybe Snap. I think, what is Snap?
Oh, Snap, maybe.
Well, I guess it's only $10, but still
But that's the idea. Or you could compare Snap and Netflix. Okay, do this exercise. You don't have to do it live here, but this is the exercise. Is even though the volatilities are different, a Snap option is going to be 1% of a Netflix option. Okay, so if I go 10% out of the money, I'm looking at the 9 put. I'm collecting what? 12 cents. Right. If I look at a Netflix, 10% of the money, it's how much am I getting?
And you go
the
Netflix,
900 put.
The 900 was 400 for something.
Yeah, so I'm getting a much bigger credit, and because volatility is higher in Snap than it is in Netflix, that's the difference. But that's how you increase size.
But a good point that comes out of this is that smaller, we always say it's harder to trade with less money, right? It's harder to trade with smaller accounts because you are trading the lower price products, which I like. You're trading the lower price products, but your strikes are not 10% away. Your strikes are closer. So your short puts to get any credit are closer. Whereas when you move to those bigger products, you are getting further away. You can get 10% away. So 10% away in 38 days, that gives you a decent amount of room.
And so making money trading is never easy. I don't want to say that. Okay, it's not. It's work. And you have to get good at it. It's a skill that you have to get good at and keep practicing. But when we say that it's easier to make money with a big account, what I mean is that the target profits come sooner on a big account. So it's easier to make $200 on a big account than it is a small account. Mm-hmm. Okay, for obvious reasons. And it's not so much that you're still working, you're still taking risk, you're taking bigger risk maybe, but the profits come sooner. The P50 number, which is what I look at a lot, So in other words, you have a trade in there selling the 900 put that has a 94% probability of making 50% of its profit before expiration. And typically that 50% comes in the first like 15 days. Okay. So I might be able to make $230 on this trade, Jenny, by holding this put for about a third of the time to expiration.
Now,
Right? Go ahead.
Do you think if you sell puts in something, if you've got an account and you're selling puts in something, should you look at, okay, if I had to take this stock, could I afford to? If I had to put, if I had to take this stock, could I afford to? Could I afford to have $50,000 tied up in this trade? Because otherwise, if these puts turn into a loser, you're just taking the loss. Like if you can't afford to take this stock and hold it, if the wheels fall off, then you just have to take the loss.
That's exactly right. And that is a data point that you should factor in. Okay. I wouldn't necessarily, if you have a big enough account, if you've got $1 million account, you can afford to buy 100 shares of Netflix. But it's still something that you should be aware of. In other words, do I want my capital requirement to blow up like that?
Right.
Right. Do I want to use that much capital, but owning stock that I never really intended to, but a trade went against me and now I'm stuck with the stock? Right? Which leads to another point, Jenny. Make sure you can sell calls against that long stock. That if I sell the put, in worst case scenario, buy the stock, are the calls liquid enough? Are the options liquid enough that I can manage them aggressively, right? And be engaged with it?
Now, I had a friend who kind of got into a little bit of trouble, which I like to always make people aware, make our viewers aware, like there is risk in these trades and you've got to keep your size in check. And I used to tell him, make sure your account could handle it. If your goal is, I'll keep selling these puts, and if I have to get long, then I'll just get long, and then I'll hold the stock till it comes back, even if I have to hold it for 5 years. That's kind of his thinking. And he was selling puts in Tesla, and he was doing really well. And this all started during 2020. So like during COVID, and I don't even know if I'm going back that far. I'm not even really going back that far.
That was the old days, Jenny.
So
it's like 5 years ago.
Okay. So here we have 2021. So during COVID, selling puts, it was wonderful. And then maybe, can't remember exactly when, but because it seemed so easy to him, he was like, oh, this is just free money. He kept selling more and more and more and more and more, and got so big that when Tesla had a big fall, he couldn't afford to take that stock or carry that stock, and he couldn't afford to keep his position going. And so I think that's where I caution. Because sometimes when it's going well, you think, oh, I'm going to just add more to this and add more to that. You have to be careful.
And you think you know everything. You think you have Tesla locked down. Okay. You think, oh, I can ride Tesla. This is how I'm going to make enough, FU money. I can live off of this for the rest of my life. No, you can't. I mean, I hope you can. Okay. I really like it when people make money trading. Okay. I really do. But when you're doing something like this, it's almost like, dude, eventually it's going to maybe not work. So make sure you have something else to trade, right? If you're making money in the Tesla put, great, good for you. But look around at other stuff. Don't load the boat on Tesla. So and this is why the question you asked, can I afford to own the stock? One of the things this is related to is Liz and I talk about this a lot. What's the minimum account size? Yes, it's $2,000, and we encourage people to just start trading even with small amounts like $2,000, $3,000. But once you get over the $25,000 threshold, you escape the day trading rules.
Right.
So that Yeah, if you have to get in and out of a stock position or an option position, because like Jenny, we were just talking about, I'm hit with my Netflix or Tesla, I've been assigned Tesla stock. Maybe I want to sell it and reestablish it or something like that.
Mm-hmm.
If you don't have $25,000, each of those in and out trades, even with option spreads, so it's, trading a vertical is 2-day trades.
Right.
Okay.
Well,
Buying a vertical.
like if you have $25,000, you shouldn't even be selling puts in Tesla. Like
Right.
that.
Right. Okay. Yeah. So fair enough. And just saying, once you get over that threshold, you don't have to worry about day trading as much. So that makes life easier. But the second point is, if you think if you get into a margin call where you have to sell where the trade desk says, hey, you don't have enough money to cover your positions, that can be scary. Okay, you don't want that to happen, and so it can really set you off from trading if you're kind of new still and you get a margin call. It's like, oh my god, what did I do?
Well, and I think it happens. It happens with smaller accounts because you said you have 30% of your account at use right now, 70% not at use. You're not getting a margin call. My son, who started when he was 18 with a $5,000 account, he's had margin calls because when you've got a $5,000 account, you have almost all of it at use, right?
Yeah.
And then something happens and it's like, oh, margin call, or I have to, close all these positions, free up some buying power here.
Right.
It happens with the smaller accounts.
So to the point about when you're ready to increase size, yes. In other words, don't just increase. Don't go from 1 to 10 to 20 to 50 puts in Ford. Don't do that. Look at other products. Diversify. That's how you diversify. Diversify not because they're like correlations and stuff. Diversify across volatility and days to expiration and strategy. That's how you increase your size. Because really
commodities too, and like you said, the bond trades and
thank you.
And so you have lots of different positions that aren't necessarily correlated.
Because what you really want to do is not so much to increase your size, but increase your capital utilization. So if I have $10,000 and I'm using, using $5,000 of capital of it, buying power, and all of a sudden I get a, $100,000 check, what I want to do is increase the buying power requirements. It's not so much increasing the size as it is using up the capital. I want to go from 5,000 to 50,000. How do I do that? Like you said, Jenny, go into some commodities. Sell a strangle in corn. Sell a strangle in, British pounds, right?
And
look at other stuff.
So a lot of people would say, oh, well, with the money I'm not using, maybe I will go buy some dividend paying stocks and put collars around them. But is that something that never crosses your mind?
That would never cross my mind. So using up the capital just to buy stocks and then collaring them, no. Buy the vertical, and if you're bullish on that stock, buy the vertical and look elsewhere. If you want to use some of that to build a dividend portfolio that you're going to hold for 30 years, okay. But maybe instead of buying the stock, maybe start out by selling at the money puts.
Until you get the stock.
Until you get hit.
I'm going to pop into Twitter just because I want to see if we've gotten any tweets coming.
Hey, how did the bathroom go?
I have to go back today, TP. Today, I have to finish today.
Jenny, the pressure's on.
The pressure's on. I have to finish today. I'm hoping I finish it. Okay, this is from McLight. McLight, welcome. Any advice for credit spreads? I usually sell the 30 delta, but seems like I always pick the wrong side.
So if the question is, you're selling what he's talking about is going to the 30 delta put, for example, bullish on the stock, pick a 30 delta put, and then look for a put to buy that would generate a credit 1/3 the width of the strikes, right? Or maybe that's it. But when volatility is low, you get, and we can look at Tesla. Let's look at SPY. SPY is easy. SPY
I
is
just
easy.
pulled SPY. I don't have a position in it. If I go in 30 Delta put, and I know from on the road, Tano, we've met, he's been on the road. He's been to our shows. He's been a part of Tasty Nation for a long time. He taught his kids how to just sell put spreads in IWM. They just sold put spreads in IWM, and those kids were killing it.
Right. And so if you go and buy, let's say the 589 put, just to get the ball rolling, 2 points, I'm only collecting 40 cents on that. Okay, that's fine. But with volatility and I still think 16% volatility in SPY is pretty low, right? Mm-hmm. Those 30 Delta puts just don't give you enough credit. And I think the question is, he says, I'm always picking the wrong direction. Okay. What it seems to be, there's another way of framing that problem, which is saying, I'm not getting rewarded enough for taking the risk. Okay. I'm going to be wrong on trades. I'm wrong directionally on a lot of trades. But I can still make money if I collect enough of a credit. Mm-hmm. Okay. So, we talked yesterday about Ulta. We talked yesterday about AMD and how I'm getting crushed I'm losing money. I'm not losing a huge amount of money on an AMD put spread. But because I collected enough credit for it, the loss isn't that big, and I can still make money on the trade if I get a little bit more of a rally.
And honestly, I don't know if you followed the rule with spreads that close at 21 days, but I do like that. Like here, I pulled up a $10 wide in IWM. Maybe this was similar to what Tano taught his kids, where I have the short 30 Delta. I mean, at $10 wide, I'm getting 182. And I know my risk is 818, but if I don't close this, if this doesn't close for 50% by the 21-day mark, at 21 days, this most likely is not going to be an $800 loss.
Correct.
So,
correct.
I like the idea of closing at that 21-day mark and putting the new one on at your 45-day mark.
And so the question is, I'm always picking the wrong side. I think what you need to do when volatility is lower is collect a bigger credit.
Collect a bigger credit. Oh, so when volatility is lower, or would you say find a product where the volatility isn't low? So if you're not getting enough on a SPY put or volatility low on a SPY put, take a look at a ZN put spread, or take a look at oil, or take a look at something else, natural gas, or something that where you can find that vol.
Yes. So I don't want to say you're doing anything wrong. It's just sometimes you just have strings of losing trades. It happens. It's like
that's true.
Yeah, you have crappy months or crappy quarters. I've had them, and this month, January, was great for me. And is it because I was such a genius trader? No, it's just the stuff worked out. Right? I just kept putting on trades and high probability, and the probabilities worked out for me, and they're working out so far in February. It has nothing to do with me. Okay?
Well, I do think nowadays we are, and I had a really good January too, but I'm taking my profits quickly instead of saying, oh, I'm going to wait for more. And today they had a study on VIX and trading the VIX and trying to make money on volatility or VIX, or waiting for a down move to get out of it, which I'm going to write that down for Thursday, a discussion on Thursday, since you're the volatility expert. After I may look into the study they did today. We have so many viewers who want to trade the VIX, who want to buy call spreads, who
love the VIX,
and want to get into it, trying to make money on a boost in vol. But I think that's a challenge. I think that's a hard trade unless you just get out when you can and not hold on and wait for some miracle.
The VIX, you have to pick your spots. And if you want to talk about Thursday, how to find those spots, yeah, we can talk about that. One thing I do want to get up, Mike Motka saying the Polish Warrior trademark pending. That's an awesome trade, Mike. Let's hear it for the Polish Warrior.
He did it again today. He did it again.
He did it again. He's a machine. The Polish Warrior is a machine. I think what he should do is create some Polish Warrior merchandise, like coffee mugs and T-shirts, and like having his face on the body of one of those 17th century flying hussars. Like they had those Polish cavalrymen with the wings on their backs, and it looks like they were flying. Those are Polish guys. So I'm sure Mike Namatka knows about this. So he should superimpose his face on one of those old flying cavalry guys.
I love it. So, TP, as far as earnings today, I just want.
What do we have? What does Bob have?
We're out of time, but I do want to let people know, I think we have of all of these earnings, I think we have an SMCI position. I'm just going to double check. Yes, SMCI, we're long the 36 call in the 10-day, short the 43 call in the 3-day.
Do you have something in Hood? Do you have something in Robinhood?
Why does that?
They're coming out with earnings.
Today too?
Yeah, they have earnings.
We're just we have a bearish trade in Hood. A viewer wanted us to put on a bearish trade. You know what? They're both defined risk. I'm just gonna let them go through earnings. They're not worth too much. This SMCI is worth 365. Our Hood is worth 230. They're defined risk. I'm gonna just let them go through earnings, and we'll see what happens. We have a lot of defined risk, a lot of diagonals, just because the vol's been low, and we don't want to have too much risk on. And we've been doing really well. We had a good January here. So I'll just leave those. I did get a message, breaking news. Liz does not say pneumonia. She says she has RSV.
What is it's something virus.
Respiratory something virus, RSV.
Well, I hope she's okay. If you need me to fill in, I am always happy to do the shows with you, Jenny.
I'll keep you posted, TP. I mean, tomorrow you're off the hook tomorrow. I don't think I need you tomorrow. I don't think so. But Thursday, I think she has a doctor's appointment, but I will keep you up. I'll keep you posted.
I hope she feels okay. Liz, we're thinking of you. Get better soon.
I know. She should be laying in the sun in Florida instead.
I know. And I cannot fill Liz's shoes on this show. It's like I can't, it's like I am a poor substitute for Liz Dierking. So, Jenny, I'm sorry.
But people
I do what I can, but I'm no Liz.
People love you. If you have, I'm going to have TP on Thursday, I think. So if you have a question for TP, just send an email, jenny@tastylive.com, JENNY@tastylive.com. If you have an email, I could bring it on Thursday for TP. So TP, thank you again for joining me. Wonderful job.
You, Jenny.
You're a wealth of knowledge. Everyone loves you.
Thank you.
Everybody remember to trade small, trade often, laugh with us, learn with us, and watch the TP and J show. See you tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Me and Mikey, Valentine's Day.
HR.
Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So
started.
He was my friend first, clearly. Met at work.
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got a special guest with me today, Mr. Gus Downing. And if you want to come join us, hop over to YouTube, type in tastylive, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my new friend, Mr. Gus Downing. How are you, sir? Good morning.
I'm doing great. It's an absolute pleasure to be here. I've upgraded from a guest bedroom in Texas all the way to this nice office here in Chicago. So it's an absolute blessing. I'm excited about it.
If you guys have been watching, Gus has been on the Bad Trader Network for quite some time. He'll be on Bad Taste this afternoon at 4:30 as well with Errol. But Gus is joining us on the Tasty Live content side as well. I was going to ask you, what was your first impression of The Office? What was the vibe like?
Oh, well, I mean, I was blown away. I've been coming up here since we were in the old office, and I've been up to this new one time, and it's amazing. I actually have a hard time describing it to people now that I've started here and I'm in here every day. People ask what the vibe is, and I've had people ask what my cubicle is like, and I laugh in their face. It's amazing. It's such an open concept. Everybody has been so welcoming. To everybody at home, these people off the network are really as nice and cool and lively as they seem while they're on stream.
Oh, come on. Come on.
It's amazing. It is not just an act, and yeah, it's been awesome. The transition's been great. It's cold. I'll tell you what. I know we have some friends in chat down south, and do not take it for granted. I'm dying up here. It is no fun getting out of bed in the morning to walk out into 22 degrees, especially when my parents are sending me nice pictures of them outside in their shorts on their evening walks.
Were you prepared for that? Did you have like a proper winter jacket, or?
Yeah.
Okay.
I have one. You've seen me wear it into the office every single day. I need to expand my holdings on that front a little bit, but I have one nice black Tommy Hilfiger puffer, and that's it. It's been carrying me to this point. Maybe 2 stocking caps, something like that. So not a whole lot, but I was braced for it. I grew up in Cincinnati. I'm used to the cold a little bit, but the blood is certainly thinned back out after a decade in Texas.
You'll get used to it. I wanted to ask you because, I mean, what do you look at in trading? You're a younger guy, so Tom says that I'm like an old guy now. I used to be a young guy. I'm the old guy now. What would you say, like, what do you look for in trading? What are the things that, like, pique your interest? I mean, you know, are you more news driven? Do you like technical analysis? I know you trade a little bit of options too. We have Gus on the follow page, so you'll be seeing trades from Gus, as well as Errol's been on there for a while too. But, you know, just kind of what's your style? What's your thoughts on markets? You know, give me your view.
Yeah, absolutely. In terms of trade discovery, I really like technical analysis. I would say that that's my bread and butter. I have my scanners built out, and I'm looking at charts on a day-to-day, trying to find good bounce spots, resistance lines, things like that. In terms of my trading style, I would say I'm certainly risk-seeking, which has burned me in the past, but I'm highly speculative, as I think a lot of young people are right now. And I'm not afraid to put some risk on if the reward is high. I'll do naked options from time to time, and it doesn't scare me. And since being in the office, it's been great to be around all this higher level knowledge and absorb some things. And already after just a week, I'm reeling back a little bit on the risk. I'm doing some covers and things like that. But TA certainly is my bread and butter. It always has been. I really like it. It's easily replicable. You can do it on any day, under any conditions, as long as there's a little bit of volatility. There's things to trade.
We got the people saying that. But yes, Mike's hairline has gotten much better and much thicker over the last couple days. The mustache does hit a little different. It's the nice one he's got. I tried. I don't think I have the look for it. You got that strong look for it. I love it.
Oh, hey, your beard connects. If I could do the full thing, I would do it. But it's patchy everywhere but here. It's the only reason I just have the mustache.
Hey, we all have our flaws, right? Of course. Just to give a quick little market update, we'll get into the chat and see what kind of trades we can get on and talk through, some of the things that are happening today. We've got E-mini S&P 500 futures are down 14. We had a little bit of weakness in the overnight session. If you were watching, the E-minis got down to 60.57, about another 20 or 30 handles from here. But we've certainly been bouncing between this 6,000, 6,100 mark. Whole lot of binary news over the weekend, tariff here, tariff there, you get a tariff kind of thing. That's been happening throughout the last couple weeks. So, no shock that we've been chopping around here. The NASDAQ actually down 113. It's the weakest of the group, I guess, with the Russell. The Russell down 18 and change here. The Dow basically unchanged. It's kind of interesting because you have a little bit of two-sided action in the Mag 7s. You have Apple, $7 and change to the upside. NVIDIA was unchanged when we got into the show. It's actually down $2, but has had a strong bounce back. Meta, I think, is going for day number 17 of green bars. I think that's what it is, 17 or 18. One of the longest stretches I think we've seen. It's down a couple dollars right now, but has been super strong. You got stuff like Google in the dumps and Amazon in the dumps as well after earnings. And then Tesla, the biggest move to the downside of the group, down 16 and change. It's been kind of a free fall here back to the 300-ish handle. So definitely a mixed bag in terms of the big name stocks that drive the market here for today. Oil up 92 cents /CL 73.24. We got volatility futures actually up 3 ticks. They were down to 16.55, so they're down 20 or 30 cents in the early part of the session today. Bonds down 19 ticks, so you got those rates expanding. We did, and by expanding I mean going up, because bonds come down, rates go up. We did have some Fed speak today. I know J-Powell was speaking to Congress about God knows what, but that seems to be moving the bond market a little bit here to the lows of the session. You've got gold and silver both off the highs. Gold was up like $30 or $40 in the overnight session. It looked like it was going to be a face ripper above 3,000. I don't think 29.68 was the high of the session in the overnight. Silver down 18 cents, which is typically a bigger move to the downside in silver versus gold because you get that higher beta. And Bitcoin down $1,200 on the futures. Spot is down $1,800. We're at 96,000. If you missed our crypto segment yesterday, we had Ryan on. Some awesome info from him if you're looking for that little crypto alpha. In terms of trades, Did a couple trades this morning that I wanted to kind of just go through because I got a number of emails about some of my positions. So this morning we closed out of that Shopify crab trade that we had in this account, took a couple bucks out of that. Oklo was another one that somebody in the chat gave me, took about $100 out of that one. So that was a nice trade. If you held it just another hour, you probably are in an even better spot. So shout out to whoever gave me that one. I had a Shopify position in my Johnny Trader account. I've been battling since November. Shopify has been one of the crazier moves I've been in, going from 80 to 120. We had earnings the earnings this morning. It was like a $10, $12, $13 expected move. Stock has gone absolutely nowhere. It's completely unchanged. I remember sitting at the table with Gus, and we're talking about how Shopify was what, last six?
Yeah, there was a big gaps, the smallest among them, $10, the last 6 earnings calls. And here we are running sideways. I'm going to be joining the Shopify Hate Club right alongside you. I need to get my membership card going because if this thing burns me after all of those moves, these previous earnings, I'm going to lose it. However, we are trending down right now. I just need below 119. We've gotten below 120. We'll see. I have until Friday, and this thing does like to move sometimes for no reason. So who knows? But yeah, if we manage to middle this 120 to 122 and I take a max loss on a 13-point expected move or $13 expected move, I'm going to lose my mind. So that's
we're talking about how it would be gambler's fallacy or
hot hand fallacy.
Yeah.
You had to pick. I should have chosen gambler's fallacy. I chose the wrong fallacy this time around. So
that's actually a good segue because you mentioned, like joining the Shopify Hate Club. And I think as traders, there's products that you trade a lot that you just simply can't make money in. Like Shopify has been one of those that has been, a problem child for me. Thinking off the top of my head, Costco is another one. Baba is like the bane of my existence. I almost refuse to trade it anymore because I'm either on the wrong side of whatever the crazy face ripper is, which the stock is up, $20 in the last 2 or 3 weeks. You had some news with Apple this morning. Do you have any stocks specifically that you think back and you're like, my God, that stock is just the worst. Like, I hate that stock.
Oh, absolutely. Yeah. Delta Airlines comes to mind right away. I can never win on Delta, even though other airlines I've been profitable trading. Delta specifically, I got beef with. Tesla is something that I won't touch anymore. I've just gotten burned too many times, and that's years ago. I've had hate for Tesla for some time. I got shares in the long term, but beyond that, I never trade options on Tesla. And Boeing also to some extent, and especially as of late, as it just continues to move against news. Just today, Citi upgraded their price target from 207 to 210. They held the buy rating, and Boeing goes down. Julia and I talk a lot about Boeing moves and Intel moves. It's both the same thing. They seem to always move against their news, so you can never time up what's going on. So I guess throw Intel on the no trade list as well.
That's another stock. Intel up $1.53 right now, $7% and change. I think it got up to 21.88. I don't know if there's any news out on that, but that stock's been left for dead. I know Tom has been trading a lot of that as well. What would you say is your favorite stock to trade?
Well, for a long time it was AMD. AMD has fallen a bit out of favor. That used to be something that I could really read the moves on. These days it's a normie answer, but I've been gravitating towards the Mag 7 a lot, particularly Meta and Microsoft. I like Microsoft especially. I feel like it hasn't been talked about as much in the recent tech and AI circles, but big fan of Microsoft. It'll find nice channels for a long time sometimes, and you can just follow it right back up and down. Google used to be the same way. I found that I stopped having success trying to find good channels on Google. And again, obviously, I'm always holding the whole Mag 7 in shares, but yeah. So these days, it's more trying to find things that are in good channels at good resistance points. Patterns. I really like VWAP. I really like Ichimoku Cloud for general sentiment. So yeah, I use all those tools. But I find that actually, as I've continued trading the list of stocks that I'm comfortable with has shrunk as opposed to grown. I used to be, much wider. I wouldn't be afraid to try to play options on some of these things with real low liquidity, $8 a share or whatever it might be. And as I've grown as a trader, I've come to realize that you really don't need more than 25 stocks that you like to be able to make good money. There will always be something moving if you pick 25 large companies, and that's sort of the direction I've started to lean in now.
It's actually a great point because we get emails and questions all the time of like, how do you narrow down what you're trading? And, I want to filter out every stock that's got, over 100% IVR or whatever, and get these big baskets of potential stocks to trade. And I think as you trade more, you get, you gravitate towards the stuff that has the highest liquidity, that has changes in implied volatility, that, you can get in and out of, that moves, up and down and sideways, not the stuff that goes straight up every day or straight down every day. And, I think for me, and we looked at this actually last year when I pulled data on the follow feed, we traded within 268 different stocks, which is a ton. But it goes to show you that, there's 5,000 stocks listed. We're not the realm of trading in our style of trading is only a fraction of that. And, your comment is exactly that. I mean, the S&P 100 list or the S&P 500 list is one of the best places to go. So I would say the same exact thing.
Well, and you're talking about a whole team of people whose job it is to trade every day, and we're still talking about sub 300 stocks in a year. I mean, that's pretty crazy. You know how much overlap there is, and how
with
much
all of us.
Exactly. Everybody combined, you're not even at you're barely over 5% of all the stocks offered in the market. So it doesn't need to be as overwhelming as people think.
So what's got you giggling in the chat? I see.
Well, everything has me giggling. I saw lots of the mustache was well received. I appreciate that, everybody. H. Montero, to answer your question, the difference in gambler's fallacy and hot hand fallacy. Gambler's fallacy is this thing has happened a bunch of times, so it's due to not happen. Hot hand fallacy is this thing has happened a bunch of times, so it's due to happen again. You talk about it, if you've ever been in a casino, somebody will be pointing at the roulette board saying, oh, it's been red 8 times in a row. It has to be black this time. They're all independent events. That's why they're both a fallacy. Yeah. Gus Legit Bro, he clearly knows how to stonk from Stonk Messiah.
They're talking about your Tesla position, your pain in Tesla.
Oh.
It's a rite of passage as a trader.
Absolutely. The first time I actually played with some legitimate money in Tesla, I cried real tears in my bedroom. It's that stock makes boys to men, especially as it pertains to options. So agree. Tesla IV rank is 41. Oh my goodness.
I love it. Couple earnings today. There's one that's kind of been in the news, or at least sort of interesting. SMCI moving a couple dollars. It's actually up like $2 or $3 this morning. Something must have happened because a lot of these chip names, just looking at SMH, has now gone red. Yet Nvidia go from up $1 and change to down $1 and change. So something must have happened while we started this show.
Well, yeah, and SMCI. What are we doing with SMCI? Not 6 months ago, auditors were running away screaming, saying we don't want anything to do with this company. Somehow it's surged back. It's moving like something, relatively like a legit stock. We're back over $40 a share, I think. I can't make sense of this. What's the saying? The absence of evidence is not evidence of absence, and that's the situation we're in with SMCI. I think they got those paper shredders going once the auditors ran for the hills. That's my hypothesis, my opinion.
I agree with that. I remember when all that stuff happened, but you also had the inclusion in the NASDAQ, which, I was like, wouldn't that have come up earlier? You would think somebody would have caught that one and said, okay, something's a little fishy here.
Oh, yeah, I was rubbing my hands together. I was saying, we got Enron on our hands again. Let's go. Let's do it. And it didn't pan out that way. It seems like everything is above board. So, yeah, we'll see. But SMCI, been a fun one to watch.
Anything that sticks out to you that you're bullish on right now?
General sentiments, the 3 things that I'm most bullish on is love, weight loss, and gambling. I think that America's getting lonelier, fatter, more speculative.
You talking about me?
Hey man, me too. It's everybody. We got the data to back it up. And yeah, I think that anything in those 3 sectors is something I'm bullish on. I really love all these weight loss drugs from a financial perspective. We're still, we're as deep as we are into things. The demand still cannot be met. And so, yeah, the Novo Nordisks and Eli Lillys of the world have been recent strong additions to my portfolio. And it seems with these weight loss companies that all you got to do now, weight loss in pharmaceuticals is like saying AI in tech. As soon as you say, we have a weight loss drug, boom, 10%. It doesn't matter if the thing even works. So
I agree. It is definitely a hot topic.
So that's something that I've been trying to trade on a little bit recently. But with the pharmaceutical sector as a whole, I rarely try to time the market. It's scary. These people have bad lab results come out all the time, and it can just totally sink you.
Yes.
So, yeah, I'm generally bullish, but I have not been trading bullish in an options context on those things because the timing is hard.
Yeah, I think for like an MVO or Eli Lilly, and I think Eli Lilly had earnings in the middle of last week, I believe. Those two are certainly tradable from like what you were talking about with like the pharma space. When you get into these like smaller biotech stocks, XBI is ETF for the biotech sector. And you can look that up. Like I use etfdb.com, and it's just a site that'll give you like the makeup of the ETFs. But some of those stocks, you have super, super high implied volatility, and people gravitate towards those. And the problem becomes those stocks, the volatility is more than just a binary event. It's a complete unknown that can turn the company from, a company to nothing overnight.
Or the other way. Yeah.
Yes, it's not like an Apple earnings report where it could be not good and the stock might go down. These stocks have the propensity to, go away sometimes if things don't work out.
Exactly. Yeah. I just made good money overnight shorting Vertex Pharmaceuticals. They had earnings before open today. But I knew that was a spin on the slot machine. And in fact, I went to bed last night thinking, man, this Shopify trade is so brilliant. And that stupid Vertex trade is going to kill me. And I woke up $400 in the green on Vertex, and Shopify was right in the middle. So it's sometimes the market doesn't do what you think. Most of the time, the market doesn't do what you think, it seems.
What's your view on Tesla here? Because I had an iron condor. I legged out of the call spread. I'm now right at the money on a short put spread. Stock has come all the way down from, 420, of course, all the way down to 334 here in about a week and a half. I mean, is this a nibble to the long side? You got an IV rank of 46, monthly implied volatility in a 60 handle, super liquid, of course,
Well,
I didn't have anything. I have something. If you didn't have anything, it's gonna buy.
Well, if I didn't have anything, I wouldn't get into it. But if you put a gun to my head, I mean, I suppose I would have to be bullish at this time. I mean, it's just, Tesla's one of these weird ones, and we were just talking off air yesterday about how things will just rapidly move regardless of what their valuation may be, and Tesla certainly is one that falls into that category. I would have to say I think it's oversold at this time, but like I said, I don't touch Tesla with a 10-foot pole. There's no reason it couldn't go down another $10. I'm trying to get situated with some charts here.
Yeah, Tesla, I have some long delta, so I'm leaning with that position. I think I agree with you in the fact that if you've been looking to get some long delta, this is a very interesting spot. Volatility is super high too, so you can do an iron condor. If you got a little bigger sized account, you could go into strangle or something like that.
Yeah,
as well.
I mean, purely technical perspective, maybe some resistance around like the 310 range, but honestly, this thing could be in free fall. I mean, we're fully through all my indicators here and falling on the one day and the 12 hour.
Trust, man. You can't fade that.
It's true. It's true. Especially with how close he is to the government now. It gets harder and harder. I mean, yeah, who knows when all of a sudden the news breaks that Tesla gets some crazy government subsidy to try to go greener or whatever. I feel that's why he's in this position, at least from his perspective. So, yeah, it's scary. Can't fade Elon. I agree with you. He's Mahomes. He's Mahomes. He's going to lose sometimes, but fade him at your own risk.
Dronin looking at Wingstop, a put ratio spread. Okay, you're doing 2-by-1, so we're short the 270s. Okay, so 260, 270. See, this is one of the stocks. This gets into the fringe of the 100 or so stocks that I trade. I don't think I've ever traded this one, so this would be a new one to my list. When I look at this, one of the things that I look for in overall liquidity is you want to see at least 1 million shares traded a day. We're not really there, and you got earnings coming up, so it should kind of be ramping up. But when you have when you look at the options, when you have no weekly expirations, it's a dead giveaway that there just isn't a ton of activity in that underlying. If there are weekly options, it means that there's market makers that are making markets on a lot of different time frames. It's a simple way to just kind of weed out stocks. So this one is probably not the most liquid, but I'm interested in the idea that we have here. So it's a put ratio. I would defer. So in something that's not as liquid, instead of doing a naked position, just define the risk. And then you don't have to worry about the illiquidity. Obviously, you could still lose on the position, but rather than have a naked position that falls out of bed and you can't get out and the markets are wide and it's a big pain, define the risk. So you're looking at the 260, 270 put ratio in Wingstop. I would go and I would just define the risk by the 240. You're going to do this for a small credit, hopefully, but at least if the stock falls out of bed into earnings, you won't get too hurt here.
Yeah, these spreads aren't too bad. I was expecting worse. It could be better.
Definitely. I mean, they're a dollar wide, which, is not horrible for a $300 stock, but you could tell that this is probably a trade by appointment type stock. I'm going to put this in at 35 cents. I'll see if I can. I can't even. It's set to closing only. Okay, so won't be getting into that one. My bad, guys. But we'll go to Marriott, which also has earnings after the close today. What are you thinking in there, Drone? And you didn't give me strikes. Got any read on any of the hotels? I mean, has Airbnb fallen off?
I mean, I don't know. Airbnb, that I think that they seem to be building up, but there is increasing regulations and squeeze being put on them in these big cities about the short-term rentals. Yeah. I don't know. I've heard things about Vrbo has a workaround. I can't speak to that too much. I haven't dove into depth on that. Somebody's mentioning the Piton debacle about 3 years ago. What's the story on that? You care to? I'm not Peloton. I'm not familiar.
Oh, for our trade.
Yeah, your trade. Nobody trades naked anymore because of the or undefined risk anymore because of the Peloton debacle about 3 years ago.
Yes, that was
8,000%. Holy cow!
I don't know the exact percent of that pain, but it was a painful trade. I mean, this was the height of the pandemic where Piton was going.
Yeah, very
to the moon. I mean, we got up to 170, and in this range, it started to be like a strangle or short put selling stock. I mean, you had super high implied volatility. It was kind of the big name stock at that time, and I think all three of myself, Mike, and Katie got into this at some point, and it was all of us. Like that was the top at that point. And I know Mike held this. Mike got a little stubborn with the position and held this significantly longer than he should have. Turned it into the original bag that he would hold for about a year until he capitulated out of that. So we've avoided the FOMO to get back in. Don't trade it anymore. It did just have earnings the other week, so. And the stock is up. So if you did hold on, you made back a couple dollars, but it was certainly a painful trade.
Yeah, I'm being told Mike sold a 130 put and covered out around 30.
Yes.
That's crazy.
Yes.
Wow. Well,
that's the tail risk that you're going to catch once every couple years or a couple, when you're trading 2,000 or 3,000 times a year, and you should expect to have those sort of tail events that happen, like the Shopify trade that I closed in my Johnny Trader account. It was a $1,000, $1,500, $2,000 loser at one point, and it was a battle back. And not all of them are going to end up like that. Like the Peloton trade, stock goes from 130 to 10, you're dead. Like there's just nothing you can do about that, and that's going to happen. There's going to be stocks, that you trade that go away that are going to be big losers. And it's another key or another reason why trading small is such a key. And we talk about it all day long of trading small. The Shopify position, if I had 2 or 3 contracts, I would have been squeezed out of this position, a month ago. But if you stay small enough, you can battle them. And hopefully, those couple tail events that you see, 1 or 2 of them, you get back to a scratch, because that's a huge value game. You're always going to have one that goes to complete, nothingness. The 2 or 3 that you can get back is a huge value add for you over time.
Exactly, yeah, and I think that's a great lesson in risk management as well, is about making sure that you exit those really failing positions such that when you finally do catch one to the upside, it doesn't completely, cancel everything out. It's something that I talked about. A big struggle throughout my trading career has been a great. More of a propensity to hold my losers than hold my winners. Something can be down 40% and I'm seeing the path to recovery, but as soon as something gets up 20%, I want to get out. So, defining those values clearly and making sure that you're able to take advantage of those upside moves when they happen is a big one as well. Because, when you lose 8,000% one time, I don't know a trader in the world that's going to hold something until it's up 8,000%. It doesn't happen. So, it's harder to recover the big losers.
Yeah, you see, everybody's with us. Who among us has not held a bag? This is a rite of passage. There's tons of places that you can watch people talk about all their winning trades and never have losers. But the real traders have losers. It's for sure part of the game. I mean, if you watch Tom all morning, it's all losers. I mean, come on.
Absolutely. I think it's hilarious when I see an Instagram guru talking about an 80% win rate. It's like, no, you don't.
No.
You are so full of it. Got a sweet chin music, them losers. It's true. It's true.
A couple more earnings there after the close today, because we're getting towards the end of the earnings season. You got Upstart, Dash, Lyft in there. Lyft has been one where we've traded it a couple times. It's a low price stock in the Snapchat realm where I feel like there is upside potential or upside risk of some, your risk to the downside is defined at $10, $15. But if Lyft were to come out and have some sort of partnership or buyout, I think it's an interesting play to the upside. Do you have any view on Lyft?
Yeah, I might make the Shopify mistake again with Lyft, Nick. I think I might do it. That's something else I have in my notes here. We 5 of their last 6 earnings. Again, we have these big gaps, and they've beaten in all 6 of those cases. And honestly, I think the gaps make sense in that case because who would ever guess Lyft is going to beat earnings? The true story. The last time I was in a Lyft, the driver asked if it was cool if he smoked a cigarette while he drove me to my destination, and then he took me to the wrong place, and I had to give him directions verbally to get me to the actual correct destination. I haven't gone with Lyft again since then. But yeah, that's my Lyft experience. And as such, I wouldn't expect Lyft to be beating earnings the way that they are. So I am expecting a move. I think that you make a good point about your downside risk is much more defined, especially with the stock around this price. But Lyft, I don't know. They seem to be a buyout candidate to me more than something that could really survive in the long term.
I'm going to do a little Johnny naked put. I'm selling the 14 strike put in March, 38 days to go till expiration. If we go down below that into earnings over the next 30 some odd days, I'm going to take stock, start selling calls against a little wheel strategy to get something on there. Just a little engagement trade because I don't have anything on in there currently. So I'll figure get just a little something on.
Yeah, this does look bearish by the technicals, but obviously news and earnings always override the technicals.
Mm-hmm.
Looking at short condors here.
Do like an iron fly type trade, like if you think just kind of sit, in this range. You do something like the 14, 15 for the shorts. And then you can define your risk as you see fit. Like if you want to define the risk, it is a low price stock. So your margin requirement here is very low, at $250. And even if you sell this, this straddle / strangle at $2 and change, your break evens are going to be at, 11 and 17. Obviously things can go wrong.
Things can go wrong.
There's no free money here. There's no free lunch. But it allows for flexibility. One stock that I trade a lot like that is DraftKings, which has earnings today after the close. I included a trade in the cherry picks, which will be coming out later today. We're looking at like leverage products, and we're and just kind of the problem with them. We were looking at one that is specific to MicroStrategy, MSTU.
I'm all too familiar with MSTU.
Are you? Did you dabble in?
I have dabbled, and I actually think I've only made 2 trades, and I think I'm profitable across the 2 of them. But it's a roller coaster. It's leverage anything, and particularly leverage MicroStrategy is crazy town. Strategy. My apologies.
Strategy. The new name. Come on, get it right.
Don't dead name. Well, yeah, strategy.
Yes.
They said we don't want any SEO.
Yes. But yeah, so those will be in the cherry picks coming out later today. DraftKings,
you talked about gambling being the big thing. So you got to be, I mean, Mike and I have leaned bullish for quite some time, but we've done it, when and this will put me on another rant too, because when we talk about option trading and you say, oh, I'm bullish something or bearish something, people think it's a binary, right? Like I'm bullish, so I'm like long delta and I just need the stock to go up. And if the stock doesn't go up, I'm a loser. With options, you can sell puts and strangles and, you can skew your directional bias to some direction, but you don't necessarily need that to happen. If you sell a strangle that has slightly long delta, you don't need the stock to go up, but if the stock does go up and volatility comes in and time passes, all those things kind of help you. So when I say I've leaned long DraftKings, I mean that I've been selling puts, I've been short 2 puts to 1 call, I've had Jade Lizards on, I've taken stock and sold cover calls. So I've played it to the upside a little bit, and I continue to do that as well. It's one of those stocks like when we were looking at Lyft where you can sell $2 or $3 worth of premium here and only use $500 or $600 in buying power. It's a very interesting, smaller sized account trading vehicle.
Absolutely, yeah. And I think it's also interesting as an options trader that you don't, your general sentiment does not have to be your sentiment in the shorter term. I mean, we both will take weeklies. I'll occasionally throw in a 0 DTE. And when you do things like that, I can be bearish on something today that I am bullish on long term. And many times I've taken some kind of short option strategy to a profitable point, sold it, and then grabbed some more shares on the dip. That's also, a logical strategy. So there's lots and lots of ways that you can structure things. And, I think it's funny. I think so short term. I have general sentiments, but sometimes people come to me and say, "Oh, what do you think is something that's going to explode next year?" And I'm like, "I don't know. I don't care.
I don't know what's going to happen tomorrow."
Exactly. That's not my job. Yeah, I need to think about what might happen overnight, and that's about. I mean, obviously you think further ahead with longer positions, but yeah, the micro matters.
We got people calling out that you're too logical with it. You have to get a little bit more degenerate.
Yes, I was Googling at those earlier. Yeah, level 7 is the same as level 0. It's just exactly what you were doing, and it's stupid, but you don't care anymore. Lyft, we give you memorable experiences. Sergio, hello, I am Gus. Nice to meet you. I should be around a lot more here soon.
Another stock I was kind of poking my head around was SMH. It's the semiconductor ETF. It's one I've traded a couple times. Has come down a little bit. I mean, we obviously had the NVIDIA tanking news that sent it down, but it's stayed pretty range bound. I think it might be an interesting spot for maybe a little iron condor, get some short premium on it. IVR isn't super high. I've played this to the upside a couple times, and I think a little short premium here might be the fix. When I start these trades, I like to go somewhere around a 20-ish delta for the short options. So I'm looking at the 230 and the 270 strikes, and then I go depending on your risk tolerance, you can go $5 wide, $10 wide, 15 if you want to do a little bit wider. I like to go about $10 wide so that you have $600 or $700 in risk. I think it's a good spot to be, and it trades at just about 1/3 the width of the strikes at about a 60% probability of success. It's all lining up with kind of our mechanics just from the perspective of a little bit of technical analysis. And I got my little moving averages on there. I got something, right? I'm in. I'm not in the boomer realm, okay? I got something here. It sets you up with pretty much the range we've been trading in, 230, kind of the low, 270, the high.
Yeah, I was gonna say. I mean, yeah, you're hitting the nail on the head with that one. Yeah, 235 to 260. Even if you want to get a little more specific, it's gone up here and touched 270. But this 235 range is really strong support. It looks like. I mean, since November.
Yeah, my thinking's exactly. See, it's good when we're on the same page.
More room to the downside too. I agree with that. I'm with it. I'm going to tail. Post that in the follow page so I don't have to put it in myself.
There you go. I will get that on right now. Let's see. There you go. It's in.
Sweet.
So a couple other trade ideas in the chat. Oh, we got a WASD today. I know. I'm sorry, everybody, for the corn man. I wanted to have Gus on today, but we'll bring Westwater back as well later this week. But he's got his trades on the follow page too, so you can check those out as well. Just taking a look at some of the movers in the S&P 100. I mean, we get that question all the time of how do you pick what to be long, short, sideways. Using one of the watch lists is a good way to do that. I like to look at just like what stocks are moving. I've already got a Tesla position. I'm leaning long into that. PayPal's another one that's having a big move to the downside. This one had earnings the other week, kind of down in the dumps here, 24 IV rank. This one might be an interesting little. Do you use PayPal? Are you a PayPal guy? Or?
I'm a PayPal hater. I am.
Why?
Not even in a financial context. Just the service itself. I've had no shortage of problems with them over the years. When I was I don't know, 15, 16, I had a very successful eBay store, and I made over $10,000 in some amount of time. And
Can you say what you were selling?
It was vapes. is the answer. I was underage selling vapes on eBay at the time. I guess the statute of limitations probably gone, but so I was doing that, and I made like $10,000 in a 3-month window or something. And they needed me to register as a business, so they had me submit my ID. And because I wasn't 18, they lifetime banned me from PayPal, and they locked up all my money. There's like I have $3,500 or something like that sitting in a PayPal.
I will not support PayPal.
I've tried to create other accounts, and they get me like they'll get my social or whatever and track me back down. So yeah, I hate PayPal as a person, and I'm banned from PayPal as a user. I can't even do it.
So then I will not support that.
But it has, in a financial context though, it has just lost a lot of prominence. There's been competitors entering the market. I remember 10 years ago, it was like PayPal was the way to pay for things online. And now you have, the Stripes and the Plaids of the world stepping in and filling that role. A lot of companies just moving into proprietary stuff. Shopify, which we already talked about, has their own payment systems. Square, yeah, another good one. So yeah, I don't know. I don't necessarily think it's over or undersold right now. But I don't love it long term. Though again, are you going to fade Elon? He doesn't have anything to do with PayPal anymore, does he?
I don't.
Does he still own it technically, like on paper? Or, I don't
know.
If he still owns it, I know he's got people for it.
I think he sold out of that to start. That was how he funded everything with Tesla.
Yeah, Tesla. I think so too.
So I think he's out, but I saw him.
I know he's doubled down a lot with all of his stuff. You can't trust someone that says, "Oh yeah, PayPal me." Exactly.
That's true. It's Venmo now.
Yeah,
Venmo
Zelle.
is the verb. Or you go Zelle?
Oh, Zelle, yeah. Zelle is. Why would I want it somewhere else? I just can take it from my bank account and put it straight in theirs. It's great. Venmo and Cash App, you got fees and all this stuff if you want an instant.
Oh.
They're helpful.
I'm a Venmo guy.
I have Venmo and Cash App, but I prefer Zelle, especially if somebody's paying me. They don't call the founders the PayPal Mafia for nothing. That's sharp.
A couple other stocks have been moving too. You got Uber to the upside. Maybe that's a good omen for Lyft, which has their earnings after the close today. But I know Uber had a little bit of an investment from Pershing Square.
Oh.
Yes.
It's pretentious. That's a really pretentious name.
Yes, it is.
I love
Bill Ackman.
Yeah, I love a holdings corporation that's super pretentious. They just spit on you. We have more money than you. It's awesome.
Oh my God. All right, so no PayPal. We're gonna avoid that one.
PayPal, pay me.
Looking to get a little bit of short delta here. Maybe in I was thinking something that's up a little bit today. The bank stocks have been super strong. What's your view on markets overall? I think we chop fast here. We've kind of got a lot of the catalysts out of the way. You had all the earnings that are done. Volatility is super low. You usually have that kind of extra volume trading that comes in January because of all the leap options and all the kind of rebalancing of funds. What do you think for the next couple months? You think it's all going to be news craziness?
I think so, especially as we ease into this new administration. I love the Trump administration volatility myself, just because volatility is most conducive to us being able to make some money.
Mm-hmm.
So whatever brings me some chop is something I'm a proponent of. But yeah, he'll hop up on that podium anytime and say just about anything that can move us one way or the other. So. I guess my general sentiment is bullish. We've been ripping. I don't expect that to stop, but I also expect a lot of volatility. Seriously, for the next year, I'm going to be hesitant to play anything that's longer than like 2 months, just because things can change at any point, and I would like to reduce my exposure to the risk of time.
I totally agree. I got one that's volatile, of course. GME. Did you see the picture of Ryan Cohen with Sailor?
No.
They had a picture together that has come to light. And now the stock is up $2 or $3 in the last 2 sessions. Did you participate in the GME madness?
Yes, I was way too late getting in, so I never took advantage of the run up. I did make some money on the way back down, which was maybe my most painful diamond hands trade ever. I was down like $1,300 at one point. This is my freshman year of college. I mean, I was poor. My account was just like $2,000.
It was all of it.
What? Yeah,
it was your only position,
more or less. Yeah, it was like that, and then maybe 1 or 2 other positions. So I was really sweating it, but I managed it really poorly, and it got so low that I was like, I'm just gonna hold. And fortunately, like 3 days before my expiration, all of a sudden it rocketed back down, and we got a big IV squeeze, and I managed to get out for like $50 profit. But I call that $1,350 profit in my book.
There we go. That is a good point, though, that your biggest losers are where you're making the most money on your positions. Because when you're trading, when you're selling premium or strangles, straddles, whatever, your $50 or $100 winners, they happen that at the probabilities of 60, 70, 80%, and you close them and you forget about them. The stuff that rips your face off, where you lose the $10, $15, and those that you can battle back to a scratch, that's where the most value comes to your portfolio. So it's good that you had, we all have those.
Yeah, it was an ill-advised trade, and honestly a miracle that it managed to work itself out. But yeah, that was my participation in the GME craziness. Is I was the people. It was funny. I turned into the institutions. The whole point was that everybody was mad at the institutions in the first place. Then it got overextended, and I was like, man, I'm gonna put some short pressure on this thing. So I did, and fortunately, it managed to work out for me.
Well, I'm gonna play into it and do a little bit of long delta. I did a diagonal spread in GME, a small one. I'm long April the 30 call, and I sold the March 35 against it. I did the whole package at $2.15. So very tiny little engagement trade here. Nothing too big.
Sure, yeah.
It's staying a little small.
Fun one to add to the account. I think the funniest part of all of it is that stuff, more or less, saved this company. I mean, it's
still around. I mean, it's been enough, isn't it? Like, I mean, are there any stores even left?
I think so. There was one close to me in Texas when I left.
Really?
Yeah, I would pop over there if I needed like a crappy wired controller for the living room or something like that. I'd go in there, and there was always other people in there. I mean, I guess it was frequent. And I actually talked to the owner at length one time, and she had 30,000 in stock. Like before the thing even happened, they had just been giving her stock awards, or she had been buying it herself. But then that retired her.
Did she get out?
Yeah, she got out. Yeah,
Oh,
she sold at the top. She made, I don't know, well over $100,000, and then was like, I'm out, and dipped. So, yeah, the GameStop employees were also beneficiaries. But yeah, this thing is just moving like a stock. This doesn't. It doesn't look like it is like a stonk, and it don't look like a meme stonk. This is just regular stonks.
Yeah. E-mini's down 9 here. We've been chopping around, not really moving all that much. Been kind of a lull of a start to the week. I know we did have a little bit of move on Monday morning, down like 30 or 40 points right into the open of the futures at 5 on Sunday, I should say, for the weekend session. It was basically the low of the session. We've kind of bounced all the way back and just chopped around this range. NASDAQ down 73, Dow basically unchanged, the Russell down 18. I mean, been kind of a range-bound day. What do you think on Bitcoin? Are you a crypto guy?
Not a crypto guy at all. I have
no meme coins for you.
No meme coins. I have some Bitcoin and Ethereum in the bag. I've never dabbled too much into the meme coins. I don't know. I think it looks like an interesting and fun world. It's just there's enough products for me to trade as it is, and that's my sentiment towards futures and forex as well. Is I'm stressed enough from 8:30 to 3. I don't need something that I have to worry about 24 hours a day.
I hear you on that. I think the other problem is just the way there's only so many ways to trade it. Like I trade iBit a lot, which is Bitcoin ETF. I'm sure you are familiar, but it's got high implied volatility. The markets are relatively liquid. It's a $50 underlying. So, if you want to express a smaller, the problem with Bitcoin, you buy it and it's cash secured. You put $1,000 in, and that $1,000 is locked up, and it's binary. It's up or down. Something like iBit, it's made it a lot more tradable for me, and has piqued interest in the crypto space a lot more. Hopefully they'll have those ETH ETFs with options at some point. So I lean a little bit long via iBit. I like to do, wide put spreads, or you could do diagonal spreads because you have really high implied volatility here. You can buy further out in time calls and sell shorter duration calls against it. And it gives you this, because you have a lot of skew on the upside, the premium that you're selling those short options is significant. So you can set up these really cheap call diagonal spreads, something like, and this is an interesting time because Bitcoin has kind of gone down to the lower end of its range. Something like buying the 60 call in April, you go into March, you can sell something like the 62 against it. I mean, these are cheap call diagonal spreads, and the risk profile in these is fun because you obviously have some skew to the upside, and I have multiple positions on it here. But as you pass through time, you can have that higher profit potential because this option is decaying. So it gives you this, a little bit of a buffer to the downside because you have $1 worth of premium you're selling, but you have that positive gamma to the upside. So instead of only making, 50 or 60 cents like you would with a short put, you can make dollars on this sort of trade to the upside. So I like to kind of trade these back and forth as Bitcoin moves as a cheaper way, smaller way to get long Bitcoin.
Yeah, that is a really good way to structure it. I think it is really cool, these ETFs that are coming out that give us a little bit of ability to trade options. Like you said, I would hope that Ethereum won't be far behind. But yeah, it's a really interesting and different way to attack crypto. Do they trade 24 hours, the ETFs? How does that work?
No, so the ETFs are same as market hours, but it all factor. It's like SPY versus the E-minis. So E-minis trade in the overnight session, and that pricing is all reflected in SPY once the market opens. There's no because some people think there's like an ARB there. There isn't. The difference in value between SPY and the E-minis, because there is a slight difference, is interest rates, because obviously that there is a cost to carry and the leverage costs something. But you also have the fact that SPY has a dividend versus E-minis that don't have a dividend, and they have the contracts expire. So those three factors attribute to the slight difference in value. There's still no ARB there because ARBs are, if it was that easy, everybody would be doing it. There's no ARB there. It's all taken out of the market. But long-winded answer of IBIT will adjust to whatever the net price changes over that period of time at the open.
Sure, that's interesting. Yeah, there is something of a disadvantage there in that if you see Bitcoin tanking overnight, there would be no way to get out. But also, I don't ever think about that when I hold something SPY overnight. It's just, I'm expecting X move overnight and I'll deal with it in the morning. So, it is. It's interesting. There's a cool dichotomy there.
Yeah, I know Ryan has been talking about the ETH ETFs as like the next landing spot. We've also launched a couple new cryptos on the platform. So you got Solana in there. You have XRP. I know that a lot of people have been waiting on that. We had Doge the other week. You would think that at some point this year, there's going to be ETFs for all these major cryptos, which is good, is ultimately good. More liquidity, easier liquidity, that's a positive.
I can't believe Doge has just become like semi-mainstream crypto. That's actually my most profitable trade, probably of my entire life. Was I bought Doge in summer of 2020 as a joke. I learned that it existed, and I was like, "Oh my gosh, this is so funny!" And I bought $20 of it, and I think I 10 or 12x'd it, and I never paid attention and just woke up. I mean, it was cents. I don't even know what it trades at now, but. Yeah, I was total accident. I bought it because funny ticker, which that's just what crypto is now. A lot of these, more adjacent coins. ETH, is that that's the leverage one?
ETH, I haven't.
Yeah, 2x.
Oh wow.
eBay.
Oh, that's an interesting trade. Oh, and this has options. Wow, I'm gonna have to look into this one because it probably trades on the futures if I had to guess. So like there's ETH and BIT. I didn't know about ETH until you just mentioned it, but BITO is another one that is that was optionable before the IBIT options became available, but it trades on the futures. So it's along the Bitcoin futures contracts, not spot. So I'm guessing that ETH-U is actually one that does that too.
Yeah, I'm seeing BitX also, BITX, that's the 2X Bitcoin.
Okay. Yeah, so those got to be futures. Those will be interesting.
Interesting, yeah. You just, who was that?
Why not?
Shout out Kevin Thomas. You just put us on that.
Yeah, I don't. Who needs one times leverage when
Yeah,
you can get
right?
2 times leverage, dude?
Yeah, you can. Yeah. In other countries, they let them get 20x leverage, but we don't. We don't like to have fun.
Those are crazy.
Yeah, I think that's so crazy.
Palantir, my last one, just real quickly. Palantir stock is trading at 113. We're down $3 and change. I have this crab trade, which is a calendarized ratio butterfly. So you're calendarizing a butterfly. You're long an option that's further out in time, that's closer at the money, and then you're short 2 of the options in a shorter duration, further out of the money. So you have this like kind of butterfly type risk profile. I've had people asking what I'm trying to do with this trade. I'm hoping for the stock to go down another $2 or $3 would be ideal. And then we could roll this out in time, but it's a big position at this point. We're gonna have to give you the full crab trade breakdown the next time you come on with Mike and I, because Mike is a big fan as well.
Yeah, I understand a little better than the first time it was explained. I'm getting there. I'm getting there 2 or 3 more times, and I should be fully caught up and throwing these things in myself. I didn't realize stonks was going to be such a big thing. I actually have a stonks man, like a physical little figurine of the stonks guy with the arrow. So I'll have to bring that in for show and tell the next time I'm here.
For sure. All right. Well, good stuff, man. This was fun to have you on, Gus. The people can also watch you today, 4:30, for Bad Taste with Errol as well. What else are you thinking for the markets for the end of the day today?
Into EOD, yeah, Lyft. I think I've convinced myself I'm gonna try to play something on Lyft. Catching some kind of move. I would like to be neutral. I'll iron out exactly what I'm gonna do. It'll be posted in the follow page. But Lyft is what I'm eyeing.
Love it. All right. Mr. Gus, thank you for joining us, or me today and us in the chat. It's been a pleasure. We're going to take a quick little 90-second break, come back with more content. You're listening to Tasty Live. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, Backwardation is the opposite, so those front month futures contracts are trading richer than the corresponding back month contracts.
We are back. It's still Tuesday, February 11th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak in for Jamal Chandler today. Ilya, it's fitting that you're here because our favorite official in Washington, D.C. was on the microphone today, letting us know that everything's fine. I know you're a big fan of Louisiana Senator Joe Kennedy, like I am, so I'm sure you were delighted to hear from him. I personally was looking forward to Powell speaking myself. He gave us nothing new, but I suppose that's a good thing. Markets yo-yo during Powell's testimony. Do we hear anything of substance from this press conference between Trump and the Jordanian president? Not yet thus far as it pertains to tariffs, but that's ongoing, so we'll keep our ear to the ground. Tomorrow is also CPI day, so there's much to discuss here on Futures Power Hour. Ilya, before we get into the CPI data and what to expect, what do you think about this market action as we churn ahead of this macro risk?
That really seems to be the name of the game here. We're not going anywhere. So yesterday, we talked about, okay, we had kind of a tariff announcement over the weekend, sort of. It's a reactivation. They're not new tariffs. But there was a little bit of a gap. We filled that gap. And where have we gone since? Nowhere. Really across markets. Powell, as usual, didn't seek to create waves. He was, in fact, particularly dancing on the rope this time, it seemed, because this has been the message of the Fed this whole go-around, let's call it going back to November even, saying, look, we're not looking to do anything in a hurry. We're not doing anything quickly. We're fine-tuning. Our risks are balanced. Who's to say what we do? We're watching data. What we can tell you is we're not going to do anything quickly, and we're not going to do anything in any kind of a hurry. So that's what we heard. There were some interesting, again, mentions of what's going on with the long end of the yield curve. And I thought that was probably the most interesting bit that Powell said, where he said mortgage rates are up because of treasuries. You go, okay, but why are treasuries up? He goes, well, it's not us. Okay.
Definitely have some comments on that.
Yeah. Like, okay, yeah, it's not.
The Fed has no influence on rates.
So who is it?
So the Fed doesn't have any influence on rates. If that's the case, then why would you guys do something like QE?
Right. Well, this sort of follows from the FOMC announcement, right, where they asked Powell, so what's going on at the long end? And he goes, oh, it's term premium is what that is. And that's not us. That's uncertainty about rates downwind. You go, okay, uncertainty about what? Which is the thing that we're uncertain about? And then, of course, we start getting the PMI numbers like we've seen, and indeed the previous CPI report, where this really starts. And the markets go, oh, this is about uncertainty? I see. Okay, this is uncertainty in the direction of lower rates because we feel that something is brewing here in the business cycle 6 months out, 9 months out. And now we're going to get the CPI report again to see if maybe they're in fact correct.
Well, we get the CPI report tomorrow. Powell's line today was that inflation is contained and they don't really feel like they're in a rush to do much of anything, in part because you have a Goldilocks-ish type of scenario. Not his words, but mine. You did hear from a few people up there that were asking him questions about how the economy's kind of in a Goldilocks soft landing state. You have a forehandle on The unemployment rate, it's actually 4% flat. You have a 2% handle on the inflation rate. Stocks are near all-time highs. That's the Fed's unofficial third mandate for those counting at home. In GDP, between 2 and 3% in real terms. So he mentioned that if inflation stays sticky and the economy stays strong, then they're going to keep rates here. And they can stay restrictive if they need to, and they can get more restrictive. And if inflation falls off and the labor market deteriorates, then they could cut rates. So it's really, they have a lot of optionality right now, which I think is ultimately a good thing. But as you think about tomorrow's CPI report itself, we are getting through the hump, if you will, of the base effect period that has plagued the data series for the past few years, where if we notice, next year the data should roll over. It's a line that I've said the last 2 years here as we turn to the new calendar. And then there's been that December, January bump, maybe lingering into February sometimes. That seems to be diminishing, but as we look forward, this could be the last print that is really truly subject to those base effect whims, and we begin to align more with what we've seen in the data itself, which is to say that there's a very popular chart going around FinTwit right now that's overlaying the trueflation measures with the 10-year yield. And if you look at trueflation and the relationship to the 10-year yield, it would surmise that interest rates have peaked because inflation is expected to turn lower here henceforth. So keeping that in mind, tomorrow, the January reading, we're doing at fairly reasonable numbers. What do I mean? About a 0.2% month-over-month run rate. That's consistent with the Fed's, just basically consistent with the Fed's 2% year-over-year longer-term or medium-term goal, I should say. Same thing in the PCE and core PCE. Just note here how at a 0.24% month-over-month run rate is equal to a 2.85% year-over-year in January. Bumping that up for the month of February here actually would see the year-over-year run rate drop off from 2.85 to 2.64. So there's still this wrinkle that we're going through to emphasize this. We're more concerned about the month-over-months than we are the year-over-year still. This is a mess down here. We could actually disregard this to a large degree. As long as we're staying around 0.2%, the market's going to say that this is fine, and the Fed is going to think that they're still in the driver's seat where they have that optionality, plain and simple. So will this be a big impact tomorrow morning? Maybe not, because hey, keep going down the path you're on is not necessarily market moving itself, but it's the month-over-month you want to look at, not the year-over-year.
The problem would be if instead of a 0.2 or a 0.3, which is the usual boogeyman that you might be thinking about here, is 0.1. And if you got 0.1, then you're back to where you were the last time these numbers came out, which is to say you're looking at a core run rate that undershoots on the year-on-year figure, and you go, wait a second, what? Why is this happening? This is odd. And bonds surge, in particular at the long end, because the markets reckon, wait a second, this significantly shifts not so much what the Fed is going to do now. In fact, the Fed funds futures curve has been basically steady since November. The Fed came out and said all kinds of dovishness in September. The markets basically called them on it immediately, day of. And by November, the structure of the forward curve in Fed funds futures basically shifted to where it's been ever since. We've not seen a tremendous amount of deviation in terms of what the markets think the Fed is going to actually do in the immediate policy window in front of markets, call it a quarter or two. Mm-hmm. Instead, the market seems to very clearly be looking downwind, which is how you get the 2-year doing nothing, but the 10-year going up and the 10-year yield coming in. We hit an 8-week low last week. So the markets are sniffing out something that's not so much a risk that the Fed won't cut enough eventually. They seem to be sniffing out that they'll need to cut more because they're delaying currently.
What was interesting about Powell's commentary here, something that we've been talking about recently, is how the Fed isn't going to try to skate to where they think the puck's going to be. They are a reactionary group of people who, more or less, for better or worse, is always fighting the last war. They're going to be a day late and a step behind. That also means that they don't overreact to things. When we had the regional banking crisis emerge in March 23, the Fed raised rates a few weeks later, right? They saw that credit conditions weren't getting stressed, so they could continue focusing on the more important of the two fights, inflation. And was there systemic bank failures thereafter? No, the bank failures were bad, but there weren't systemic bank failures. It wasn't, ATMs closed around the country, people not being able to pay their mortgages kind of situation like it was in 2008. So the Fed kept doing what they wanted to do. Maybe that reaction function being delayed is a positive sometimes. Either way, though, Powell basically said, we're just going to kick it up and chill for a little while. You guys sort through this mess. We're not going to react to anything until we actually see it come to pass. That's good news for stocks. That's bad news for stocks. Here, we're a little bit softer still. Zero
yields are a little bit higher too.
Well, I think the yield story really, we need to talk about what's happening in energy markets because natural gas moving up and what's happening over in Europe right now, very worthy of that consideration given the spreads between European benchmarks and ours and the exchange rate differences. When you're paying more for European natural gas than you are for a barrel oil equivalent here in the United States, might as well buy US LNG and import it. So where we stand right now, though, in equity market, 60.78, down by 0.18%. The Nasdaq's off a touch more by about 0.4%. Dow flat, up by 0.02, and the Russell up by 0.75. It's more of that churn, right, ahead of a big piece of macro event risk. Volatility is not really going anywhere, though. So what do we make of this stick in the mud price action, Ilya? I know that this has been feels like a conversation on repeat for the past 3 weeks.
Right. I mean, very interestingly, if you look at this one little bit that Powell said, he seemingly said something encouraging, but of course, markets are going to extrapolate. He said concern on labor market, on essentially the thing that got them so dovish in the end of third, beginning of the fourth quarter last year, where they were saying, we're not looking for the labor market to deteriorate any further from here. Wink, wink, nudge, nudge. Now he's saying that concern has diminished considerably from mid-2024. That is to say, if you thought your rate cuts were coming soon, hang it up. They're not. And so you continue to see this impetus to flatten the yield curve, where if the markets think that rates are going to be coming down later, the long end is biased in a direction toward lower rates, while the front end basically stays put. It's interesting to see that in the context of what we're seeing today, because that, of course, clashes with the actual price action. The long end is actually a little bit higher on the yields front today, and maybe this is in fact what's going on in energy. Maybe this is repositioning ahead of event risk, because of course CPI is a very relevant input into this. Maybe the markets are just evening themselves out. We're not taking out any key levels, but equities clearly don't know what to make of any of it, because we are flat lined completely for basically, well, now over 2 months, going into 2.5, and we're squarely in the middle. I mean, if we look at the S&P as a kind of barometer of overall risk sentiment, the peak, let's call it early December on this range, and about 6% up and down all along. We're only barely maybe into the upper half of this range, just kind of scratching at it. We're essentially right in the center, right in that kind of oscillation axis that gets started with that preliminary top even before December, even in November. If we anchor a line against that high, we can see there's a sort of upper end of the range as a sort of area, and we're right in it. So there is nothing here from a risk reward perspective that seems attractive if you're going to lay out new capital. If you're long, okay, maybe it breaks out higher. If you're short, and you're short from a high enough point in this range, fine. The trade hasn't changed. It's the same. But As far as laying out new capital, there's nothing here that's attractive at all. You need something to happen before there's any kind of conviction.
Yeah, Powell did. You mentioned that labor market stance today in terms of providing the market a reason to think that maybe the cuts are coming and they're just kind of waiting for a bit more certainty on the path forward. We have seen that the timing of a rate cut has been pushed back over the course of today. Yesterday on Futures Power Hour, we started with the CME FedWatch Group, aggregation plot so that we could take a look at just anchoring expectations for the start of this week. And I think that was an important point to just remember, where are we? Where are we going? What's happening on the other side of Powell and the tariffs and then the CPI and then the more tariff talk? Yesterday, we were looking at a 91.5, let's actually start with the rate cuts themselves. Starting with a 65.8% chance of a 25 basis point rate cut in June, a 55.6% chance of a 25 basis point rate cut in December, and then that third cut comes by December 2026, clocking in at 65.18%. Okay, right now, the odds of a June cut have dropped to 57.9%, so still there on the board. The next cut does not come in December now. It's now priced in for March, 60.33%. First one above 50, first one above 55. And then that third cut, that's not on the board at all. So we're back.
And by the way, the Fed through the end of 2026 in their last SEP had 4.
Yes. So that does afford, there's two ways to look at this, right? That the Fed is going to offer us a correction, perhaps at the March meeting, which is March 19th, is a long way to go until then. But they're going to begin to formally trim their rate cut expectations for the next remainder of this one and next.
They'll give us a new SEP, that is.
Which means that the market is already there to a certain extent.
Yes.
It also means that if the Fed talks up cuts here henceforth, there's a lot of room for the market to price them in. I don't know if that's a good thing or a bad thing. But today, part of the churn you're seeing, we have this weakness in notes and bonds, despite Powell's claims that the Fed has nothing to do with long end rates. I would point to the.
Very cute.
Explain to me what happened on December 18th with my ZM calls, Mr. Powell, if the long end has nothing to do with what you guys do.
We have receipts, sir. We have receipts.
You specifically mentioned the labor market. By the way, Fred just put in a new update, which I think is fantastic. It's a lot cleaner. It's good. Nice. The SOM rule in particular, this is what had the Fed in fits over the summer while they were flagging that labor market weakness. The SOM rule was triggered. This is a new tool that the Fed has been using only in recent years. What makes it so powerful is not that it comes from a former Fed advisor, Claudia Sahm herself, in that if you look back historically, this particular occurrence that whenever the 12-month, I'll just read the description here, whenever the 3-month average of the national employment rate rises by 0.5 percentage points or more from the lowest point over the past 12 months, then you are in a recession. And it's happened every other time that we have available in the data series. So what am I getting at here? Over the summer months, we eclipse that 0.5% threshold. We rise to 0.53%, in fact. And so the SOM indicator alarm that the Fed has on their desk, that little red bell starts chiming and whirring and saying that, okay, you guys got to start shifting your stance. Forget about inflation. Start thinking about labor market weakness. We're not there anymore. For the past few months, we've actually seen the SOM rule recession indicator retreat. We're now back down to 0.37%. It's atypical for the indicator historically to have retreated and there to be a recession right around the corner. It's either we're going into it or it's done. And the way that the indicator is evolving is that we're actually not going into a recession anymore. So the Powell and co. have this opportunity to step back and say, we're not really worried about this. If you were thinking that rate cuts were coming because the labor market was weakening, we see evidence that the labor market could in fact tighten up. And ultimately, that's what leaves us with Powell today, having us kick our tires. So 60-80 here, Ilya. It's a place where we've been since January 21st in the NASDAQ. It's the same kind of setup right now, where maybe we're trying to break some sort of purported downtrend here on the chart, but not quite ready to do it just yet. Chop and churn remains the name of the game.
Absolutely. There's just no reason to over extrapolate any of this. Clearly, the markets want to see CPI because Powell did this at the January FOMC. He's doing it again. He's gotten very good at this. He said lots of things, and it's not even that he was vague. It's that he offered compelling enough fodder for both sides of the argument that you really can't make heads or tails on where he wants to go, other than to say the object of this game is not to go. The object of this game is not to upset the apple cart and to buy more time and to look at more data. And that basically puts us right into the path of CPI, only with just still more conviction in the sense that this stuff matters, that we're watching, that the Fed is watching, that this is really a game time decision for markets and for the Fed and for everybody involved sort of around the entire conversation. You give me an asset class. Because clearly, the one thing you could ostensibly take away from Powell's guidance is you don't know and we don't know, and we'll see what happens. And that kicks it back to incoming evidence. And we're about to get a big one in T-minus less than 24 hours.
Russell here. Patience remains a virtue, ever so. 23.37, January 22nd swing high has yet to be breached, therefore keeping those looking to operate on the long side like myself on the sidelines. We just haven't turned through that area. Ilya, we were talking about this yesterday. We're a little bit higher than we were, I suppose. Well, we're a little bit lower right now than we were this time yesterday, but nothing has changed. Pinned right around that EMA cloud, and the horizontal resistance remains ever so. The Dow Jones isn't quite so interesting here, but it's just a name of patience right now. There's not a lot of vol, right? I suppose one thing that is holding true here, as part of that AI phase 2 thesis that we outlined immediately after DeepSeek that Monday, if we are looking at a change in leadership away from semiconductors, away from infrastructure, and more towards application, that means the software companies, the cloud providers, yada, yada, yada. It could mean a lot of churn for the headline indexes moving forward, right? Because some of the biggest names that have been propped up are those that are involved in the infrastructure groundwork itself. Microsoft hasn't done much over the past year, but it's been holding steady, right? NVIDIA obviously continues to charge higher. You take those out of the equation, and where does that leave the headline indexes, even if Meta is trying to work on its 16th consecutive day in a row to the upside, which is absolutely outrageous. But that is the truth here, that we're working on 16 days in a row to the upside for Meta. So that leadership is changing hands, but the money sloshing around, it's not new money coming into the market, it's money just changing positions in the market. So for now, I think at least that thesis is holding up. This is, if that phase 2 story is correct, we should be anticipating the churn and understanding that it's not going to be resolved in the short term. And then sprinkle in the seasonality. The market doesn't do anything into the Ides of March anyhow. So we have another month, perhaps, to linger and do nothing.
It could be. It certainly looks like the market is coiling up. We can see that the swings are narrowing in, and even as the highs get lower, when we look at something like the NASDAQ, when we look at something like the S&P to some extent as well, we can see that the lows are getting higher. That is to say, we're increasingly tightening up into some sort of a coiling. And we'll see what that means, because it is only a matter of time before a coiled spring snaps. The question is, what is going to snap it? NVIDIA is actually an interesting sort of view on this, because I think when you look at what it's done since yesterday, it's very pointedly stopped right at that former support become resistance. So if you want to take that as your bellwether for the AI story, again, everybody seems to have kind of lifted up their hands in confusion and said, show me the CPI data and then we'll talk.
Mm-hmm. Well, we will wait for that, Ilya. CPI data tomorrow morning, 8:30 a.m. Eastern. What's going to be the index that moves the most?
In my mind, probably Russell, just on liquidity grounds and on the sensitivity there from all kinds of interest rate sensitive names, be they the regional banks, be they anything real estate related. There's a lot more of those names that really care about the cost of credit in there. And if there is some sort of a cyclical concern, you would expect those names to be the most vulnerable. So I would think the Russell is probably an outsized mover. Now, if something is really and truly eye-catching in a risk-off kind of way, most of the market cap is locked up in NASDAQ, and ostensibly it has the most room for liquidation. So we'll see, but that would suggest that there is something really and truly neck-breaking that happens tomorrow. And we'll see if that's the case. I don't think the risk of such a thing is terribly high on these numbers. I think what we're watching is more gradual, but we'll see.
It's a rough day for treasuries here, not helped necessarily by anything that Powell says.
No.
We also don't get a great bond auction here at the top of the hour, although I suppose if you take a look at ZF or ZN, you would argue that maybe it just pushed things slightly higher. The results themselves, I'll top over to ZF. There was a 3-year note auction at 1 p.m. Eastern. There's a 10-year note auction tomorrow at 1 Eastern, and then 30-year bond auction on Thursday at 1 p.m. Eastern. So lots of little liquidity events here for our beloved bond market. Notes and bonds are both starting to trade a little bit softer here over the course of today's session. When we were to look at least the 5-year notes, those auction results on the threes, perhaps if you want to talk about the ZT or ZF contracts having some proximity to the 3-year note auction itself. The high yield there was 4.30% versus the previous of 4.332, not bad. The bid to cover ratio, 2.79 versus the previous of 2.62. That's good. And above the 6-month auction average of 2.58. Very nice. Here's the issue. We don't stop through. The auction tails by 1.3 basis points. The previous auction we stopped through by 1.2. The 6th auction average is a 0.2 basis point stop through. So mixed. The yields aren't as high, but it's not exactly what you want it to be all around to kind of give us a turn. It's off the lows. We obviously have Powell speaking, though. Powell is the one who matters most today. I did find it very perplexing that he would make such a claim that the Fed has nothing to do with long end rates when you think about decomposing the long end of the yield curve. You are literally taught in school, if you study this, academically, the long end of the curve is some function of short end rates plus a growth premium plus inflation premium plus a term premium. Right?
I mean, maybe we're listening to the wrong thing. Maybe what he means is it has nothing to do with long rates now. Maybe he's speaking about this particular moment in time, which would sort of rhyme with what he said at the FOMC announcement, because otherwise, I mean, you could make the case, okay, well, maybe Powell is just anti-QE. Okay, but that's certainly what he deployed when COVID struck. That's certainly where the Fed went, and might I add, it was incredibly effective and arrested the issue basically between the months of March and August. By August, the Fed could say, you know what, we don't need to do any more easing. We've secured liquidity even though the world economy is effectively closed. We're good. So that doesn't seem like what he's trying to say. It seems more like either he is taking the perspective that what QE does is not to bring down lower rates, but to create liquidity and to turn illiquidity into liquidity, which is essentially assume the market's liquidity risk. I think that's been the more important part of QE from the get-go, and why it didn't result in inflation in 2008-9. Lots of people were saying, oh, the Fed is printing money. This is going to be terribly inflationary. No, it's not. You just destroyed and emptied a giant pool of liquidity, and what the Fed is doing is it's pouring water into the hole. So, no, you're not creating new money. You're offsetting money that was destroyed. That is to say, you are taking from the market illiquid assets that have no bid, and you say, you know what, I don't have a liquidity constraint. I don't have a capital constraint. I'm the central bank. I can hold these forever. So here, you give me this, and I'll give you liquid cash, 10 cents on the dollar. Go ahead. And then I'm going to make bazillions of dollars when I myself create the end of the panic. So the assets I just bought go up in value, and I go put that money back into the U.S. taxpayer's pocket. Thank you very much. Okay.
That's something people forget, by the way, that like the Treasury and the Fed have historically turned a profit on their open market operations when it comes to emergency measures.
Well, because they are the vehicle for the arresting of their own issue. So they go, we're going to do this thing, and what it's going to do is it's going to give us exposure to the problem getting fixed as it fixes the problem. So we're going to bet that we're going to make money and then make sure that we're making it because we have the steering wheel and we can just turn it that way. Okay, great. So maybe what Powell is saying here is, look, we look at QE as liquidity management, not as curve management, as it were.
That's, I think, the message. Yeah.
And okay, fine. Fine. That's not an unreasonable perspective.
Because I think if you follow conversations in Fin Twitter, you go online and you read traders, generally speaking, skew to the, I don't want to say to the right philosophically when it comes to these things, but generally speaking, the attitude is like, we don't want the government interfering. Take your hands off the market. Let free markets be free markets, and let us enjoy price discovery. We'll figure it out. We don't need your thumbs on the scale, right? Like, let the invisible hand do the invisible hand thing. Don't slap us across the face repeatedly and tell us that you're not interfering with price action. I understand that ethos. I hear it. I see it. And I think what Powell is saying, like, we're not in this to necessarily find the perfect 10-year yield. This is not our job. Our job is to allow for a functioning market. And so if that means we're doing QE, it's because we're at zero rates, which he did point out today too. QE's not coming back unless they've exhausted the traditional interest rate channel, which is just cutting rates down to zero. So, where Fed rates are right now, there is a long way to go to QE if anyone thought that was happening anytime soon.
Right.
Moreover, though, taking a step back here, right, and focusing on the price action itself and oil being up today, we do have on Friday that bearish engulfing bar, new high set relative to Thursday, and we closed below Thursday's low. So technically a key reversal. We're now back to the 1-month moving average and the neckline. Version shoulders pattern. So look, if there is a place for this ZB long trade to kind of put up or shut up, it's right here. It's right.
This is it. It's got to make up its mind right now.
This is it. Horizontal, diagonal, no matter how you want to draw support, the support's here.
This is it.
CPI is what matters tomorrow, which is why, again, I point to pay attention to the month-over-month run rate, because even if the year-over-year goes up a little bit, but the month-over-month run rate meets or misses slightly, you have then a place where bonds and notes are equally well-positioned then to stage a little bit of a turn. I'm holding on to my long deltas in both these scenarios. The long calls in ZN today are getting hit a little bit harder than the short put spread is in ZB. I'm not concerned about the short put spread in ZB for the time being. Tomorrow may be a different story because this market's going to chop around and stop falling rather than necessarily going up. But I think CPI looks promising, given the slate of data that we saw for January, and ultimately the direction that the data are all trending in, from Truflation to that new BLS, the adjusted rent tenant index, which is suggesting a steeper pullback in house prices, or at least a depressurization in house prices at the fastest rate since COVID.
Yeah. Yeah, and I mean, you have to take also in context what's going on, to your point, with energy. There's a lot of inflationary input moving around right now. Crude oil is looking much perkier today. If you look at what's going on with nat gas, you're seeing not quite as robust a story, but nevertheless, you're back marching higher. So you're looking at all kinds of moving parts here, and there's just going to be a lot riding on this tomorrow. There's going to be a lot of speculative interest that's going to be sitting there waiting for that CPI number to fall down, and to try to look at it and say, okay, so how do we reconcile all of these influences here? But what's interesting is you don't really see much of an implied vol hump into tomorrow's day. I mean, I guess a little. About 16.9 on SPY. So I guess, but sort of relative to where it is on the following days, but not much at all.
Yeah, not huge. Yeah, not much. You can kind of scroll down and you could see how from day to day, like, okay, we're going up by 10 points, going up by 12, going up by, so it's like expiration, it's 8 points. Yesterday, I think it was somewhere in the neighborhood of like 16. So yeah, a little bit bigger, but
a little bit.
End of the day tomorrow, accounting for the rest of today's move, we're talking about 30 odd points.
Which tells you either the market lacks conviction and isn't prepared to say that this is going to be one thing or another. And we know the market lacks conviction, so okay, that makes sense. Or the market really doesn't care, and what it's looking for is a way station to get on the other side of CPI to do whatever it's going to do. And because the market clearly lacks conviction, what that is unclear.
Ilya, yesterday when you and I were speaking, exactly 24 hours ago, gold is trading at 29.33.5. Currently, gold is trading at 29.33.5.
Right.
So it's done absolutely nothing over the past 24 hours.
It certainly tried. It tried to go a bunch higher. It tried to go a bunch lower.
That's a little disingenuous, because last night out of the Asian Open, again, we're noticing this when gold is putting in gains. Tom was commenting about how boring gold was yesterday, which, to his point, the market movement in gold is coming in Asian hours. And then, like, the day is done. And
wait,
last night,
was it that was accumulating tons of gold reserves? Oh, right. It's
which would make sense if that's the story.
Right. I see.
But we have this super sharp run up last night until you get to 9:30 Eastern on the dot, and gold, which had recently hit a high of 29.68.5 here in 6 CJ5, dumps quickly in the span of about 15 minutes, is all it's been back down to 29.35, where we are now. This morning, we continue to sell off. We hit a low of 29.07 around 8:15 a.m. And here we are. So, Ilya, my comment, like, I like when I wake up and the market's up and then it stays up all day, because last night I was like, okay, I'm going to go to bed and the market's up. And then when the time actually I get around, like, I've given my kid breakfast, we're getting ready for school, I'm like, let me check this market. Gold's $65 lower than when I last saw the prices. Okay, that's a new. But here we are. Nothing's changed.
Yeah.
Does this doji here at the top, forget the day-to-day price action and, the emotions, exaggerated or otherwise, that one feels in checking the market at 9:30 last night versus 8 a.m. this morning. This is a pretty big doji candle up here at all-time highs. Is this the indecision candle that tells us that maybe this rally is ready for a breather? Or, I would posit, is the fact that we once again rebounded off of the 1-week moving average today at the lows nearly to the penny a sign that this uptrend still persists?
Well, I think it's both, and could be both, because we're standing in front of an incredibly relevant event risk. Gold, let's take aside for a second that gold has managed to rally here from about mid-December onward, whether yields are going up or going down, whether the dollar is going up or going down, and that's been largely a function, seemingly, of a non-economic buyer. But what did we just say about China accumulating reserves again? Right. So it seems to speak to there being a steady hand out there. That's big. But that doesn't mean that the market is not in the immediate, within a session, within two, sensitive to gold's usual catalysts. And those are the dollar and yields. And we're about to get tremendous event risk on the dollars and yields side of the equation here with this CPI number. So it's not unusual in my mind that gold listens to Powell today, does a bunch of stuff overnight because maybe the big hand was out there scooping. And when you look at all of this and you say, well, why would it make up its mind here and now? It's probably wanting to get to the other side of this event risk. So you look at that doji and you say, okay, well, there's a lack of conviction. Okay, well, there's also big event risk. Seeing conviction ebb before big event risk, that's not unusual at all. That's what tends to happen. Just consider how the markets basically go into anxious slumber before every NFP report. This is not atypical. So you look at this and you say, okay, fine. Maybe this is a sign of lost momentum today. Maybe it's a sign of lost momentum beyond today. But the uptrend is intact. And it's decision time. Much like the bonds have decision time in front of them, much like stocks have had the decision time in front of them for weeks now, only from the stock side, they've said, I don't care, I'm going back to bed.
Yeah, silver here is, as we think about that non-farm payrolls report, or CPI report tomorrow, very much off its own lows, bouncing at that 1-month moving average today. It feels like silver's had these trading zones recently, where it's been stair-stepping up into various levels where you can see it shuffling around. Yeah, shuffling is a great way of putting it. And you can see here today, this zone right around, we'll call it like 31.75, 31.85. That is been pivotal back in November. It was pivotal here in January. We're treating the former resistance now as support. So there's a horizontal line for you to think about. And if that's the case, then it would speak to this long lower wick. We get a softer CPI print tomorrow. Maybe we're heading back up towards these highs here. Because if you're thinking about like how does gold or silver do well in an environment like we are in now, I mean, I think kind of a great place to be is we have all these fears about potential inflation that may come because of tariffs. And so people are going to skate to where that puck's going to be. So they buy all their gold and silver now expecting inflation, but realized inflation is actually lower. And so real interest rates are actually depressed. They're not spiking as much, and because they're depressed, it allows gold and silver to have a nice little tailwind. And so it's this mismatch between reality and expectations that can help fuel a run in the short term. Westwater pointed out to me today there's a high degree of volume at $32, the 32 strikes in silver right now, and so it's worth keeping an eye on this price action here today. Copper, as people may have seen yesterday on the follow page here, just for myself, clicking into that. The copper trade was taken off yesterday because we did have that spike up. And one thing that I was keeping an eye on which I saw incidentally in a Goldman Sachs research report this morning, is that the spread between American grade copper and the global benchmark in London, the difference basically reached 10%, which is interesting because if there's going to be a 10% tariff on imports into the United States or vice versa, then there should be a premium there. So we hit that yesterday up when we were trading near 470 a pound here in copper, and we have since then retraced. So 100% of the tariff was priced in at a point yesterday. It is now, since we're backing off a little bit here, Ilya, we run into that 5-day moving average. We since bump up. I do want to point out the 14.1 IVR here may be misleading. We're looking into it on our end. I've already flagged this with Nick Batista today. If you look to, say, CPR, which is the Commodity Tracking Index Fund, should just basically look like HG, but it's the tracking index fund, so it's not continuous like the contract is itself. You'll see here that IVR is still 32.8. So worth just double checking on that right now if you are trading copper futures in the interim time being. Otherwise, Ilya, I am looking for an opportunity to re-engage long deltas here. This action today is very curious, given that it's occurring right near former swing levels in that 450, 455 area. So maybe using this as opportunity to then re-put on the position up for the 470, 475 call spread makes sense, because being long the 450, 455 and us trading at 470, I'm running into so much. I'm basically running into the most I can get out of the position in the short term, unless it goes up and up and up and up and up and up, given the time to expiration. So a chance to reset strikes, reset the delta, time to expiration ultimately. And I'm looking at re-entering as soon as possibly later today. So keep an eye on the follow page.
I mean, I did something similar with crude oil. Crude oil had a pop today, and it got into some congestive area where maybe it's trying to round out a bottom, and I've been short for a while. So I took that off today, not because my bias has changed, but because the price action seems to suggest that maybe I need to not be greedy here and just take the money and re-enter when we get a little bit more of a convincing signal from the price action. So very similar kind of, not view change, but position maintenance for me in crude oil, where I took it off, I took the money, and we'll see if we get stuck right around here. I completely see myself putting it back on.
Yeah, and consistent with that, we have that Fibonacci extension here. If we were to just look at the move from the yearly lows, we go to the top of our potential flag, right? If we talk about this being a wedge, the 100% extension came in at 4.65 yesterday, so this move was fulfilled. Look, if this is going to stay bullish, this is the kind of price action you want. You want to see a return back towards the swing area, back towards that 1 week moving average, and at least steady around there, show that we're balancing out. And maybe we're doing that today thus far. You mentioned supply chain issues coming out of the Congo because of what's happening with Rwanda. Yeah. That obviously is worth monitoring here in the potential short term, because if there is some sort of ceasefire, then the supply chain issues subside, and copper could have a few days where it's taking the elevator down to rebalance those concerns. Let's talk about energy, though, here, because my sticking point has been that the bond market's largely a reflection of what's been going on with oil. So bonds recovering was a function of oil coming in. Now, oil up 3 days in a row, problematic for notes and bonds here. Ilya, I know that you got out, as you just mentioned here a few moments ago, because it looked like we were turning once again. And indeed, it appears that the turn continues right now, up by 1.4%. Natural gas is up by 2.18% here, although off the highs of today's session. At what point do you want to reload into crude? When would you look to get short again on these charts now that we find ourselves back above our 1 month moving average for what could be the first time on a closing basis since January 24th?
I mean, it could even be right here. So if you look at what the price action is doing now, you can see a kind of inflection area that sits basically right around here. And if you look even just on the daily chart, I think you can see it very clearly. What you're looking at is essentially the underside of the preceding range. So if you want to kind of guesstimate where that is, looking at the open on January the 28th really gives you a kind of baseline. And that's coming in basically right at the 73 mark. We're just a touch over it here. I think that's basically your line in the sand. If you don't overcome that, you stall right here. There's a little bit of an intraday reversal signal. I could be talked into re-engaging back short. It does need to look convincing, but I could get myself back into it. But there's enough of a risk that we're putting in a larger bottom, at least on an intermediate sort of time scale, let's call it a week or two, that I'm not going to sit around and wait for this thing to decide. I'm going to take my money. I've been short going back to about 77. So this is good. I'll take it. And then if we end up finding a top at 74.50, which is kind of the next inflection zone, or even a bit higher toward 75.20, let's say, I can lay it on back at those levels. At this point, I'm watching the price action because my bias hasn't changed. I still think crude oil is biased lower. So for me, the question isn't so much, do I want to be a buyer? I don't. It's where do I want to get back short? Where does the market signal that the timing is right? And that's going to be a price action consideration.
Yeah, volatility still absent, 8.6 IVR right now.
Nothing.
It's not really giving us much of anything. Volatility in natural gas has started to ebb a little bit to the downside. High of 52 today, IVR low of 24, now back down to 27 on the chart. And we are moving up, though. We've been talking a lot. Westwater tomorrow will cover this again as we look into the inventory supply situation in Europe and what we're doing with our salt caverns here, how fast we've drawn those inventories down in recent weeks. We also know that the Trump administration is lifting export restrictions while also European natural gas prices continue to soar. So the short put spread here, looking at it today, it's still viable, still works. 43 days to expiration, short the 3, 15, long the 3. We're basically ensuring that we hold above this pivot area that we based above last week when we had our gap open higher. The low from the 4th is $3.17.5 down there. So we hold this, we continue to climb. If we can make our way up to, say, 375 or 4, maybe lift it depending upon where vol sits. But right now, natural gas seems supported, and it's another way of expressing the AI power demand story, right? We may not need the chips for the training, but that means the inference future is coming. And that means we're going to need more transmission lines. And we don't have the transmission lines, which means there's going to be a bottleneck for the energy that will power this in the future. Maybe, maybe not. I think so. At least I'm telling myself so for the next 43 days while I'm short those puts in natural gas. The dollar retrenching here today, Ilya, call this a surprise for me. If you told me that oil would be up and yields would be up, I'd say that's probably good news for the greenback. The currency that would be most sensitive to those things is behaving normally. The yen is off by 0.3%, but everything else is up versus the US dollar. Square that circle for me. Box my ears, if you will. Educate me here. Why today of all days?
Seems to be that the parts of the dollar that aren't immediately risk of yields going bonkers related, that is the yen, the dollar has become a little bit more of a risk on, risk off dynamic. So when you see that equities really start to bounce off their lows today, intraday, and by the way, also where you see crude oils start to come in a little bit off the intraday high, that's where you see the dollar really start to gain downside momentum. So it seems to be a risk on, risk off kind of a flavor. Mind you, we haven't gone anywhere. So just like we're stuck on the S&P 500, so too we're stuck on, for example, the euro here. And I think that's emblematic of what is the driver of the non-yen cross here. It's overall sentiment. It's the appeal of risk versus the appeal of safety. and thereby the appeal of liquidity, that is safety, versus going to something that is more returns oriented than defensive. And if you think that basically rates in the U.S. aren't going anywhere quickly, then the dollar is indeed overcooked, much as bonds are. One of the most interesting things at the long end, if you take Powell at face value, when he says the long end, as we see it now, is about term premium. It is not about anything else that we're doing. And to his point, if we break down the 10-year yield into term premium, the break-even rate, and everything else and the term premium have been going down since about mid-January. Whereas inflation expectations have actually moved a bit higher. The 10-year break-even has pushed up a bit, which is probably telling you this is not about the Fed, because that's the part of this that the Fed would be responding to immediately, and that's why the 2-year isn't going anywhere. Because you're not in an environment where you could start cutting with rising inflation expectations. That's the monetary policy piece. But you are seeing reduced uncertainty. Because even as the Fed digs in its heels, the market also goes, well, they don't want to go anywhere. So the tariffs are here, they're not here. But it is at best debatable now whether this is an immediate on-ramp to more inflation and a more hawkish Fed. That was certainly the mood out of the election last year. And after the most recent back and forth, it's unclear that this is nearly the issue that perhaps the markets thought. And so, at least as far as inflation and rates are concerned. And so you've seen the term premium come in. If that's the kind of dollar that we have, that is to say a dollar that ultimately harkens back to looking at rates, and those rates are a function of diminishing term premium, then you should end up with longer end yields continuing to come in. That should give you a dollar that's feeling like it's topped. And when you get a risk on day, that all that does is help.
The dollar are looking a lot like stocks, because a lot of those stocks, particularly those in the Mag 7, had a lot of overseas earnings exposure. So if the dollar stays strong or gets stronger, it could be a headwind for earnings here. Roughly 60% of Mag 7 revenue. Yeah. A little bit plus or minus than that, depending upon the quarter, but they're tied to overseas revenues. Tomorrow, the data, inflation, it's in the morning, 8:30 a.m. Eastern, 7:30 a.m. Central Time. Powell's back on the mic, this time for the House Financial Services Committee. The Q&A there tends to be a little rowdier because congressmen are constantly campaigning for re-election every 2 years, so they need to get those sound bites. That's 10 a.m. Eastern tomorrow. Other than that, a slew of Fed speakers over the course of the day. As typical, at the end of every one of these shows, a brief bit of education, and oh so brief today. Head to tastylive.com, top banner, learn beginner futures, or you can find a coursework put together by the fine folks in the Tasty Live research team, or just click the link here on the bottom of the slide. You know what makes up a futures market if you've been with us for some time, but if not, I would go check it out before I would even think about placing a single trade. But that's what the Tasty Live education platform is there for you to do and enjoy. Click the link on the bottom, go watch and learn about futures. The beginner futures course is great, it's free. tastylive.com, top banner, learn beginner futures. With that said, Ellie and I will be back later today for overtime. Be sure not to miss it, 4 p.m. Eastern, 3 Central, always after last call. Until then, good luck trading. Up next, after a brief break, Dr. J's here with From Theory to Practice.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Jim Schultz, and this is from Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Tuesday edition of what it is that we are trying to do. Welcome to the Uncle Jay. He went with the purple tie again edition of what it is we're trying to do. My man needs to get a little extra something in the rotation. I haven't seen the video yet. I haven't seen the clip. I'm still shocked that we made it through the Uncle Jay testimony. But if I'm not mistaken, the little bird on the street, the little bird in the air said that my man went purple tie again. It's like, come on, man. You got to shock the muscle. Every once in a while, every bro knows that. So welcome to the show. I hope that you are doing well out there in your neck of the woods. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and you can join the discussion and you can communicate with your brethren that are also watching the show. You can celebrate if you're a bull or a bear, or you can commiserate if you're a bull or a bear, since everybody's a winner and a loser today simultaneously. A little housekeeping. We do have an extra long show today, so we're going all the way until 3:15 Eastern or 2:15 Central. So if you have a question for me, now would be a great time to drop it in the chat, because I'll try to get to a lot more than I normally would in our typical 45-minute window there. So all right, John, bring us in. Let's see, how are we doing? Do we still have a stock market? Let me see. Let me grab my my drawing tools, which I did not have ready. Which I should have had ready. Even S&P is down 175. That's pretty on. She's got the risk-free instrument, also known as the NASDAQ Futures, extremely high-risk product, down 33. Got the boomers up 27. You got the Russell 2000 Futures Index down 17. So the Russell is the weakest of the bunch by far. I mean, everything else is pretty much around even, plus or minus a couple bips. And then you've got the Russell. The Russell's down like a legitimate percent. They're down 17. You obviously got bonds down 17 ticks. You got, man, look at gold. Gold up 70 cents. But, guys, gold last night, man, I saw gold last night. That was some crazy stuff. Like when the aluminum tariff, like, went into effect. When that Tennessee tariff, like, when that thing hit the tapes, whew, man, gold was on its horse. I mean, take a look at gold. This thing was up to what? Did it get to 3,000? Almost 29. 29.68, so it still had a little ways to go. But, man, gold looked really strong last night. Even silver looked pretty strong last night for all of my Hunt Brothers fans that might be watching. Maybe not as strong, I guess. Silver was only up to, 32.66. Now silver's been pretty weak. And so for all the gold-silver ratio bros out there, this is your time to shine, I think. Or maybe not. Maybe this is not what you want. I'm not sure. I'm not a gold-silver ratio bro myself. And so, as evidenced by my lack of understanding other than the term itself. And so, you got silver down 18 cents. Gold is hanging in there up a little bit. Got the Bitcoin. Oof. Guys, somebody check on your local Bitcoin, bro. Down $2,400 today. Again, we've talked about this many times before on the show. The next tick is 38.5. And I don't make the rules. I'm just a messenger, man. I'm just delivering information. Y'all can do with it what you will. ETH down 100. And then you've got volatility. Volatility futures are down 8 cents. Spot volatility, which oftentimes doesn't count, and it's just purely imaginary, but it's up 13 cents. So there you go. All right, so there's your volatility. Okay, so what I want to do today, though, is, of course, I'm going to get, man, I see you guys already in the chat. Look at you overachievers. Look at you Tuesday overachievers. Man, that's really something. You're overachieving already on a Tuesday? Like, that really says a lot for you, and it's very promising for the rest of your week. We've got Barron's in the house, YouTube Jim's in the house. I see Jeffrey's in the house. Man, I see Rob Banks, Robert. I see Rance Rhythm, Junior Mac, Emmett Morrison, and Sergio Samuel, Don, Ordenu. Man, I'm going to get to all you guys in just a few seconds here. So let's go ahead and, all right, first and foremost, let's look at our SPX situation. So sadly, our SPX, we're actually down like 37 cents on the trade. So this is a bit of a bummer because earlier when the market was weak, I mean, you can see right there, the market right now is around unched. But if we go to like a NASDAQ chart, you can look at the NASDAQ, we can look at EMA S&Ps, we can look at whatever. You can clearly see that the NASDAQ was down to 21,669 at one point. So it was a good 150 points lower than where it is now. And so that was kind of nice for the downside butterfly. ES was actually also down significantly more than it is now. You can see that right now you've got ES at 60.87. This thing was down to 60.57 at one point, so 30 points lower. And then SPX, I mean, this is where our actual butterfly is placed. You can see that SPX was down to 60.42 on the lows today. And so we had some opportunities to, close this trade for. It was never really a huge winner. We had a couple $100 maybe, I think, on the trade, but I wanted to wait for the show just because a lot of times on these butterflies, at least lately, we've had to close them off air. I've had to close them on off days, and then we take our victory laps kind of post-mortem, kind of the after action report. I kind of wanted to do this together as a team, and those are famous last words because now we have a losing trade package here on SPX. And so we're down 22 cents. I mean, it's really nothing. Down 9 cents now. I mean, it's basically us. And so what I'm going to do is okay, so here's the beautiful thing about SPX, right? Because there's still a couple hours left in the day. I mean, we are right there too. I mean, if you look at this, now we're up actually. So now we're up 40 cents on the trade. We'll see what happens. We have an extra long show today. So right now, I'm not going to do anything because here's the beautiful thing about something like SPX. It's cash settled. So because it's cash settled, I'm not worried about assignment. I'm not worried about waking up on Wednesday morning with, a bunch of shares in SPX or whatever. It's going to be settled, cash, anything that's in the money is just going to settle to its essential par value. It's in the moneyness of whatever that might be. So I don't really have to worry so much about the assignments like you might with an SPY or a QQQ or something like that. And so we have the flexibility to just let this guy run a little bit longer if we want to. That's what I'm going to do. I actually had planned to close this trade because when I was doing my analysis for the show and kind of going through what I wanted to talk about here today, we were up maybe, I'm going to say $150 total across both trades in the trade package. So I was just going to close it down. And say, all right, this is going to help to offset, kind of shoulder some of the bonefish burden that's coming Friday night. Like, y'all think those steaks are cheap? They are not cheap. They're B- quality, but you are paying an A+ price on those bonefish steaks. So I was going to shoulder some of that burden here today, but alas, it is not to be. And so right now, let's sit tight on SPX and just let this guy kind of marinate on the back burner there. We're going to put on another trade for tomorrow, actually, because again, all right, guys, listen. So tomorrow morning, so this morning, right, we had Uncle Jay at 10 o'clock, and he went purple tie, right? And so that saved us. Tomorrow, we have Uncle Jay again. He's not going purple tie. 2 days in a row? 2 days in a row? Like, you can pull one over on me like a Friday to Monday type of deal. Like, all right, it was at the end of 1 week's rotation, the beginning of the next. Okay, fine. You could even do like a Tuesday, Friday, Tuesday, Thursday deal. But you can't go Tuesday, Wednesday, back-to-back, same tie, same color. You can't do it. You can't do it. So if he comes out with a black or he comes out with a gray or homeboy rocks like a light blue or something, it's not good, man. None of these are good, right? The purple tie, that means buy. But when he goes black, you got to hand back. And if he goes gray, it might be okay, but you don't know. Nobody knows, right? And so we really are kind of on pins and needles here, not to mention at 8:30, I've been trading a really long time, guys. This number that's coming out at 8:30, I've never seen a more important number, right? So for you out there, if you have like some unforgiveness with your wife, if you have like some unforgiveness with your husband, I would clean that stuff up now. I would clean that stuff up today because you might not get another chance. right? You've got 14 hours until the 8:30 print or whatever it ends up being. And so we got that tomorrow at 8:30, and it's not good, guys. It's not good. But we're gonna play it to the upside. Actually, we're gonna play the market to the upside because I think a lot of the sensationalism is baked into the market. Everybody thinks it's gonna crash. Man, I think we are ripping all-time highs. And so we're gonna do that here in a second. But before we do that, let's look at the rest of what's going on. So Tesla. Man, this thing is really a stick in the mud. If I've ever seen one. You've got Tesla down 17. 333. Oof, man, that's not good. And so the thing about Tesla, we have a 410 long call spread in here, and we can just sit tight and do nothing because we still have 38 days to go. That's an eternity in Tesla, and I mean this thing's going to be, it's either going to be 250 or 410. I mean, possibly by the end of the week. This thing moves so much. It's such a high velocity play in both directions that, there's nothing to do here. We're just going to sit tight and just kind of let this guy work a little bit. Look at our SPX trade now. Now we're up 70 cents. Wow, look at that. That's pretty cool. All right, let's just let it sit, though. Now we're up 88 cents. Man, look at this. Market just fell by a point, and we just picked up 90 cents on the SPX trade package. Look at that. We're up $1. You guys see that? Look at that. Grab this diet strawberry. Look at that right there. We're up $1.03. Man, that's going to get me 2/3 of the way through a bonefish fillet. Bro, we are almost there. We are almost to the full 8-ounce price of the B- bonefish fillet that retails for about $119. And so that's good stuff, though. I mean, it's better than coming out of my pocket. And so there you go. So we'll sit tight, though. Let's see if we can get both fillets because I'm a bit of a fillet guy myself. And so, we'll go ahead and we'll sit tight and see what happens. But all right, so Tesla, not looking too good. I want to talk about so the main things I want to do today, I want to talk about the Starbucks situation in more detail because we started to kind of touch on this idea yesterday when I kind of noticed that the stock had risen up to our short call strike. And this is a situation that if you are a covered call, I'm going to say covered call investor because we're treating this more like an investment, not really a trade. If you are a covered call investor, you're going to run into the situation a lot, right? And you need to kind of have a playbook of how do I navigate, when I'm in this spot because, it seems like it's a bad outcome. It seems like this is not desirable, but that is not true. That is not true at all. This is actually what you want to have happen. Now, of course, in some ivory tower, up in the Sosnoff estate or whatever, where it's not real life. This is not how real people live, right? Yes, it just stays out of the money. I'm never tested. I just collect the premiums and I go on with my life. But that's not going to be real trading. That's not going to be real investments. Things are going to be messy. Things are going to be kind of dirty at times, and you're going to have to figure out a way to kind of navigate forward through the forest. So I wanted to talk about that for probably a good number of minutes, and then we'll do our SPX trade tomorrow. And then I'll see where you guys are at, man. I'm going to see where you guys are at in the chat. Man, I see you guys are already lining up in the chat, man. Single file line. It's very, very good manners on y'all's behalf. Nicely done. I see Theta Traders in the house. Manny TP. Harold's in the house, man. Look at you. G Llama's in the house. Man, look at you guys. All right, let's go ahead. Let's talk about Starbucks. So on this Starbucks situation, here is the first thing that you need to keep in mind. And this is kind of what I mentioned yesterday when we talked about this on yesterday's show, but this is a great segue into a deeper dive into this discussion. Number one, when this happens, and by this I'm referring to you have a covered call, you sell some call that's pretty far out of the money when you first put it on. The stock rallies hard because something happens in the news, or it just rallies hard because it rallies hard, whatever, and the strike gets hit, which for our purposes here, this is basically the strike getting hit. We haven't blown through the strike. This isn't crazy. You've got Starbucks at 111. Our strike is 110. They're essentially one and the same. Obviously, it's in the money by $1.50 or whatever, but for our purposes here, they're basically one and the same. We're not dealing with the stock. It's not deep in the money by $10 or whatever. And we'll talk about those situations too when they come, of course. The first thing you want to keep in mind, you don't need to do anything right now. Never forget, right? You are part of the From Theory to Practice fam. Even if you're just passing through town. Even if you're just staying over for the weekend. You're part of the fam today. You're part of the fam right here, right now. And so remember, From Theory to Practice fam knows that oftentimes our best strategy is what? To do nothing. Not a single thing. Don't do anything. Just say, man, I like where I'm at. I like how things are working. I don't have to do anything. I don't have to go in there and fiddle with things. I don't have to go in there and meddle with things. I don't have to go in there and, conjure up a few extra transactions to get that second Range Rover for the Sosnoff estate. You don't have to do that. Like, you are not required to do that. I mean, Tom makes us as employees, we have to sign on to be required to do that, but you don't have to do that, right? And so just remember that. Remember that you don't have to do anything here. Okay, that's very important. There's no urgency. There's no pressure. Like, you can just kind of let this guy cook. Okay, now let's begin to unpack what's actually happening on the back burner in a bit more detail here. So the first thing I want to draw your attention to, when we put this trade on, let's give it the full deal here. So on January 21st, this is when we sold the call, right? So you can see on January 21st, we sold the call for 93 cents. Okay, let me go ahead and let me right click on that. Let's do the market state snapshots just to get the full context. Yes, so if I click on that yellow diamond, look at that. Guys, that's crazy. That's crazy. Starbucks was at 97.60 when we did this, right? And you can go back. You can watch the January 21st show. I can assure you I said something to the effect of, all right, this is really far out of the money. Like, I'm doing this to have more upside potential. I'm doing this so the likelihood that it gets hit is very low, blah, 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 something like that. I know I said that on January 21st because that's why I would do something like this. Okay, here we are. It's 2 weeks later. 3 weeks later, not even 3 weeks later, I don't think. The stock is now 111, right? And so the first thing I want to draw your attention to is going to be the pricing differential between the option then and the option now. But before we even address that, actually, let's kind of, make sure that we're aware that this is why you do something like that. I know it might seem obvious, and I know it might seem simple, and really, really, like, why are we even spending any time on this? But it's a lot different when it's actually happening, and it's a lot different when you're actually experiencing something like this. And here's exactly what I mean. The reason why, back on January 21st, I sold the call that was really far out of the money is I wanted to leave a wide open runway to the upside just in case Starbucks caught fire. Now, it did catch fire, from the earnings were really good or whatever, and the stock skyrocketed higher. All right, amazing, terrific. This is why you leave that wide runway, because you might not be collecting a large premium on the call that you sell. You can see we only picked up 93 cents there, but you are now able to, I am now able to, in this scenario, I am picking up the difference between where the stock was when I put this trade on, 97.60, and where the stock, and all the way up to my short call strike, basically dollar for dollar, if I hold it all the way to expiration. Now, we probably won't hold it all the way to expiration, even though it's an investment style, but thinking about it in those terms helps to simplify what type of potential profit you have in front of you. And so this is why I did that. It's actually happening. So keep in mind that even though it looks kind of messy, and even though it looks a little difficult to navigate, this is what you want to happen. This is a great scenario for you if you are a covered call investor. The stock just rips higher. Your short call is tested. It's in the money by a little bit. It's even in the money by a lot of bit. Like, these are all good scenarios for you. They're high quality problems. So let's make sure that we understand that. Okay. But the thing I really want to focus on here, but I definitely wanted to use, that was a fairly worthwhile tangent, I think. Most of our tangents, very, very not worthwhile. So that one was actually somewhat on track there, talking about kind of this is what we want to have happen. Let's focus more closely now on the actual cost of the option. So when I sold the option on Jan 21, it was 93 cents. Today, it is selling for $3.85. So it has gone up by what, 3x? Right, that's a 3x multiple there. I mean, 1x would be to $2, 3x would be to $3, and or 1x would be to $2, 3x would be to $3. Or wait, 1x would be to $2, 2x would be to $3, 3x would be to $4. I was kind of doing some Amelia May counting there, and so thankfully though, we figured it out, which she can't always do. She's still learning, but she's getting there. So we got a 3x increase, threefold increase in the option price from 93 cents to just under $4. Okay. let's keep in mind, here is maybe the biggest reason why you don't have to do anything. Now, again, you can see that this Starbucks trade is a little bit in the money now. So this is not a super clean, this is not a totally clean illustration because, if you look at Starbucks at 111.50, let's break it down right here. Starbucks is at 111.50. I have a 110 strike. That 110 strike, if it's 111.50, that's $1.50 of intrinsic. Right? That's intrinsic. And then the other, what is that, 235? So the other 235 is extrinsic. So yes, it's gone up by 3x, but really the extrinsic value is only increased by, 1.5x. So it's not as impressive because the intrinsic is not really helping you. I mean, that's intrinsic value that you're not able to actually tap into because that's what the short call strike does. It kind of limits what you're able to access when it comes to, the intrinsic value. That's essentially the nature of the short call. But let's focus more closely on, the intrinsic value, the extrinsic value, but specifically just the option price for now. Just understand that right now you have that whole option price. It is acting as a buffer against any down moves, any drops in Starbucks from right here and right now. Both the intrinsic value and the extrinsic value. I mean, they're both shielding you from Starbucks dropping by whatever the option price is, $3.85. And so when you have a situation where, the stock rolls up, or not, I don't want to use the term roll. When you have a situation where the stock runs up to the strike price, understand the option price will have increased. Maybe you have a little bit of intrinsic value, which is what we have here. The extrinsic value will oftentimes go up by some multiple of what it was, especially if this happens quickly. All of those things are working to act as a buffer against the stock price going down from here. And so this is one of the reasons why you don't really have to do anything right now. Let's just wait. Let's just see what happens. Because if I roll right now and the stock drops, I'm going to wish I had waited. Like, I'm going to wish I had just kind of sat tight, done nothing, and been a bit more methodical. Now, of course, some of you might be thinking, well, wait a minute, Jim. I think Starbucks is going to be on a tear. I think Starbucks is going to take off 115, 120, 125, and I'm going to get the best roll price I could possibly get right now if I do it today. That is correct if those things happen. But this is where, kind of being an active trader, having an active approach to even something that is kind of an investment style, I think you can tap into, what you've learned about, being kind of a short-term contrarian trader, which is not to say you have to be, full, all systems go, totally green light, contrarian. Like if you're investing in Starbucks for the long haul, then you believe in kind of the long-term trajectory of Starbucks and you think it's going to go higher. Okay, but that doesn't mean it has to happen now. And that doesn't mean it's not going to have necessarily a cooling off period. And so I think something, and again, remember, we want to, kind of have an active trader's mindset when it comes to this, or at least, let's not say mindset, an active trader's eye on something that is kind of a long-term investment. Use your skill set, use your advantages, which doesn't mean that you want to turn this into I'm zigging and zagging on every little move. Like I'm always trying to, squeeze out a little extrinsic value here and squeeze out a little extra decay there. Like that's not what you're trying to do here. That is not the goal. That is not the purpose. You really just want something that is, it's never going to be as hands off as just set it and forget it. Like, buy an index fund, dollar cost average, and then, you get your 7, 8, 9% a year and you just call it a day. I don't think it's going to be that, but still, we want something that is going to be a lot more hands off than what we're doing so actively day in, day out, and week in and week out with our strangles, our ratio spreads, whatever. And so all of that to say, when your strike gets hit, in my humble opinion, I think the move to make is almost always nothing. Let's just see if the stock settles down. If the stock settles down, we have even more extrinsic value that we're going to be able to collect. We have even more decay that's in this position that we're going to be able to, that's going to work towards our profit objectives in this position. And then as things start to get closer, as things begin to move closer, to the March expiration, then we'll start thinking about, what are we going to do now? Are we going to roll it? Are we going to adjust the strike? All those kinds of things. That's why I'm really excited about this project. And a big shout out to Josh because he's the one that kind of brought this idea to my doorstep in terms of bringing in more of a stock component, to the show. And we had like 4 or 5 or 6 discussions around stock for a couple Fridays there in a row. But now I think it makes more sense for us to just kind of turn to the stock positions that we have in the portfolio and just allow the discussions to kind of happen naturally when there's something that's going to be relevant to talk about. Plus, that motivates you guys to watch the show every day because if you're a stock investor, you don't know what I'm going to talk about. So now you've got to watch it every day, and your boy needs that YouTube watch time. So I appreciate you guys, man. So we're going to do nothing, and those are some reasons why. Now let's see what happens from here. If Starbucks goes up to 115, that's going to be a different discussion. If Starbucks goes back down to 105, that's going to be a different discussion. And so we kind of have to see, choose your own adventure. Like, are we going to page 47 or are we going to page 73? I really don't know yet. We have to wait and see, where the plot line takes us. And so that's going to be Starbucks. And there you go. All right. So now what I want to do, though, wow, we are beyond halfway. What would have been the artist formerly known as the halfway point of our 45-minute show. We're not quite at the halfway point of the longer show, but I kind of knew that I had the Elaine Bennis wide lanes today, so that's why we kind of just kept going. So all right, let's do let's see here. How is SPX doing? Oh, we're down now. Oh, that's brutal. Look at that. Now we're down 80 cents. Yeah, we got to let this thing run. We got to just let it go because we're right on the cusp of greatness, man. We are right on the cusp of greatness. Like, if news breaks that Powell's not going purple tie tomorrow, which again, he can't. But if it's confirmed on your Bloomberg terminal that he's not, that's 10 points in the SPX right there. That's the 10 points in the money on this butterfly right there. And so we just need a little something to, crack here in the last hour of trading, and we should be in a good spot in this butterfly. But what I want to do, though, let's go ahead and I'm going to play SPX to the upside for tomorrow, because I feel like, the inflation expectations last week were like crazy, and like everybody's like, oh, it's back, inflation's back, like it's all this, it's all that. I think tomorrow's going to surprise us to the upside. Whatever the number is, I mean, they're just cooking it up and it's all imaginary anyway. But I just think that the market reaction to whatever the number is going to be positive, because no one is really expecting that. At least no one in my circle of, family and friends and influence, which is only like 3 people. And so this very well could be wrong in terms of how the rest of the world is viewing tomorrow. But I think, man, let's just play. Here's what's crazy. So I was looking at this a little bit earlier, and here, I'll even show you guys. So I wanted to do a butterfly, of course, because we've been hitting the butterflies really well. Even the one today is like it's hovering around, even. Like, we haven't burned the stack of cash yet. I mean, we might in the next hour and a half, but we also might ring the register a little bit here. I wanted to do a butterfly for tomorrow too, but man, look at these prices, guys. So for those of you that might be listening to the show, welcome to the show. I appreciate you so much. But if you don't have access to the video feed of the show, it's going to be harder to follow along. So let me see if I can help you out a little bit. We're in SPX. The index is at 60.65 approximately. I'm looking at a 1-day cycle option. So these would be for Wednesday expiration tomorrow. I'm looking at an upside call butterfly. The expected move takes me up to about 61.05. So I was looking at like a 60.75, 61.05. 61.35, just a little ho-hum $30 butterfly. And look at the cost of this guy. It's $6.80. Like, that's crazy. We just did the same trade in SPX for today, and it was like $5 or like $4.50. Actually, I think it was $4. It was like $4. This is the trade that we did, that we have on in the portfolio right now, that we did for today. We did it yesterday for today. Tomorrow, for whatever reason, they're really trying to, man, they're just trying to just juice you on these call butterflies. And so I was like, man, I don't like the pricing of this at all. And I don't want to go any wider, because now the price is just going to go up. Like, if I go from $30 to like 35, so I do 60, 70, 61.05, 61.40. Now it's $9. So that doesn't make any sense. So going wider is not going to help me, even though that would be a more, I don't want to necessarily say more effective, but that would be an easier to deal with butterfly. This is why we like wider butterflies, because they're easier to navigate and they're easier to make money on, to be frank with you all. But I certainly don't want to go any more narrow. Like, I don't want to do $25 wide, because now it's just like, I mean, now you're just throwing your money out the window. That's still $4.75. Man, that's crazy. So I was looking at that, and I'm like, all right, that's not going to make any sense. So I'm not going to do that. I don't want to play it to the downside, because my hunch is kind of to the upside here, and I don't really feel the need to George Costanza myself just yet. That'll probably start to happen maybe around next week, I would say, when the mean reversion begins to slap us pretty hard. But for right now, we're going to keep going with what we're going with, and we just need to, we got to run with, got to dance with who brung you. And so I think we're not going to do a butterfly, because Scott Sheridan and the boys are just not letting us do it. Right? The Batistas, the Sosnoffs, the Sheridans, they're not letting us do it. And again, I mean, for us peasants and us plebes, it's up to them what we can do. We don't get to choose what we do. They choose what we do. And so we can't do the upside call butterfly. So what are we going to do? I think let's just play this really straightforward. You know, if the Sosnoffs and Sheridans won't let us do a butterfly, maybe they'll let us do an at the money vertical spread. What if, staying in SPX, what if I just buy a 60-60 and I sell a 60-70 for 575? So I'm risking 575 to make 425. It's already in the money by $6, so I'm actually picking up a little bit of intrinsic value already. Obviously, that's all going to change with tomorrow, you know, the explosiveness of the number 830. I mean, it's, you know, there's a 25-30 delta that it brings the apocalypse with it. And so it would make sense that this thing's going to move pretty significantly. And so I like this trade, though, because, and I also like doing SPX for the same reasons, you know, as the butterflies. Is cash settled. I'm not going to have to worry about, you know, assignments or whatever with like an SPY or QQQ or whatever. I mean, those things would be fine too. But, you know, I kind of like this because it's right there around the risk parameters that I'd like to apply anyway, right around 2% of the account with about 30,000. I mean, we've got, you know, you're looking at about $600 of risk for a 2% mark. You know, I don't usually like to go over 2% risk on defined risk strategies, especially not like butterflies and like, you know, binary events. And I mean, this is really just a play on Uncle Jay's tie color. Like, I guess I'm actually playing that he does go purple again. I don't know how he can. Like, his hands are tied. Like, again, it's black, it's gray, it's light blue. Those are the only options at this point. But if he double dips on purple again, I mean, this thing is going to shoot 40 points in the money within seconds. Like, once that hits the Bloomberg wire, I mean, we're at 6,100. That's your next tick. I mean, there's just no way that would not be the next tick. And so I think this is going to be our trade for tomorrow, though. And again, because tomorrow is ours, so fill the 580. Because tomorrow is a Wednesday, I'll be with Errol for today's assignment. And so if you want to hear, you know, my thoughts and my comments around whatever the number is tomorrow morning, then definitely tune in for today's assignment with myself and with Errol. But you guys won't see, you know, this trade be managed. You won't see that at all because it's going to expire tomorrow. But whatever happens, I will almost certainly tweet about it whenever it happens. And then, of course, on Thursday during the show, we will take, you know, if the trade worked, we'll take an 11-minute victory lap. If the trade didn't work, I'll mention it in the intro and then never mention it again. And so that is what you have coming on down the chutes in terms of the SPX trade analysis on the backside. So, all right. So, man, we have a lot of SPX trades. I feel like we're just full degen now at this point. What is the butterfly doing, though? Now it's hard to see because I have, you know, in this trade package, you know, I'm down 97 cents, but how much of that is the trade we just put on? You know, like I'd have to unpack exactly what that is. I'm assuming that being down $1 is the, you know, mostly the butterfly and the vertical. But again, we'll let it cook. We'll just let that guy simmer. So, all right, let me see where you guys are at, man. I see you guys in the house. Man, you guys are amazing. I just appreciate you guys so much. Blue Collar Options, man. Oot Bew is in the house. Juan's in the house. Oot Bew, that's a great name. Is that Danish? Is that German? It's one of those. But that's good stuff. Dronin's in the house. Man, awesome stuff. All right, let's see here. Where are you guys at? See, Orgenu's in the house. Orgenu says, greetings from Italy, Dr. Jim. What's going on there, Orgenu? I appreciate you, my friend. In the case of symbols like EWZ, FXI, TLT, do you recommend to reduce the spread from 3 to 5 when doing credit spreads? Thank you. So great question. So like EWZ is an international ETF that's going to be Brazil. FXI is international ETF that's going to be China. And then TLT is just bonds. So that's kind of a domestic one, not necessarily international like the first two that you mentioned. I wouldn't necessarily reduce spread size. Like if you're asking that because you want to reduce the risk, because these are maybe not like, you know, run of the mill, like, you know, well-worn path, way forward through the forest type of stocks that we trade, I wouldn't necessarily feel the need to do that. It's all about, I mean, these are all highly liquid names, like names that we all trade all the time. Now, is FXI going to be as liquid as SPY? Of course not. Is EWZ going to be as liquid as IWM? Of course not. Right. But these are still, you know, they're on the list of, you know, actively traded ETFs in the world. And so you're not going to run into too many liquidity problems. Like, I don't really think you're going to run into like super wide markets. Like here, we can even look. I mean, I know TLT obviously doesn't have wide markets. I mean, there's your bond index. The markets are super tight in TLT. You know, if I go to March with 38 days to go, I mean, you can see right here, you know, you've got the stock at 88. I mean, look at that. You're 1 to 2 pennies wide. Look at that, 2 pennies wide, 2 pennies wide. You're 1 penny wide right there. You're 1 penny wide right there. I mean, the TLT markets, the option markets, even the stock market. I mean, the actual share market is a penny wide too. That's a very, very liquid stock. It's a very, very liquid name. So you don't really need to worry about liquidity in that name. And so there's no reason to reduce the spread size from what you would not normally do. Like if you're normally doing 5s, then do 5s. If you're normally doing 3s, then do 3s. If you're normally doing 1s, then stop doing 1s. Start doing 3s or 5s. 1s is literally just throwing your money out the window. Now, I understand if you're just learning and the goal should not be to make money, the goal should just be to gain experience and learn, then yeah, do some 1s. Do some 50 centers, man. I started with some 50 centers and I felt like a big shot because you are a big shot. Like if you're in there with your little 50-cent spread in TLT, you're in the arena, man. You are in the arena. You are in the game, and you should have everyone's respect. You have my utmost respect. Like money doesn't even matter. Once you've got skin in the game, man, you are in the conversation. You are in the arena. But once you graduate to a point, which is probably not long after you start, where you're like, I'd like to make a little bit of money kind of doing this, I would move on. I would move on from the 50 centers and the dollar wide spreads. I don't really think it's going to be too helpful for you in your money making endeavors. $3 would be the absolute minimum that I would do. 5 to 10 is probably going to be a little bit better. But even if I go to like EWZ, markets in EWZ are fine. I mean, they're not. It's not an SPY, but it's fine. You've got the stocks at what, 25, 26? Yeah, I mean, you're a penny wide on the 25 put, right? You're 2 pennies wide on the 26 call. So yeah, you don't have to worry about that. And then FXI, I think it's gonna probably be similar, maybe a little wider, maybe a couple pennies, 2-3 pennies would be my guess. Yeah, you've got FXI at 33. 33, wasn't this thing at like 100? I haven't traded FXI in a long time. Did they split? Wow, that's crazy. So FXI at 33. Yeah, I mean, the 33 put, it's 4 cents wide. 34 call is 1 cent wide. So yeah, you're less than a nickel. So the liquidity is there for all those names. I wouldn't worry about reducing spread size because it's like an unusual name or anything like that. Steve Cordray is in the house. Says, hey, Dr. Jim, what's going on there, Steve Cordray? Thank you for being here, my friend. I appreciate you so much. I'm just so appreciative of you checking out the show and just being a part of what we do. So thank you so much there, my friend. I see that ES is now green. The butterfly is in the hurt locker. Jeremy Renner style, man. That thing is, man, brutal. But we will sit tight. We will do nothing, and we'll see what happens. Sam L's in the house. He says, Dr. Jim's in the house. What's going on there, Sam L? Says Tesla's dropping faster than a gym bro who skipped leg day trying to ego lift. There you go. Meanwhile, Elon's too busy beefing like a gym bro instead of spotting his own stock. Yeah, Elon's funny, man. He's definitely beefing it up like a gym bro. There's no doubt about that. My man's hitting those weight gainers or something because he's getting the calories in. My man's on ultra bulk. No doubt. But I genuinely don't think he cares about the stock. I really don't. Like the stock price. Obviously, I mean, he's trying to create value. There should be, and we talked about this on like day number 1 of our little Friday stock discussions where it's like, hey, if you have a company that, sells or makes stuff that people want, the stock price is going to follow suit higher over time. If you're generating revenues, the stock price is going to follow suit higher along with those revenues. Now, it may not be a 1-for-1 mapping in the short term, but if you zoom out and look over a period of years, you're going to see a pretty high correlation. I'm pretty sure Elon is concerned about that, and Elon wants, Tesla stock to do well in the long term. But in terms of like short-term fluctuations, like 45 days and stuff, I don't think he gives a rip. I really don't. I don't think he cares at all. And so, but yeah, homeboy is looking pretty beefed up. He's probably on those Jeff Bezos vitamins, which you can't get Jeff Bezos vitamins at Walgreens. Right? Like you gotta know a guy. And so let's just leave it at that. So Don 721 says, happy Tuesday, Dr. J. What's going on there, Don 721? My buying power usage is at 37%. Is that too low? No, that's actually a great number. That's a really good number. We usually like to live somewhere between 25 and 50, let's say. So you're right there in the middle of that range between 25 and 50. And so, yeah, that's really, really good. 37%, you've got volatility is, let's see here, man, it's hot in here. Y'all don't even understand, man. It's already summer here in St. Pete. It's like 86 degrees outside, man. It's crazy. And so, yeah, you're at 37%. You got volatility. You've got the VIX at, 1595. It's not super duper low. I mean, it's like a little bit low, but it's not It's not crazy low. And so, I mean, you kind of have to figure out if that's low or not. You're within the reference points. I will tell you that. 25 to 50 is generally where most traders live. That's generally where we suggest most traders consider living. I've seen some traders go as low as 18 to 20. I've seen some traders go very high, like 60, 70, 80, right? And so there's a lot of play around the edges, if you will, in terms of what could work for you as a long-term equilibrium point. But I think 37 is fine. I think 37 is absolutely fine. One thing to keep in mind is, and I did a segment on this. This was a while ago, a long time ago. I mean, it might be in the portfolio management. In fact, I think it is in the crash course. So if you go to YouTube and you check out the little portfolio management supercut that I have that's on the YouTube channel, and it's one of the crash courses, you'll know you're in the right spot if I've got my dark red button-down shirt on. My hair is much shorter. Equally as kind of like what's he doing with that? But I've got the dark red shirt on, and if I start talking about portfolio stuff and it's like 45 minutes long, you're in the right spot. But the very beginning of the crash course, I talk about portfolio delta and portfolio theta. And one of the things that I talk about is, portfolio theta, kind of taking your portfolio theta, your PT, and kind of turning that into like an annual percentage number. And I kind of walk through how to do that in that crash course. So you can kind of start to figure out like what type of returns do you want to target. There's no guarantees here, right? Like no one can guarantee anything. You can say the theta is going to get me to 10% and you could land at negative 30%. You could say the theta is going to get me to 10% and you could land at 45%. I mean, there's obviously a lot of variation around these numbers, but there's a quantitative rationale and basis for why we like to monitor our theta numbers, because they get us a certain return metrics that give us a good kind of way station along the way. And so I would check that out there, Don. That might help you out a little bit in terms of figuring out, do I want to allocate some more capital or do I want to allocate less capital, or am I happy with where I am right now? So hopefully that helps a little bit. So Sam L's back. Sam L says, Doc, how about a downside trade in Tesla? We wouldn't want to upset your father-in-law. No, we wouldn't. I actually saw him this morning. He hopped in with my wife and my kids for the bi-weekly Costco trip. They went to Costco, which is, this is just basic Costco strategy. Like if you can do it, whether it be you yourself or your spouse or some relative that you have or like a neighbor or whatever, Costco on like a Tuesday morning, that's your jam. Costco on like a Wednesday afternoon, that's your jam. Costco on a Saturday at any time, that's not your jam. Costco on a Sunday, just the thought makes me anxious. Just the thought makes me super nervous. Right? Like Autumn has frequently said, like, hey, we just got to do these Costco trips on the weekend. I'm like, are you crazy, woman? Are you crazy right now? I'll call in to work. We can rearrange piano lessons. We can do whatever we got to do to make sure that we're not in Costco on a Saturday or a Sunday. This is basic stuff. We've been married 15 years. The fact that we still have to talk about this, it really it concerns me, honestly. It absolutely concerns me. But yeah, they went to Costco this morning. My father-in-law, I saw him this morning. Sam L, I don't know, man. It's not looking good. But because we already have this vertical, I do feel a bit married to this vertical. A la Autumn Schultz, and so we're gonna sit tight with this vertical, and maybe we can get rid of it next week. I probably won't get rid of Autumn next week, but maybe we can drop this guy next week. So let's see. She'll probably get rid of me first anyway, so I don't think I'll be the decision maker when it comes to that. Let's see. Sergio's in the house. Good evening, Dr. Jim. I appreciate you a lot, man. I appreciate you more. I appreciate you so much. Thank you for being here, there, Sergio. Junior Max in the house. Good morning from Australia. DAL Strangle 6070. Go get it, Doctor, man. Let's do it. And I can't even say that I'm out of time, which right now I would be out of time, by the way. That's crazy. It goes so fast, but we have another 30 minutes. DAL, is that Delta? Delta is my preferred airline. Delta is my airline of choice. They always, they've always got the screens in front of you, like always. United, it's like 50-50. American, you got to stand up and like hold the subway rails. Like you're not even guaranteed a seat, right? But Delta, Delta's good stuff, man. You get all the things that you need to get from A to B comfortably. So Delta, Junior Mac is saying we'll do a Strangle 60-70. Yeah, okay. I might be open to it. They have earnings coming up though. Let me see here. Earnings. Oh, no earnings. Okay. Let's see. No earnings. Yeah, no earnings. All right, okay. Let's go into March here. Oh, look at E-mini S&P's up 7. Yeah, this butterfly's cooked. It's cooked. Oh man, it's brutal. Anyway, maybe tomorrow we can make it back. Let's do a 60-70 strangle. Yeah, I like it a lot actually. Your buying power is only $800, which is great from a position sizing standpoint. The IVR is decent at 30 without earnings. That's pretty nice. That's kind of harder to find, I think. And so that's good. All of that looks good. You've got a $2.30 credit, which also looks good. And obviously my pop is 65, my P50 is 77. Got a decent amount of positive theta, a little over $6 there. And then the max profit is going to be the credit that I collect. And the max loss, of course, is going to be negative infinity, which, just to be clear for all the new people, only would occur if Delta prints positive infinity bid, and then obviously infinity plus 1 offer. And so if we see that quote, then you're going to lose that amount of money. If we don't see that quote, then you are not going to lose that amount of money. So just so everybody's clear, that theoretically, I am required to tell you that, but practically speaking, it's been a couple weeks since I've seen an infinity plus 1 bid offer spread in the market. So I think we're safe. I think we're going to be okay. So for Delta, let's go ahead and let's push this guy out. Boom. All right, filled right away. I'm not sure if that's good or bad. When you get filled immediately, do you guys have like a feeling about that? I really don't. Like, I know some people have a feeling. Tom even has feelings about that, which kind of surprised me. I'm like, I think he thinks there's kind of a tell there, which is very surprising coming from him. But I don't really have a tell either way. But I'm curious if you guys do. Let's see here. Oh, Emmett Morrison in the house. What's going on there, Emmett? What's up, Dr. Jim? I'll take credit for the McDonald's trade yesterday. There you go. You are, it's all yours, man. That's right. It was you. You're the one who did it on Friday. This isn't even like a phony, like a fake credit thing. I think this was your trade on Friday that we banked together on Monday morning. So thank you, my friend. So Emmett wants to do, how about something for Crocs earnings on Thursday before the open? Crocs. Now, there is a company that has somehow figured it out. Like, they have somehow figured it out, which is pretty impressive. 88.88 is your stock price. It gets no more feng shui than that. 88.88. IV rank is 95. We've got, I don't know. Let's take a look at it. The earnings are Thursday morning, so we would do the trade today because I do like to do all of my trade entries on the show. So this is the perfect time for it there, Emmett. I don't know, man. This looks like it could be a butterfly trade for us, right? I mean, this could be a butterfly, I think, because it'd be a Thursday morning going into the show on Thursday. I don't know how you're not bullish on Crocs, especially being in Florida. For me, I mean, I have to be bullish on Crocs. And so let's see if I do. Expected move goes up to 98.5. What if we did a 90? So let's just kind of go a little bit off kilter here. Let's do a 90, 99, 108. It's a $9 wide butterfly. Can we get this for $2 or less? $1.61, man. They're just giving these things away, Emmett. They're just handing them out on the street corner, man. Look at that. $1.61. Even if we're wrong, which is likely going to be the case, it's $1.61. That's not that bad. That's not that bad at all. So 90, 99, 108. We could make it a wee bit more feng shui. 90, 100, 110. What's that going to be, like 220, 240? 208. Wow, that's so cheap. See, this is what I'm talking about. Like the SPX garbage we saw earlier, no, I'm not going to mess with that. The pricing just did not set up for whatever reason. I mean, the markets are living and breathing, so sometimes that just happens. And it's fine. I mean, it's just the way that it is. But, I like this trade a lot. Let's go with this. I feel a lot better. It kind of felt like I was squaring a circle there with the 90, 99, 108. 90, 100, 110 butterfly for Friday expiration. 3 days to go for 208 on the debit. And let's see what happens. I mean, again, that's what the beauty of these trades, Emmett and everybody else, is, it's a low-cost way to take a shot. It's just a low-cost way, to take a directional shot. Now, it might not work out, and, nobody really knows. I mean, we'll have to wait and see what happens on Thursday morning, of course. But if it does work out, which you've seen here on this very show, you've seen it with SPX, you've seen it with, what other trades did we have? We had a couple other butterflies. Was it Microsoft? Yeah, so we had SPX, we had Microsoft, we had was it Google? Yeah, it was Google. Like AMD. Yeah, we've had a few. Amazon. Amazon. Oh, Amazon was not a butterfly. Was Amazon a butterfly? It was a butterfly. Yeah, it's right there. Yeah, Amazon too. Yeah, right here. So this one to this one is what I was searching for, and then I finally found it. So Amazon worked. I mean, we've had a handful of these work in the last couple of weeks. And so, we'll have to wait and see what happens. But that's going to be my trade there, Emmett, in the old Crocs. And so that's good stuff. And this might be the first time I've traded Crocs, and so that's some pretty exciting stuff. I do have a pair myself. I use them for when I'm doing yard work, actually, and they're quite comfortable. They can't stop the nails that I've stepped in from like fences and stuff. So they need a Croc that's nail proof, but that might be a user error too. So that may not necessarily be Croc's fault. But thank you there, Emmett. Rob Banks in the house. Good day, Dr. G. Happy chest and triceps day on a Tuesday. That's a power move, man. That's a power move. So wait, so you mean to tell me that you trained chest yesterday and then again today? I mean, that's some Uncle J purple tie stuff, man. Like you're going back to back like that? Man, you got to let the muscles rest, bro. You got to let the muscles grow. Just like homeboy, he's got to get that tie to the laundromat. Like there's no way he can turn around a laundromat visit and pick up. Uncle Jay, he's way too busy for that. Now he probably has, people and butlers and things like that are doing this for him. But yeah, man, chest and tries on Tuesday. That's a power move. That's 100% power move. So that's impressive stuff. Thank you for watching, my friend. Robert says, how was the SPX butterfly? Yeah, it's still happening and it's not doing so well. So SPX, yeah, we're down about 250 now. You can see that. You can see it right here. And again, I don't know how much of that is the new vertical spread. Probably not that much of it. Maybe a little bit of it. But let's see here. Wow, yeah. This thing is already. Yeah, wait a minute. This is good for that. Yeah, I was confused there for a second because I'm like, wait a second. SPX is at 60, 70, and the strikes on my vertical are 60, 60, 60, 70. I'm like, did I buy this in the money? But no, I didn't buy it in the money. The market's just been a little strong in the last, 20 minutes, and it's rallied to where the spread is now fully in the money. So we could take that thing off for like $1 gain, probably. But I'm going to sit tight. Obviously, that's going to be a tomorrow play. And then you've got the butterfly here, which you can see it has essentially lost all of its value. We put it on for $4. It's now currently only marking for $1. And so in my opinion, there's no reason to take that off. In my opinion, there's no reason to save that $1 because as we've seen just in the last couple of weeks, a number of times, a handful of days, I mean, things can start to move, especially to the downside, very, very quickly. Right? Very, very quickly. Again, I mean, Trump tariffed Tennessee last night. He's probably going to hit Alabama today. So when he starts hitting those adjacent states, it's like that's probably going to send the market down at least a little bit. And we don't need it down that much. We only need it down, just another 10 or 15 points. And so I would say that an Alabama tariff would probably do the trick. And so SPX not looking great there, Robert, but we sit and we stew and we hope, which of course is our best strategy. Ranch Rhythm says, howdy, everybody. What's going on there, Ranch Rhythm? Appreciate you, my friend. Thank you for being here. Jeffrey Jones in the house. Good day, Dr. Jim. Jeffrey goes on to say, do you have any thoughts on how low Tesla will go? No, I have no thoughts. I'm actually very surprised at how weak it's been. I think we're probably due for some type of rebound. I think we're probably due for some type of rip to the upside. Nothing crazy, 30, 40 points to the upside over the course of, a couple of weeks, I would say. And so I think it's kind of it feels a bit overdone because it wasn't that long ago. If I bring up Tesla here really quick. I mean, yeah, it wasn't that long ago. Yeah, I mean, it was over 400. I mean, look at that. It was close to 500 just in the middle of December. It was only 2 months ago. And it's now shaved, basically 30% of market value. I mean, that's pretty wild stuff. And I don't know what the news is that's driving this. I don't know what the catalysts are or what they're supposed to be for this sell-off. But I'd be surprised if it continues. I would be surprised, just to give you guys some hard numbers. You've got Tesla at 330. I think the low-hanging fruit is Tesla hits 360 before it hits 300. I'll even go so far as to say Tesla will hit 380 before it hits 300. I'll even give you the asymmetry there. And so that basically cements that it's going down to 275. And so thank you, though, Jeffrey. Those are my thoughts on Tesla. YouTube Jim's in the house. Greetings, Dr. Jim, your assistant and the crew. And I'm thankful I am able to attend, but we are thankful that you are here. Thank you there, YouTube Jim. I appreciate you so much, my friend. And I'm just so thankful that you're here, and I'm so thankful for all of you guys. We couldn't do what we do without you guys, man, so thank you guys so much. Let's see. Theta Trader says, also, make sure to welcome the new guy, Gus, with a nice pomade care package. Yeah, I don't do a lot of pomade, actually. It sometimes has a little too much shine for my liking. I do pretty much everything else, but I don't do a lot of pomade. Might do some cream pomade. Like, you got to kind of get that matte mixture kind of tossed in there too. But we do a lot of, we do your sea salt sprays. We do, today we're just going like sea salt spray. That's all this is. It's just straight sea salt spray. And so I don't know how I feel about it. I think it's I think it needs a little more something. But yeah, I'll hook him up with something. There's no doubt about that. And so let's see. Baron Bigley says, breaking, Trump to sign Doge executive order. Okay. He hasn't already done that. I feel like that's old news. I feel like he's been doing that for like weeks. And I think he's actually given Elon like permission to go ahead and sign those EOs. Like he's delegating those EOs to Elon. Like that's Elon's job now. And so I'm pretty sure that Elon's got, he's got all the authority to do all that kind of stuff. Junior Mac, got a call, Broken Wing Butterfly and GC. Watch that sell-off. Very much welcome. There you go. Nicely done, my friend. And Broken Wing Butterfly and GC. Okay, a little Shooter McGavin in the house, people. There you go. Look at Junior Mac slanging those BWBs down in Australia with those Australian dollars, which is that's some good stuff, man. Robert says it's a good day for an IBIT strangle or IBIT strangle. I think it's called IBIT, not IBIT, but I kind of think we'll stick with IBIT. Yeah, I don't know. I think I'm going to pass on this. Oh, that's not right. I'm going to pass on this only because we just did this just recently. And, I feel like, the crypto space, that's one of those things where, you can only dip your hand in the cookie jar so many times. And then the next thing you know, you're left with, 10,000 shares of Fartcoin and you're not exactly sure what to do with it. Right. And that is a problem that a lot of people face. And so I don't really want to end up in that spot myself. And so I am going to, I think I'm going to pass on IBIT. But Theta Trader, that would be fantastic. A nice crypto winner and a 30 to 40% stock correction would be perfect. Oh, you're talking about my Bitcoin call earlier, I think. Yeah, we'll see, man. I think I've been really clear about my, my feelings about the market this whole year. I do feel like we're headed lower eventually. Sometime this year, and probably significantly so. I would be surprised if there isn't, some rips and some rallies and some tears to the upside, kind of mixed in there, of course, along the way. And so that would be my thoughts on that. And then let's see, Stephen Jr. is in the house. What's going on there, Stephen Jr.? I appreciate you, my friend. Manny TP's in the house. Says Dr. J burning with a 321 390 Tesla straddle that I got to through rolls, $32 net credit. Hurting with the recent drops, what would you do? Yes. Okay, so if you've still got the straddle on, you've got $32. You're at a 390 strike, you said, right? Yeah. So did you say you're in? Yeah, you're in March. Okay, so you're sitting on this strategy right here. So you have this guy. Okay, so you're down $40 on the trade. So what do you do? Okay. Well, when you have a straddle on and you want to make an adjustment and you want to do something to kind of, soften the directional risk and maybe bring in some more extrinsic value and try to kind of, start to mitigate your way out of this loss, the only move you have left is going inverted. That's the only move that you have left. And so since let me think about this. I'm not used to starting with an inverted strangle, so I have to think about this for a second. So the tested side is obviously the put side. So the tested side is going to be this one. It's going to be this guy right here, which again, I put a buy just because that's what it would cost you to buy the position back. What you want to do is you want to roll the 390 call down to some call that's down here. Okay, so you've collected 32, you said, right? It's marking at 72. Okay, so let's remember those numbers. What you would be looking to do here, let me go ahead and clear that away. You would just simply be looking to buy back the 390 call. And then let's say you go to the at the money strike and then you sell the 330 call. That would leave you with a 330, 390 inverted strangle that you would have collected $50 on, 32 plus 17, so 49, but let's make it simple, 50. You would have collected $50 on, and it's a $60 wide inverted strangle. So that means, just so everybody's clear, Manny, if Tesla rallies above, or if it stays between 330 and 390 and you were to hold it all the way to expiration, your best case scenario is you lose the differential between the width of the inversion, 60, and the total credits you've collected, 50. So you lose $10. It's obviously a lot better than the 40 that you're, kind of squared up to lose right now. What are some of the, so those, I guess, would be some of the gimmies, right? What are some of the gotchas? Well, it's still undefined risk, so you still have to, you still have to understand that you are still exposed to undefined risk outside of both strikes. You're outside of 330 on the downside, and even outside of 390 on the upside. Like, you still are going to be exposed to undefined risk, just like you would with a strangle. So you could lose more if Tesla keeps dropping, or if Tesla rips all the way back and goes above that 390 strike on the other side. You could lose more. The other downside is, this is going to very much be a wait and see type of game, which is not normally a problem for us as premium sellers. But when you're, bleeding cash and you're hemorrhaging cash on a position, it feels a lot different. Like, it feels a whole lot different. Like, man, I still have, however many days to March expiration, 38 days to go. Like, that's an eternity, right? With, Elon Musk and, tweets and Doge and all these things. And so it's like, man, that could be a really, really long time. So those are some gotchas. You have to be ready to be in this trade for a while. Now, what do you do at 21 days to go? Well, that's where you'd be looking to roll to the next cycle and kind of reset the clock and pick up more extrinsic value and that kind of stuff. But let's look at Tesla really quick. When are the next earnings? Okay, they just had earnings, I think, right? Yeah, they just had earnings. So you could probably roll to April, no problem. You may have a problem with May just because there may be earnings between the April and May cycle. So maybe you can roll to April. If things are working out, you want to pick up even more extrinsic value. You keep the same strikes, whatever. You could do that. So, those are some things to consider. Now, what's another thing to consider? Rather than rolling, rather than going 390 all the way down to 330, you could go 390 to like 350. This would be something that I personally would give a lot of credence to where you kind of sandbag where the stock is now. You're still a bit more bullish. You're not as neutral as you would be if you went all the way to the at-the-money strike. But now look at how nicely this sets up between the width of the inversion and the credits that you've collected. Now you have a $40 wide inverted strangle that you would have collected $40 on in total. The 32 that you have now and the 9 that you'd pick up on this roll, so 41. That puts you in a better P&L position. Now you are more directional, and the inverted strangle is not as wide as it was. So there are some gotchas, of course, that come alongside these gimmies. Hopefully that gives you a couple of things to think about in terms of what you can do next. You could sit and do nothing and just hold the straddle. That's a possibility, of course, and then you would just be mega pint bullish in Tesla and still exposed to undefined risk losses, if it keeps going lower. Probably some type of inverted strangle makes the most sense for you right now. And just understand that it's going to be a waiting game, and it's going to take a little bit of time for the extrinsic value to go down. So hopefully that helps a little bit. Harold's in the house. What's going on there, Harold? Man, I appreciate you, Harold. Thank you for being here. I'm 8 minutes late and behind by 16,000 comments. Yes, you ran into the overachiever crowd here on this Tuesday. This beautiful sunny St. Petersburg Tuesday, which is basically every other day. This is the sunshine city of the country, and so it has earned that name for sure. But thank you for being here there, Harold. I appreciate you. Harold goes on to say, there's something wrong with the barcode. He's talking to Theta Trader. Theta Trader says, whip out your VIP comment skipping card. And then there's something wrong with the barcode. Yeah, that's pretty funny. Harold says, Dr. J, how many push-ups can you do in a row? Man, I don't know. I'm not really a push-up guy. Well, actually, no, I take that back. I have been doing some deficit push-ups. So Sam L, you'll like this. I, of course, got this from Mike Israetel. It's a great movement, man, especially if you slow it down and really kind of milk the eccentric and all those kinds of things. I've been doing some deficit push-ups, which I feel is a really, really nice chest exercise that I hadn't really thought of before. Because you're, kind of elevated, you can really kind of focus on the pec stimulus as opposed to the tris and the delts really taking over like a normal push-up. I have no idea, Harold. I mean, for deficits, I can probably do maybe 25 to 30 if I did like regular tempo reps. But because I'm trying to slow them down and do all kinds of crazy stuff, they end up being a lot less than that. But I'm not really a push-up guy. Harold says, how's chess going? Man, chess is going great. I play way too much. I'm still not very good for as much as I play. My rating is about 650 or so. I had it up above 700 at one point, but then I just kind of started. I got on tilt. A couple of guys put me on tilt because they were like sacrificing rooks to checkmate me with a pawn. I'm like, yeah, y'all be cheating, man. There's no way that you're doing that on your own at 700. Like we none of us know what's going on right here. We have no idea what we're doing, and you just sacrificed a rook to checkmate me with a pawn. No, bro, you got the engine right next to you, and we both know that. And so that threw me on tilt a little bit. I went from like 720 to like 620 at 8 points a game in about maybe 30 minutes. And so, but thank you for being here there, Harold. I appreciate you. Harold says the consensus is an uptick on inflation. Yeah, but it doesn't matter. None of it matters. If it meets and not any higher, why not rip? That's what I'm saying. No, we're going to definitely rip. There's no doubt about it. I'm like 35% sure of it. Randall says earnings on Hood. Hood? You mean Robinhood? Wow, they're still in business? No, there's no way. $54? No, man, they'll give anybody solvency these days. Look at this. No. Look at this stock. Man, what have you all been doing? Man, you guys been trading some Batcoin on Robinhood or something. I don't know. Look at that. That's crazy. That's a cup with no handle. Look at that. Where's the handle? There's no handle. It's supposed to be there, maybe there. And that is the upside of a cup with no handle. I'm not exactly sure what you technicians think about that, but that is pretty impressive, I have to say. So Hood at 54, I'm going to pass. Just because, I haven't traded Robinhood in a while. Are they today, though? This will be interesting. Am I going to pass? Oh, it's tomorrow after the bell. Okay. Wait a minute. Hold on. Maybe we'll do a little something. There's just no way. I feel like we have to play this to the downside. Wow, the expected move is pretty juicy for a $50 stock. Yeah, I don't know. Now I think I might be interested. So we'll just take a cheap little butterfly shot. Let's do a little something. What if we do a 54, 48, 42. What is this going to be, like $1? Like 80 cents? $1.50? Wow. Vlad's really sticking it to us here on this these butterfly prices. Let's push it out a little bit so I can lessen the impact of that. Maybe a 53, 47, 41, maybe $1.20, $1.39. Wow, that's still pretty significant. Well, if you can't beat them, then I guess you got to join them. Let's widen out the butterfly to pay a little bit more. Just so I have a better chance of making money. That's only $1.90. That's worth it to me. I didn't mind going tighter, but I was expecting it to be super cheap, like $1, $1.10, whatever. But it was like $1.30 or $1.40. That's too expensive for a $6 wide butterfly, in my opinion. So now we're going to do $7 wide for $1.90. The strikes are 54, 47, and 40. Playing Robinhood to the downside, again, just using common sense analysis here. Only on From Theory to Practice, only on the Tasty Network. You will not find top level grade A prime analysis like this anywhere else on the internet. And so there you go. Got a little Robinhood going for tomorrow too. So that's some good stuff. Let's see. G Llama says, I've never been to a bonefish. But if I ever go, excuse me, it will be 100% because of Dr. Jim talking it up. So I'm telling you guys, like we joke about it and stuff, but I'm telling you, when you go to Bonefish, here's what's going to happen. You're not going to have a bad time. Like the ambiance is cool. The food is good. The food is very good. Is it overpriced? Absolutely. Like, again, are you paying an A+ price tag for a B- product? Yes, you are. But that B- product, it's right there, man. It's right what you need to get you to the next stage in life. Like whatever nourishment that your body requires at that moment, Bonefish is going to bring that to you. And they're going to bring it right to your table. It's going to be amazing. Like no other restaurants do that. Do they bring the food right to your table? I don't think so. Like Bonefish is going to do that for you. And they won't even charge you any extra. Maybe a little bit extra, but it won't be too bad. So G Llama, if you go, be sure and let me know how it goes. Let's see. Juan's in the house. Oopyu's in the house. Says, hey, Dr. J, it's Ravi. What's going on there, Ravi? I appreciate you, my friend. Thank you so much. Let's see. Theta Trader says, don't get your expectations too high. Oh, come on now, Theta Trader. Bonefish is fine. That's good. But not Michelin star or anything. Get the bang bang shrimp. So that's so funny. So that's so funny that you said it's not this, it's not that, and then you're giving recommendations. Like you're telling my man what to get. Of course you should get the bang bang shrimp. I mean, I'm actually kind of mildly allergic to shellfish, so I don't get the bang bang shrimp. But I've heard nothing but amazing things about the bang bang shrimp. So you should 100% get the bang bang shrimp, and I think that you will be happy. Obviously, you got to eat the bread that's there. The bread is terrific. You know, it's usually only 2 to 4 days old. It's right what you need. Bang bang shrimp, and then I would get the fillet. I would straight up, no joke, get the fillet. When I take Autumn on Friday, I will be getting the fillet, and I'll be getting her the fillet too. And so it's going to be amazing, and it's going to be terrific. Blue Collar Options trading notes. What's up, Dr. Jim? You will see me from now on. I love your show, man. I appreciate you there, Blue Collar Options. I will see you from now on, and I will send you that cast that we talked about for you planting this comment in the stream at this very time. So thank you, my friend. I'm excited to have you be a part of what it is that we're doing, and if I can ever help in any way, please just let me know. I'm very happy to do it. Colonel says I'm good at doing nothing. That's good. It's a skill. It absolutely is a skill. Let's see. G Llama says bang bang shrimp with a side of EpiPen for me. Yeah, me too. And so maybe pass on the bang bang shrimp. Just go with like the mussels or something. And so Finwest, good morning, Dr. Jim. Happy to be here with you, man. I'm happy that you are here with me. Thank you so much, my friend. Let's see. Okay, Harsha, here you go. Harsha says, Dr. Jim, I have a covered call situation. I bought hymns and I sold a 35 call. Might have to let the stock go and get back to selling 35 puts. Yeah, maybe, you know, I mean, so you're in hymns. Okay, so you're in March, right? Yeah, so you're in March, a 35 call. Yeah, okay, so a couple of things. So number one, you could let the stock go and just sell puts. That, you know, it's your classic wheel strategy. You could certainly do that. It's totally fine. You know, you're all good to go. You do have earnings coming up on February 24th. And so here's a couple of things to keep in mind. Number one, if you like the stock for the long term, man, you could just hold the short call going into earnings. And then it's like, you know, if the stock rallies and it shoots up significantly, then of course you're kicking yourself. It's opportunity cost, it's whatever, but you're not really in too different of a situation that you would be in right now. But if the stock goes down, keep in mind that you have a buffer that you've built in now all the way from where the stock is down to the short call strike. So if it falls to 35 or 36 or 34, then that's basically right where your short call where your short call strike is. So you kind of have that built-in buffer. So that's one thing to consider. A second thing to consider is, you know, you're in March at the 35 strike. So you've got this guy right here, right? If you have, again, this is why I always say this really only applies to an investment. If this is a trade for you, then it's over, it's done. Like, it's done, close it, like, you made some money, everybody goes home happy. But if this is like an investment for you, you like the stock, you like what they're doing, whatever, then, you know, you could take this 35 call and you could roll it from 35, close up March, maybe go out to like, I don't know, I'd go out to like at least May probably, right? Sell the 35 in May and look at what you can do. You can pick up another $2.34. Now, maybe you're thinking, well, I don't really want to stay at the 35 strike. Well, here's what's amazing. You can start to slowly move that strike up. 35 to 36, you still collect $1.75. Up to 37, you still collect $1.25. Up to 38, you still collect 67 cents. Up to 39, you still collect 17 cents. So you're giving up your premiums. You're giving up the extrinsic value. But what are you doing? You're reclaiming all the intrinsic value that they took from you. You're reclaiming all the intrinsic value that the Sosnoffs and the Batistas and the Sheridans, man, they just snatched it right out of your grasp. Right. And of course, you did this to yourself when you sold the 35 call, but this is what you sign up for, right? With a covered call. And so those are a couple of things to think about. You could do nothing and say, hey, I've got the coverage on the earnings call. If it goes down, I'm actually in a decent spot. Or you could consider, you know, rolling it out and maybe rolling the strike up a little bit. So I got to go. I got to get you guys over to Tim Knight. But man, I appreciate you guys. I appreciate you guys so much. If I can ever help you, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Hello, everybody. Tim Knight here, and it is back to the wonderful world of charting. Not too much action in the market at the moment. The ES at this moment is up 0.06%. Another nice sell-off, laid waste. The NQ down about 0.15. The RTY down 0.7. It's a mixed bag. And I guess the big event's going to be tomorrow morning. The CPI comes out once a month. Next day is the PPI, which don't think people really care that much about. I think the last CPI was produced a rally. People were kind of relieved at what they saw. And Powell coincidentally spoke today and tomorrow during the, I guess, the semi-annual Humphrey Hawken Kabuki Theater shtick. And I guess that was well received, considering that the modest sell-off we had was undone. I've got charts for you. Got it preloaded, and let's jump in and catch up with what the markets are doing by way of the X and Y axes. So here's the spider, and there's kind of two stories here. Story number one was this lovely little rounded top, which seemed to be breaking down on the 13th of January. Total fake out, and went kapoing right up here and broke out of this rounded top. So that rounded top is just in the dustbin of charting history at this point. I've left this picture here just as a reminder. And then since then, we've been in this sort of odd pattern of ascent and surprise drop, ascent, surprise drop, ascent. No surprise drop yet. So far, we behave rather differently. The past instances of these big red bars, 1, 2, 3, the prior two times it fell suddenly. This time it's just hanging out. It's actually relatively strong. So no shocker yet. I think semiconductors continues to be a really important thing to keep an eye on. Those are showing some strength. And the sort of like bear, surrender, and give up completely would be across above this level. The kind of yellow light to that red light would be more along lines of here, this high. And I'm very confident that whatever happens with the CPI tomorrow will define whether we cut through this high of the shooting star and push toward the gap, or just slump and fall away from even this low level. Relatedly, XLK, the technology ETF, is still hanging out under its own gap right there. And once more, it would put some wind inside those bullish sails. They would cross above that dash line if it sealed that gap. Hasn't happened yet. And we're really past the bulk of the earnings season at this point. Yeah, it's kind of up to a combination of economic data, like the CPI, and surprise political announcements like, we're going to do tariffs against, fill in the blanks, Mad Libs. EFA, worldwide equities, is still beneath its broken trend line. It's certainly taking its time. If this is ever going to fall, it is taking its sweet time because it's persistently below the trend line, but it's still climbing. So we're seeing some strength there, so about 0.2%. And I know that hardly any of you would trade this kind of thing, but it's an interesting chart nonetheless. The Nifty 50 futures, Nifty 50 was an American term, I think, in the 60s. Hotshot firms like Polaroid, now long bankrupt, constituted the Nifty 50. It's kind of like the only stocks you really ever need. They've co-opted that term for the Cymex, apparently, and this is looking rather hazardous on this rounded top. Now, gold. Gold had a terrific night and sputtered. It got very close to $3,000 an ounce. As I said yesterday, my belief was that precious metals were really due for a breather. They had gone very far, very fast. And I was wondering if that would pan out when I glanced at it the wee hours of this morning, it was up to like, how high did it go? Something like about 29.70 almost. But as it is now, in candlestick terms, this is a spinning top, little bitty body here and big shadows above and below it, which suggests a lot of uncertainty, which is no surprise here. So wouldn't be surprised to see precious metals affirm that uncertainty with a sell-off in the coming day and beyond. Likewise, miners, GDX, these are actually down. We did not today exceed yesterday's high, and this was a very sharp rally with nary a breather in the midst of it. It was pretty much straight up since New Year's Eve. So the GDX went from around 34 to about 42. So that's something like 30% or so in the span of, 6 weeks? Pretty impressive. But I think it's a little long in the tooth for the moment. A couple of other charts I stumbled upon I think you might find of interest. This isn't particularly heavily traded, but this is Iron Mountain. I didn't look at the fundamentals on this. Oh, PE of about 300. Okay, there's a bargain. But got another gap here. And, strictly speaking, the gap's way up there. I dragged it down pretty low because I don't know if it'll muster enough strength to get back up to there, but that is where the gap is located. 110.67. There's a little distribution top. Fell, retraced, fell hard, and created the gap. Trying to retrace again, which is why I'm having doubts it'll make its way to the gap, but it could. So that's IRM. And Murphy Oil, very different critter. Oil stocks, XOP, the components thereof, have been very strong the past couple of days, which hasn't thrilled me because I still have puts on DVN, which is up 2.32% right now, and OXY, which is up less, about 0.69%. But it hasn't been fun on the bear side of oil producers. But this has sealed its gap up. And it seems altogether likely that probably is about all she wrote on that one. Did kind of the same thing here. We had a gap and pushed its way higher, just about sealed it, and then began this tumble. Added to which, this stock appears to have kind of a habit of hammering out tops and then falling. So here, kind of missed one. Over here, kind of a sloppy one. And then, come on, you. And then most recently here, which I won't bother tinting, I'll just leave those gaps there. So MUR, Murphy Oil, for your consideration. And one other one of these very richly valued items that seems to have topped out, our old uniform maker, Cintas, CTAS, like so. Here's the top, there's the gap down, pushed all the way back, sealed the gap up, and, quite, for a company that makes like nurses' uniforms, pretty richly valued at 48. So I'm sorry, let me tell a non-charting person to bugger off at the moment. So moving on, bonds, TLT. What we had talked about here was the idea of a head and shoulders top, which isn't at the top of the chart. It's in the midst of a downturn, generally speaking. It's pretty good, a little sloppy. The top itself was something like this. And as you see, we kind of penetrated that for a couple of 3 days. So it's not as squeaky clean as I would like, but it has apparently topped out a few days ago and it's been slipping. And should the CPI come in hot tomorrow, I would expect that slipping to accelerate and cause some pressure with the likes of, XHB, IYR, things like that. Here is XHB. It's just a teeny bit up right now, but we've got a hard stop on that one at 108.64. And then BZH, Beezer Homes, I think it's how it's pronounced. There's the line limit on that one because and this is a cool one because this had been a really nice breakout. So back in the day here, back in say September, even October, this was a clean bullish breakout, but it failed. It got weak, tried to recover, and then boom, down it goes beneath its breakout level. So important bullish failure. And the closer it gets to that line, the more tempting it gets as a short setup. Let's go through a few securities that are kind of related to the political scene these days. One, quite obviously, is the Trump coin, which had almost an $80 billion market cap when it peaked. And there was a really interesting article over the weekend about the coin, and simply stated, just a tiny number of insiders made a fortune on it. There was one, it's crypto, so you don't know exactly who's doing what, but apparently this was a Chinese account, about like over $1 million at 18 cents. Who knows what they sold it at, but the speculation was that it might have made billions in profits on that. And since then, by last count, about 800,000 wallets had taken a loss on this, and it just keeps slipping. So this has gone from almost 80 down to $15 and change now. So you don't see a chart like this very often. Kind of amazing. Geo, which I mentioned before, private prison company. This is it's fighting back at the moment, as you can see, but it is breaking down nicely. We've moved on this one from 36.46 down to about $10 beneath that. So I'm hanging on to those puts. I took a little off the table, but I still like to look at that, and it's still very richly valued. Tesla, of course, for obvious reasons. Oh, this poor thing. Look at this tumble. Fibonacci's, we talk about it every day. Once it gave up the Fibonacci support, boom. This thing has moved from 488.54 then to 326 and change. That's something like 35%. Hundreds of billions of dollars in the span of not even 2 months. You can see it accelerating. We've talked about this over and over again. And what do I suggest as support? First stop, around 306. So amazing what's going on here. I don't know. It's just, yeah. We saw this coming, and I think it's just going to keep falling. So zero surprise on that one. Everyone was gaga over rockets a week or two ago. That fad has once again abated. Here's LUNR. This peaked up here around $25. We're at around 18 now. And of course, poor old Virgin Galactic SPCE. This is pretty much done nothing but go down for years. This peaked on a split adjusted basis in the quadruple digits. And now maybe you could get a latte for one of those shares with no cream. I don't know. It's gone from about $1,200 to $400. And Chamath, one of the big tech bros, was closely associated with this thing. But I think sold out at much better prices, from what I understand. The steel tariffs, the brouhaha from yesterday, as I mentioned, I have puts in NUE and clung on to those, and I'm kind of glad I did because, as I had hoped, the excitement over steel and aluminum was kind of a one-day wonder so far. Cleveland Cliffs blasted higher yesterday, opened strong today. It's been selling off, though. We're down over 4% right now. And in my own holding, sadly, it's still up a little bit, but I still love the looks of this pattern. So it's up about 0.2%, but I really think there's a big old stoplight facing that thing. Soundhound continues to do great, down almost 10% now. Earnings are around NVIDIA's earnings, so they're a couple of weeks out, but really looking good on that. And I believe tonight, Supermicro, SMCI, has earnings. We're down almost 7% on that, having almost perfectly sealed the gap up yesterday because it had a very strong run here. So you know what? Since that's earnings tonight, I'll just leave it at that. That'll be your last chart. So thanks for coming by. Good luck with the CPI, and I'll see you here on Wednesday. Bye-bye now.
you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! Eliminate! You were on Eliminate! Oh my God!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
Did you get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's
know.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "Oh, I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custards and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we pour the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can't because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
I'm a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like man work and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish. For sure.
No. I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives.
Dear Kaylee, hats off to you for being such a culinary genius.
I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for the last call, and really a kind of a last call of two different tapes. One is the whole equity market. Even the S&Ps up $3, doing nothing. 850,000 cars have traded.
Yeah, it's another second slow day in a row.
Second slow day in a row. Kind of nothing to see here. You know, no worries about anything. All things are fine. Nasdaq's down 50, no big deal. Russell down 14. Dow's picking us up a little bit, up 140, been the strongest of the group. And volatility in by 10 cents, nothing to see there. Bonds getting a little bit weaker, down 20 ticks, but still.
Yeah, they've been there from before the opening today.
You were going to say something?
I said the bonds have been there from before the opening. They haven't moved from the opening tick.
Tom's volume to me doesn't sound right.
Oh, the bonds have been there since the opening tick today, just so you know.
Haven't really moved. They're just sitting at 114.25. Went down to 22. You said they had to go a little bit lower for you to sell some puts. They've been sitting right here, but they're down 20 ticks. But really, this is a tail on the other side of the coin. You got some stocks down. Tesla down $25, down $100 in a month. Netflix down $17. MSTR down $14. Coin down $13. Reddit, which never goes down, is down 11. Palantir, PLTR, down about $3, I believe. Correct? Yeah, $3.50. SMCI down $3 and change. There's some stocks underneath here that have been leading us places that are a lot lower. Now, this is a market that has Apple up $5 and Meta up $3, but the magnitude of the move is really to the bearish side. It looks a lot more bearish or a lot weaker than the market would show you, with even the S&Ps doing nothing.
The tale of two stocks was the best way to explain this. Apple has been crazy strong all day, and it's in the Dow. And Tesla has been weak all day, but it gave it up this afternoon. When we went off the air today, the S&Ps were about unchanged, but the NASDAQ was about up 10, 12 points. It was actually higher. The NASDAQ has turned around because Tesla just gave it up, and it's just too big a stock. And, you know.
Turned around by 50 handles. I mean, not a huge move in the NASDAQ.
No, but it's a crappy day. It's a slow day. I mean, the S&Ps all day have gone from, down 15 this morning to up 2 right now. It's like, it's a crappy range. It's probably the worst trading day that we've had this year.
Since yesterday.
No, yesterday was still better than today. So yes, this is the worst trading day of the year, I think. Today. I had the most boring trading day of the year, and it even suckered me into doing a play in Tesla. I waited until
it's so funny you say that. I did my option trades today. I did them both in Tesla.
Well, I waited all day in there until the stock was down $20 or $19.
I waited till it was down 19. You're $1 better than me.
I waited all day, thought I was a genius, sold a strangle. Now I'm down $1 on it.
Yeah, Tesla volatility upticking. IV rank of 53. I think when I did mine, the IV rank was around 47 with Tesla down $19.
Mine was 46.
I think it's kind of interesting, and this is what I was looking at when I was talking about it. When I was talking about my trade on my podcast, when you look at what happens to Tesla when it goes lower, when you go here in November, volatility went lower. When you look here, earlier in October, volatility goes lower.
Yeah.
But when you see volatility uptick, it almost seems like it's kind of a capitulation to the downside. That was my.
I would agree. Thesis. I would agree with you that when Tesla volatility should expand to the upside, not to the downside. And when Tesla volatility expands to the downside, it could be capitulation, or it could be the sign of, I told you what my feeling was before on Tesla. I'm surprised it took this long, because Elon has pissed off Tesla buyers. He hasn't pissed off anybody else. Like his base, his Tesla buyer base is who he's pissed off the most. And it doesn't make any sense from a business side, except that he's got so much money, he does not care. And he has so much unrealized profits in some other ventures.
He needs the write-off, is what you're telling me? He needs the write-off? Are you going to be Vanetta now? Are you playing the role of Vanetta?
No. He just doesn't care. He doesn't care. But anyway.
He doesn't care. Oh, he's beyond even needing the write-off to the point of he doesn't care.
He doesn't care.
Nobody cares all of a sudden. You become the richest man in the world because you don't care.
Doesn't care. But here's the thing. Stock's down $24 today without an uptick.
Yes.
And volatility has not come in at all. And I think
expanded.
I'm going to sell more premium on the close in there, because I feel like this is a little bit of a vol capitulation in there possibly today. And you might get, this is an ugly.
Okay, I want to go on record here, because you sound like my podcast. We didn't talk to each other, right?
No.
Okay, because I said basically the same thing that you're saying right here about volatility. Of course, I didn't give my fakakta opinion on why I think something is happening, because I have no idea why it's happening. But all I'm talking about is what I'm seeing. And when a stock is down $100 in a month and volatility starts upticking, although my Taiwanese sources just said this is one of the lowest volume days in Tesla option-wise in weeks. So
yeah, but that makes sense. It's Tesla option volume is all upside call buying. It's all upside call buying. That's all it ever has been in Tesla. People love trading Tesla, and they love trading NVIDIA to the upside. NVIDIA volume dries up to the downside too.
Yep, agreed.
I mean, this has nothing to do with Tesla or NVIDIA or anything like that. These are stocks where if you're going to see a 5 million contract day in Tesla, it's going to be an up move and not a down move. That's for sure. I mean, I kind of feel like, oh boy, I kind of feel like you got to widen out the strikes on the close today and sell some more Tesla premium. Got about 17 minutes left, so I'm going to try to be as...
I agree with you, but what about leaning a little bit more bullish? I know, relax, don't hurt me, don't hit me, don't throw anything at me, but something like a put ratio spread, something like a Jade Lizard, you can.
I'm going to skew it a little bit. I'm going to skew it with a few upside deltas, that's all, just tiny. But I don't think Tesla will open up and go higher. I think it will open down and rally. Like, I think the best chance for Tesla to rally is if it opens lower on a day like tomorrow and then rallies up a couple bucks. I think it's oversold on a short-term basis, but I would like to see it go back to, I think it'd be a way more interesting buy if it got under 300. And believe me, it's close.
My positions hope you don't.
I mean, I never thought it would get to 325, but I would like to see it in a perfect world for me to really start to do something in there. I'd like to see it go maybe under 300. And I think that puts you back to kind of an election number. And I kind of like that as an interesting buy. By the way, before we go on here, there's a couple things. Tomorrow's What's Your Assumption? tastylive.com/assumption. That's tastylive.com/assumption. Send us your assumptions and we'll put on the trades tomorrow. The other thing is we have a piece, a cherry picks that went out today. It's by Nikki and Mike, and they covered something that's actually pretty interesting. It says scroll down a little bit, Ryan. Why we avoid leveraged ETFs. Now, I want to just explain something here. We cherry picked a leveraged ETF that, to give this example, in MicroStrategies. And no, don't scroll down yet. But we cherry picked a MicroStrategies leverage ETF because MicroStrategies leverage ETFs are among the most popular. So what's interesting here is MSTR gained 50% from November to today. Yet MSTX, which I have never traded. Have you traded it, Tony?
No.
I have never traded it. But MSTX which is the 2 times leveraged ETFs, is unchanged. It lost 2% actually, so call it unchanged. But MSTR is up 50%. Now you're saying, how could a 2 times leveraged ETF be down and the actual stock be up? Well, this is the danger side of leveraged ETFs. They have an incredible amount of makeup to do. When they go up and then they go down, it's very hard for them to get back to the original number. They've got to basically travel, another 50% more to get back to even. So what happens in these cases is if you're going to trade MSTX, you have to think of it as a future or as a one-day trade, maybe 2 days max. You cannot hold
short term is what you're saying.
It's very short term. It's intraday, it's overnight, and that's it. It's intraday and overnight. If you plan to hold this, you are going to get killed no matter what. That's it. I have nothing else to say. Just be careful. But again,
well, they've got to get that leverage somehow, right? Either from
yeah. But most people,
that's what costs.
Most people do not hold leveraged ETFs because they know that's how they operate. And the market structure of leveraged ETFs is if you hold them, you will lose. But if you want something for a one-day play, think of it as a MicroStrategies single stock future if you want to. Can you scroll down?
What a disaster if you liked MSTR and you say, I'm going to go into a leveraged product here. I'm going to make twice as much.
Well, that's a great example, right?
You don't make anything.
That's a great example right there. Can you scroll down a little bit? Keep going, Ryan.
Now you can see where the move in November was quite larger for the leverage front.
And this is the only other thing I just wanted to quickly mention because data put it in here. There's a new feature on the backtester which allows you to place trades based on different levels of the VIX. And the reason that that's important to some people is because we base our conservative, moderate, and aggressive allocations on different VIX levels. And so if you're talking about account allocations, this is a good testing tool. Okay, you can take it down, Ryan.
And IVR is coming too. I know this is just VIX right now, but IVR is coming too. They had to build one so we can have the other.
All right, thank you. Good stuff.
Thank you, Mr. Akabato.
Yeah. So, what earnings do we have tonight, Tony?
Let's go with Lyft first.
Okay. So in Lyft, LYFT, we have a very small position in Lyft. I do. I will tell you exactly what we have on. Actually, it's hard. What the hell is this?
Are you in March?
Yes. I'm short of March. Here, I'm going to cover this position because it makes no sense what I have on. Actually, I don't even know what I have on. Looks like I have a short of March straddle. I'm just going to cover it. Lyft is not the most liquid stock. I'm just warning you, it's not the greatest underlying. It's okay to trade. I would much rather see you be directional in Lyft. And
in Lyft, you put on a trade that was it hadn't really moved, but you did a April versus March 1x2.
It was a unbalanced
13.
Yeah, no, go ahead.
It was, 1x2. In April you bought one in one, and in March you sold two. 13 strangle and the 13 puts and the 14 puts. I mean, basically, it basically straddle swap.
It's basically a scratch. There was no harm, no foul.
It is basically a scratch, yes.
Boring trade. Let's see what we got here in Lyft. If there's anything to do, I'm going to go to all expirations. If I was going to trade anything in Lyft, based on the way Uber traded, I mean, I would probably sell puts in here. I'm guessing the 13 puts at 50 cents, maybe. I mean,
Uber was in the stratosphere after earnings. That's what you're saying. So you're
No,
saying
Uber was down after earnings, but then went into the stratosphere afterwards. Okay, so Uber actually went down about $4 or $5 on earnings. It went from actually $4. Went from 69 to under 65, and then Bill Ackman came out and said he was buying Uber. So then the stock rallied back up almost to 77, 78, whatever. If
so you
want
think he's going to buy Lyft too?
If you want the poor man's Uber, it's selling puts in Lyft. That's all it is. I wouldn't think of it any other way. So if you wanted to buy Lyft, I can tell you from my own experience, Lyft has missed on every single earnings that I've traded in there for I feel like the last 2 years. Expected move.
You care about GILD, you care about Dash, you care about SMCI or CVS?
SMCI. Yes. Okay, let's first go to, you said CVS?
CVS, yes.
CVS. It's kind of a dog with fleas.
Yeah, it's gone nowhere. I mean, it's gone sideways after making its lows down in the 40s.
Yeah. It's kind of a dog with fleas. I don't even think there's much you can do. We're a tiny bit.
I didn't imagine you wanting to care about CVS, but okay.
The only reason that I mentioned CVS at all is because we have some CVS positions on. And they're not very good, but we have some positions on in there. So I mentioned CVS. Go ahead. What else you got?
SMCI?
SMCI, I think, is probably of the more interesting stocks. I have no position.
Rank of 62, but expanding.
I have no position on in there. What would you do?
Volume across the board, penny-wide markets. You're going to stay in the February options or go out to the March where we normally go?
The reason SMCI is interesting, and this goes out to everybody, is because if you look at the stock volume in there today, in SMCI,
102 million. Big.
Okay, that's legit. And then if you look at the option volume in the weeklies, it's at least 10,000 a line. So if you're looking for this,
SMCI is doing almost twice as much volume today as it normally does. 70 million.
I know, but what I'm saying is if you look at the option volume in there, Tony, the call volume in the 3 days is 10,000 per line plus.
Yes, you're correct. 20,000, 27,000, 10,000. Yes, you are correct.
All right. So what do you want to do? SMCI stock
call skew in here. Call skew in here for sure.
Stock's trading at $39. The expected move is 8. If you go down $8, the markets are a penny wide, and the 31 puts are $1.
$1.
I mean, I don't know. What else would you do?
Well, puts are schmutz in your culture, so sure, it makes sense. I get it.
I mean, I'm way more scared of the calls in there, aren't you?
The implied volatility would tell you that, sure. I mean, there's a lot of call skew in there.
The 30 puts in March are $2.06. The 30 puts in February, 3 days to go. Well, March 7th. I'm sorry, March
21st. You're looking at the $30 puts are 260, 255.
All right, what are you doing here, Bat?
I don't hate your put selling strategy. I also wouldn't hate some sort of diagonal spread in here either. Like March vols 160, and you can go out to, I don't know, if you want to go to the February vols 196, you can do something kind of cheap and inexpensive on a bullish side.
Calls $13 out of the money on the call side, and you get to $1. Almost $14 out of the money. $14 out of the money, you get to $1.
You buy the March 38 calls, you sell the Feb, I don't know, 41s, 43s, however much money you want to risk. $4 and change. You sell the 43s, you know, half the expected move.
Man, they just bid these puts up like crazy I just sold them at $1. They're $1.07 bid now.
Oh man, this stock is going to zero.
Below zero. Zero would be an uptick.
100%.
I like when stuff moves around like this.
Oh, you're in so much trouble.
I'm in trouble?
I'm just kidding.
I can only pray that I'm in trouble.
Are you good? SMCI, you did Lyft, BIIB, Cisco, CME, CVS, you good?
I didn't do Cisco. And CVS, we did not go to CVS. I don't think I got filled.
No, you did not. Hey, let's bring in my boys from Overtime if I can. I've got all three. I've got my friend Dylan, my friend Chris, and my friend Ilya. How are you, gentlemen?
How goes it?
Hello, my friend Tony.
Thank you for asking.
Hello,
What's going on
boys.
with Tesla today?
Hello, Tony.
Hello, Dylan.
Hello, Tom.
Kind of a nothing day for stocks today, but bonds are doing stuff, and so is the dollar.
Gold, oil. At least gold.
Gold seemingly got spooked out of any kind of conviction today. It went up, it went down, and now it doesn't know what to do with itself.
Mm-hmm.
You're right. Gold made its move overnight too to the upside. It made its move to the downside during the day. Yeah.
Yeah. Powell
still at highs.
Powell seemingly juiced up yields here a little bit. So bonds are off. Gold is back to unched essentially.
Yeah, but you know what's funny, Ilya? Bonds were down 20 on the when I came in this morning, and they haven't moved the entire day. So, and gold was up early, and then it was down 20, and then it was unchanged, down 10, and down 15, and then it was like basically. So none of these things really moved. The story of the day, no matter how you slice this up, I think the story of the day is Apple, Tesla, obviously, Tesla to the downside, Apple to the upside, and then as far as volume goes, it has to be SMCI with 106 million shares going. Everybody's trading it for earnings tonight. It seems to be the earnings play.
There was a lot there. And plus, we have the CPI number tomorrow, so it doesn't look like anybody wants to jump out ahead of that event risk. And stocks basically let Powell talk them up off the lows, but that's it. I mean, S&P is coming in unched for the day, like a hard zero.
911,000 S&P futures, which is absolutely nothing on a day before a big number. So very quiet day.
Yeah.
Chris, Dylan, you want to throw some 2 cents in before we got a minute and a half left?
Have you salted yet, Tom?
Have you what?
Have you salted?
I have not salted yet. Tony's coming to my house to salt tonight.
I'm a little late.
Good.
I'll get there.
Yeah, I mean, you guys are all pros. Dylan's a professional shoveler / salter. I mean, you know.
Yeah, listen, I was born to it.
Yeah.
You know, but why not buy Tesla on a bad day, by the way? I mean, considering that it's all ultimately Musk.
We both did.
Yeah. Okay.
We didn't buy it. We traded. We both traded it. We both traded it today. I just sold Strangles in there and lost a little bit of money. Hopefully, we'll make them back tomorrow.
So if it makes you feel worse, I did the same thing. So you're probably both screwed.
Oh my God! I cannot believe all three of us are thinking the same way. We're in such trouble.
I'm just enjoying that after the Kendrick Lamar Drake thing, the beef has moved on to Sam Altman and Elon Musk. Now they're sniping at each other in public.
By the way, that's a good Altman snipe was a good one.
That was a good one. That was cold-blooded.
Yeah,
that was cold.
That was cold. It's good.
That was strong 50 Cent energy there.
Yeah, that's good. Yeah, we're big fans. You see, that's what we need back in sports. They got it in business, they got it in music, they got it in politics. But sports, where it originated, they're all too nice. Like, we just need somebody to say, I want to rip your head off.
You know what?
It's been a while since Conor McGregor has come out and said something loose.
No, it happened when LeBron joined the Miami Heat, and that photo of LeBron James, Chris Paul, Dwayne Wade, and Carmelo Anthony on the banana boat went public, and we're like, oh, these guys aren't real enemies. They're just goofheads who are banana boating together in the offseason. It's all fake.
What's a banana boat?
Exactly, Dylan. Rich people problems, Dylan.
I'm not gonna step. I'm not gonna step on that one. I'm not stepping on that landmine. No, I'm not gonna. You're not gonna get me to say something silly.
You don't. Do you go banana boating, Tony?
Only when I go banana hammocking.
You go banana boating with the folks from Robin Hood and Interactive Brokers in the off hours.
I try not to. I'm not doing this. I'm gonna wish you guys a great show is what I'm gonna do. Overtime comes up immediately following this with these three gentlemen. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. tastytrade. Make your move.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to tastytrade. See how it pays to have friends? Terms and conditions apply. tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
The market went nowhere, but a lot of other things did move. So what were they? It's Tuesday, February 11th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. So we're going to banana boat our way through this hour here as we wrap up the futures trading day. SMCI earnings out here after hours. We'll get to that shortly. Just to quickly put a bow on the conversation from last call, we can share the screen right away. Dylan, when you're on vacation with your best pals, sometimes what you do is you rent a tube, an inner tube with your friends. Ryan, if you could please share the screen here just in case people don't know what a banana boat is.
I stand by my assessment this thing is a floaty.
You go banana boating. And I remember this being a big thing in New York media at the time because Carmelo Anthony was like, yeah, there was no way I was getting on that banana boat with those guys. And He was our New York Knicks star. But banana boat trips aside here and salting the road, this was a road that really led to nowhere for stocks. S&P's down by 0.25%. The Nasdaq's down by 0.25%. The S&P is up by about 0.06. The Russell here lower by about half. The Dow Jones higher by 0.3%. The tariff talk continued as we go into today. The Tuesday session, obviously characterized by Fed Chair Powell's comments on Capitol Hill, testifying to the Senate committee today. He'll be in front of the House tomorrow. We do have a Trump press conference, more commentary on foreign policy. Maybe that's a driver behind what we're seeing in energy markets today. But oil, natural gas prices do trade higher. U.S. yields are up across the curve. We ultimately see gold, silver prices, they come back in, and the dollar, broadly speaking, lower on today's session. We can actually talk about perhaps the most interesting story here because Tesla is the one falling out of bed. I'm waiting on SMCI. And now we have the boss back in the channel. So Ryan, if we could get Sosnoff out, please. Tom, Dylan, if we're taking a look at Tesla stock here today, you mentioned that you're seeing this as a potential dip buying opportunity for share. I mean, that we're down 6%. Yeah. So what's your look here? Why do you think this is a dip buying
I love to
opportunity?
sell a spread. So it was a put spread, nice and little, and probably not 40 odd days out. But just something to get some long exposure to Tesla in the face of everything that's in front of us here, which is purely just a bet on my own, putting my money where my mouth is on the corrupt relationship between Elon Musk and the U.S. government and the benefit to his companies.
So sure, let's keep that in play as an idea here. What's with the Tesla underperformance recently? Yesterday you and I were talking. The three of us were texting after the show.
It doesn't. If it trades on its earnings, then it should go lower.
Is this also a play, perhaps, because of what's going on? Elon Musk's attention's divided right now. He just spread too thin. He can't pay attention to Tesla. This is obviously a stock of great interest. I still have XLY call spreads, which of Tesla is a significant portion. So Tesla going down doesn't do me any favors necessarily in the short term. But why now? I mean, why is the market now rejudging Tesla's share price after what's clearly a hand-in-glove relationship between him and the president?
You're asking me?
Yeah.
You're asking both of us? I mean, I think the obvious why now is where you kind of alluded to it, which is Musk is becoming ever more deeply involved in the day-to-day activities of the Trump administration, apparently living in Washington, D.C. If you were to believe the mythology, he's sleeping on the floor of the Eisenhower executive office. That's probably not actually the case, but metaphorically, it certainly appears to be the case. And the degree to which the Tesla boss is consumed by the Trump his interest and responsibilities in the Trump administration. It means he's spending less time making management decisions, one presumes, at any of his companies. Most importantly, Tesla. Now, one could argue the most valuable place for the boss to be is not making day-to-day decisions at any of these companies, but rather at the side of the most powerful man in the world, currying favor for massive future advantages. Although the degree to which that was hoped for based on the sort of immediate post-election run-up that is readily evident in this chart, obviously is being viewed more pessimistically now, insofar as it obviously is an expression of Elon Musk's basic massive distraction or even total disinterest in any of the operations at Tesla. Or it's real, or it has nothing to do with any. That's one possible answer. The other is Tesla is for whatever reason, increasingly trading based on the number of cars that it sells, rather than on the ability of its biggest shareholder to gin up abstract future growth prospects to justify an outrageous multiple.
I
There's one other thing.
Yeah.
Which actually was I was thinking about, but even before I bought, the thing that most gave me pause to at least stay small with the Tesla long position is the idea that full self-driving, which is obviously the sort of holy grail of the Tesla automotive platform. There was somebody I read. I don't know who wrote it, so I can't give credit where credit is due. But it made sense when I read it, which is that by the time full self-driving at Tesla comes online, shortly thereafter it'll become a universal feature at every car maker. Excuse me. So the idea that full self-driving is a massive point of differentiation for Tesla relative to every other car maker, which I think was a central part of the underlying valuation thesis for Tesla. That the argument that by the time it happens, it'll quickly become commoditized and everybody will have it, which struck me as something that certainly has some potential truth to it.
You mentioned this Tesla right now facing the reality of what's happening with its balance sheet effectively. Is it selling enough cars right now? Before we go into the AI conversation and thinking about perhaps the OpenAI story as it pertains to Tesla's share price movement today, looking over at FinViz, you mentioned Tesla's beginning to disappoint. The earnings, EPS trailing 12 months down 52.8% year over year. EPS quarter over quarter is down 71% from the most recent earnings report. So earnings growth, wrong direction, and they already have a PE ratio that's still astronomically high. Their forward PE ratio still astronomically high here. So there was this discussion point, is this another situation like with Twitter? Like for those whose memories need to be jogged, when Elon Musk initially said that he was going to buy Twitter several years ago, how was he going to do it? He was going to have to sell some of his underlying ownership stake in Tesla, perhaps, or he'd have to borrow against it. Find someone who was willing to let him borrow against the shares to get the loan to buy Twitter. And so you had this song and dance where, okay, Elon Musk's attention is going to be divided. He's going to be using Tesla's balance sheet to purchase Twitter. As a Tesla shareholder, do you really, are you buying the company now because Twitter's a premium to the share price, or is it added to a discount? There was an albatross for a little while there, if you will. We had a talking point like Tesla has a Twitter problem, right? With Elon Musk buys Twitter, will the CCP and other organizations, other companies lean on Musk, other countries lean on Musk to, potentially take down free speech in that country so that he could keep his business operations open there? You could say in hindsight that wasn't an issue. I'm actually going to go the other direction and say I was proven 100% correct. Elon Musk is not critical of the CCP at all. When he says he's respecting free speeches, he said he's respecting speech within the confines of each territory's laws. It's not a principle like anyone can say whatever they want, wherever they want, whatever they want. It's you can say whatever you want, whenever you want on this platform, so long as the government's okay with it. And that's been the approach in China, and that's been the approach in Turkey, and that's been the approach everywhere else. So Twitter hasn't been a problem for Elon Musk because he's complied. He's letting Twitter not be an issue and get in the way of Tesla. But if we're going through that same type of market misunderstanding right now, where we think this is an albatross, then maybe the OpenAI news is the reason why Tesla's down today, because it's a new shiny object.
And that's where I was about to go, yes.
Right?
But how many times has Tesla sold off and rallied back in a bigger, better way? I mean, every effing time.
That's kind of where we're rounding on to.
Well, not yet, because it's lower today, and not the day before because it's lower then.
I think it was December 22, maybe, right when
right. So Twitter. This is the timing thing, right? So this becomes a question of is tomorrow the day that it bounces?
So why don't I go with the old Spivak nibbler and just take a little here, take a little later, take a little more later.
I like it. The Nibbler Classic would demand that there be some sort of an attempt to set a low, and we've not seen that yet. So for me,
you're saying there isn't nibble in the nibbler needs some catalyst.
Some catalyst. Show me a green candle. Show me some sign of technical defense emerging, and off we might be going. But I think, Chris, to your point, this is exactly what seems to be lining up. You have this situation where obviously Elon Musk is increasingly taken with whatever he's doing to support the Trump administration, and in the meantime trying to make a bid for OpenAI. So it's not like he's completely distracted from sort of other Elon Musk endeavors, but he is met with resistance from another Trump administration favorite. I mean, we just saw Sam Altman and SoftBank.
So what's the OpenAI? What's the OpenAI argument against? Why would the OpenAI beef drive Tesla in the tank?
Well, I'm kind of trying to tell us, a story that kind of mirrors what happened with Twitter, because while Twitter ultimately, in the early days of that news being out there, was something that hurt Tesla's share price, obviously in hindsight, the story itself was incomplete, because if you decided to look long Tesla on the basis of Musk buying Twitter, you caught the tailwind of that in November and December this year, when the share price shot up 92% from its pre-election level to its highs in the middle of December, right? So did Twitter help Elon Musk get Donald Trump in office? Yes, I think so. But that's not really the story here. The story here is, why are we slouching off today? If it's the initial, Musk's attention is divided and this is going to cost him his personal fortune, he's going to have to loan out Tesla shares and yada, yada, yada. We've seen this story play before. It's going to maybe take a day or two or a week or so for this to wash out. But does he even want to buy OpenAI in the first place is the question we have to be asking ourselves here. Because if he doesn't, then why are we even caring that this is the news that's driving Tesla down, which is to say that, is this being totally ticker agnostic given the news flow? Are Dylan and Radigan or Dylan is Radigan, is Radigan, Sosnoff, and Batista all correct in saying this is a buy the dip opportunity? Because I think the answer could be yes, for another different reason.
It could be if it's confirmed, but for now, it looks like a very stretched thin executive is muddying the waters for a competitor. And if you were to rank the priorities and say, what is Elon Musk thinking about today? Some of it is Doge. Some of it apparently is trying to poke the eye of Sam Altman and OpenAI, to very deft response from Mr. Altman. And spare a thought for Tesla. Nobody's saying a word about it, even as its sales look not all that awesome. And so
I think we're missing
where is his head?
Right? If part of the process of getting OpenAI, so like the big story here, Sam Altman's removed as the head of OpenAI. And when that board removes him, as he returns to power, he slowly replaces the board. So it's people who won't kick him out of his job in the future. And he wants,
as you might expect,
he wants to transition the company from nonprofit to for-profit. Now, because of California, United States laws, for this to happen, we have to assign a fair value to the assets that the non-for-profit has. And the way that this is all working out, that Sam Altman's going to be able to buy these assets with a for-profit company from the non-profit entity. Where do you value those assets at? At an arm's length transaction in the marketplace, of course. Who just set the price for Sam Altman to build out OpenAI in the manner that he wants to do it in? Elon Musk. He just made this unsolicited bid. He just said, this is the market value for those assets that you're trying to spin off from your nonprofit into your for-profit, which complicates things because Sam Altman wasn't trying to do that for $97.4 billion. He was trying to do that for about $40 billion. So now he's got to raise a little bit more money here to accomplish this goal, or he's going to have to go back to the state of California, to the IRS, and explain, this is why we did this transaction. This is why the nonprofit took less money for the assets that it held. That complicates things. I don't know if Elon Musk actually wants to buy OpenAI. I think Elon Musk wants to prevent OpenAI from hitting that takeoff point where exponential growth kicks in and they reach AGI first, and then there's nothing left for anyone else, because it is a race to build the machine god, as we keep calling it, right? If we're trying to get to AGI or ASI, artificial superintelligence, once you get there, everything else may be subsumed quickly, because that in theory will have more intelligence than the sum of humanity and all of humanity's knowledge put together throughout history. Be smarter than everyone else.
AI is behind the ball.
It may be behind the ball, right? But if it is behind the ball, and this isn't a legitimate attempt to buy the OpenAI's assets, what are you doing here? You're slowing down the process.
Yes.
From it acquiring the resources to reach that breakneck speed so it can move out further ahead of the pack. So if that's the case, Grok AI getting killed is bad for Tesla, because that's Tesla's AI system that it wants to use long term. If Grok AI falls behind, it makes that piece of software, that asset, less valuable for Elon Musk moving forward.
Can I ask a question that just a philosophical question?
Mm-hmm.
What the world's smartest AI or super intelligent, what's the definition of smart in that context, or intelligent? In other words, what if the intelligent conclusion is end all human life? Is that the smart? Is that considered smart? Smart by whose measure?
Therein is the great debate.
I mean, what is the definition of smart in this context?
I assume we're doing like the Isaac Asimov robotic ethics, where we do no harm to people kind of training.
Well, and in a sense, the Musk-Altman dichotomy is very much a part of this conversation. OpenAI and Sam Altman have clearly been advocates to say, let's keep building, let's keep developing, let's keep shipping, let's keep releasing. This is how we are going to get more and more people to define what the right guardrails are. Whereas Elon Musk had said, whoa, hold on, slow down. We're going to build the robot messiah here, we think, but it might kill us all. So why don't we slow walk this more? So there's competing visions. Was it the Trump
executive order today to lift all guardrails and just say, autonomous agents and murder drones all around kind of thing? See what happens?
Sounded like it.
Like, in other words, I thought that the Trump administration's posture was, who are we to regulate or to create a moral code for AI, build the biggest, most smartest, fastest, most amazing version of it, and if it does bad things, so be it.
Well, and in this sense, the sort of sniping between these two guys, both of whom are in Trump's orbit, both of whom are doing business with the administration, really seems to highlight this. They might be at this point almost as children fighting, and dad saying, you know what, let them fight it out. Somebody's going to get a black eye, and that will be the one that doesn't prevail, but you all go ahead, sort this amongst yourselves.
I'm buying Tesla.
Well, that's
between now and the murder drones. I'm
TLDR.
I'm buying some Tesla stock. I'm going with the Spivak nibbler, even if it's a little early to nibble.
So there's the Vecchio ape shitter and the Spivak nibbler.
The Vecchio ape shitter, that thing pays big money. When you catch I've only caught one ape shitter in the last 2 years.
It's been a good one, though.
It was a damn good one. I'll never forget it. Jobs report, October 2023, Friday morning. It was a beautiful day. Got the full ape shit. It was like a Batman signal.
Yeah. When I lay in bed at night, I look at the text and S&P 4236. Oh, what a good buy. What a great buy. Still chasing that high, Dylan. It's just
most people either watch Instagram Reels or porn, and you're watching your historical your entry points on your S&P trades before you fall asleep at night on your phone.
I'm watching Futures Power Hour from that Friday.
From 2 years ago.
Yeah, Dylan. So look, as Ilya points out, this is I'm trying to signal from the noise here, right? Because the technicals look terrible. If this wasn't Tesla, and you're looking at it from a pure fundamental perspective, you'd say, oh, German car sales are down 50%. Yeah, and like China sales are down 11%. And, ever since he was up on stage pouring his heart out to people or Nazi saluting or whatever you're interpreting it as.
Whatever that thing was.
Apparently there's a wide...
When was the Nazi salute? Was that the top?
20% ago. It was actually, that was at the inauguration. So we open up here. That's the open. I could suppose we want to measure it to the close on the 17th. So 426.50, this event is on the 20th. But ever since then, right, there are websites that have been tracking Tesla sales in like Germany, France, Italy, Norway, and they're down double digits over the past 3 weeks on a year-over-year basis. And they fell off starting January 20th. So the share prices are down. Coming into today, we're down 18%. We lob off another 6% today. We're over 30% off the highs here. We could talk about him eating the EV competition because of all the tax credits getting removed and no one else is going to break into the space. But maybe Dylan, you're right. Maybe the people are paying more attention to the fact that as a car company, the numbers are moving in the exact opposite wrong direction. That said, if this is related to anything OpenAI, it doesn't look like
full self-driving could become a commodity. I mean, within a few years of its invention.
Yeah, I mean, look, if that to me is the whole reason why Musk is backing Trump. Like Trump says he wants to cut red tape. Harris and Biden were all about slowing things down, environmental reviews. Let's make sure that this endangered species of butterfly, isn't going to be wiped out in case. Actually, let's not exaggerate here. They needed to do a multi-year study on what happens if some rocket fuselages fall back into the ocean and they hit a whale. And that was something that the government asked them to do, which, should we worry about killing marine life when we're doing our stuff? Sure. But, statistically speaking, a rocket tube falling into the ocean and killing a whale, sorry, that's just one unlucky whale. It just
sounds like they're fucking with him. I mean, that just sounds like they're fucking with him.
Right, but, if I'm walking down the street and, a meteor hits me in the back of the head and kills me, tough shit.
You won't go and figure out what happens if this thing should hit a whale.
Yeah.
I'll see you in a few years.
Yeah.
So if you want to get to Mars,
if this thing hits a whale, we should play the lottery. I mean, the lottery's got to be better odds than a fuselage hitting a whale.
But that's kind of my response too. No joke. A few months ago, I pulled 3 blue M&Ms out of an M&M pack. And I'm like, holy cow! This is crazy because if there's one blue M&M out of every 30, and I just pulled 3 in a row, the odds of me. Okay, I got to go buy a scratch-off ticket, and I did, and I didn't win any money on it. But you kind of live in those probabilistic terms. If you're going to be a trader, you don't think
maybe you should have tried to throw something at a whale.
Right? Better shot of landing on a whale. So Musk wants this deregulation kick is the point we're getting at. He wants to be able to go to Mars quicker. He wants to be able to send humans into space quicker. He wants the Neuralink technology to be pushed forward faster. Does he want OpenAI itself? Maybe, but maybe he just wants to slow down OpenAI so Grok doesn't lose ground and ultimately it doesn't nullify the immense value that Grok AI has been providing to, him and his company. It's ultimately going to be the bedrock that Tesla AI rests upon. So he needs it to be the best, and he can't. If a company comes out and says, if GM comes out and says, hey, we're going to be using OpenAI's AGI in our cars moving forward for self-driving vehicles, Tesla becomes all of a sudden just another car company that's struggling. So we're not there yet. It's a long way to go. It's worth point of discussion here today, maybe for half the show, because it's a market that doesn't really move otherwise. We talked about it at S&P. We gap open lower at DeepSeek Monday. We open up there at 6102. We're at 6092 right now. The S&P today churns, twirling towards freedom. The NASDAQ off by 0.25%. A bit of an inside day. We're off the lows, but we don't push up to new weekly highs. Ilya, you've been very adamant about this being a range-bound market. Can you please give your typical 45-second disclaimer on if you're short from the highs or long from the lows? Sit on your hands.
I mean, that's essentially the only thing to look at here, and I remain completely unrepentant in that assessment. There is nothing that's going on here, and vol is not even at 17. So there's no premium to extract in a sideways move. I mean, I guess you could play for vol expansion. That's about the only thing you could do here. But why would you? If you're already long from near the bottom of this range, you haven't been proven wrong. If you're short near the top of this range, you haven't been proven wrong. So what's there to do here with no vol to pull out of? Really only selling an iron condor and look for the vol to open up. But how would you time that? Difficult to say. We've been in this sideways range now for going on 2.5 months.
Dylan, you have any strong feelings about the headline indexes here not doing anything of much recent?
No. I mean, I look at it as a positive, actually. I look at it as I look at this more as a failure to go down. Like you can look, the thing with a flat line is you can look at it as either a failure to rise or a failure to decline.
Right.
And in my instance, I think that there's been more reasons for it to go down than to go up. And so for me, the fact that it hasn't gone down, it's like sideways is the new up in the era of the Trump administration. And as long as the market can even tolerate the level of rhetorical madness, which the reason it can tolerate it is because obviously the policy aspects of it are pretty ambiguous or non-existent. So I mean, it's part of the reason why I think Tesla is a nice stock to buy.
Dylan, can I revisit a thesis we threw out on the Monday of DeepSeek Monday?
Yeah.
That if this was moving into a phase 2 AI space, then we would see distribution within the headline index for a little while, because the heavyweights that carried us here were a lot of the phase 1 names. Mm-hmm. And as we change leadership batons, it means that there's going to be a bunch of churn in the market. Mm-hmm. And so if phase 2 is here, then it should be a lot of sideways chop before ultimately resolving to the upside. Mm-hmm. We are at the opening levels there still. We're at 60.90 and a half right now. Again, we opened up DeepSeek Monday at 61.02 and a quarter. 10 points in the S&P at these levels is, that's nothing. So I'm with you. It feels like right now there's still good distribution in this market. The breadth obviously is holding up, all things considered. Names like NVIDIA are starting to pull back in and rebound. It would be very helpful if a name like Tesla started to participate. That's doing no one any favors at this point in time. Mm-hmm. But I look at this setup right now and I see we're still hugging our moving average envelope. The moving average envelope is still pitched higher. We have that nice intraday recovery off of the 1 month moving average. I got to stay long here, Dylan. It's not comfortable being long. Feels like there's a lot of false starts, but it feels like that's where the balance of risk lie. Like we're taking and absorbing all these body blows. And I suppose, Ilya, tomorrow the only thing that would be a problem is CPI. Although you said something today on Futures Power Hour about CPI. Mm-hmm. You're less worried about the market reaction if the print is hot. You're more worried about what it would be if the print was cold.
That's right.
Why is that?
We'll take a look at ZB here, because I think this is the picture that means 1,000 words. Take a look at the bottom. That big green candle, that's the last time we got a CPI number. And it came in only a little bit cooler, just a bit. And the markets went, whoa, okay, hold on. And then the other big green candle was last week. That was those very surprisingly soft service sector ISM and S&P Global PMI numbers that told us the one part of the economy that is strong, the one part where inflation then is locked, and the one part that is absolutely essential for global growth because nowhere else is there any kind of economic vigor, that it's weak suddenly. And the weakest in a year as far as the pace of economic activity expansion. And so the only other sort of comparable day in this entire sequence is that middle green up candle that punches through the moving averages envelope, and that's DeepSeek right there. So this entire rally, this 8-week high that we hit on the bonds and commensurate an 8-week low that we hit on yields last week came together really over the course of 3 trading days, of which one is the DeepSeek shock, which never really withered away in bonds like it did in stocks. But the meat of the move is 2 days, CPI and PMI. And all of it is telling you either one of 2 things. If you want to listen to Fed Chair Jerome Powell tell it, it's telling you that uncertainty around the rates outlook is ebbing, which means the term premium is cooling, and that is why you have lower yields and higher bonds, because that's coming out of the equation. I mean, okay, maybe that's a cute interpretation. It doesn't seem like it's the likely one when you look at, in particular, the response to the PMIs, which were very weak, and what the front end of the curve is doing, which is nothing, implying that indeed the Fed is gradualist. It's not going anywhere fast. This seems to anticipate that, much like we saw at similar juncture last year, around mid-April going into May last year, that a Fed resistant to easing in the immediate is being judged as likely to ease more later. And when you see that kind of price action and that kind of a signal come out of PMI data that's exceedingly weak and surprisingly weak, the upshot seems to be the Fed should be easing now in the market's eye. They see some sort of a cyclical concern somewhere 6 months, 9 months out. They think that delaying now is the wrong move, and they think it'll be more easing later. If that's the interpretation that the market is in fact giving us, then if you get a soft CPI number here, much like you got a month ago, the response would be, oh, well, there's that cyclical concern. If stocks come off on a weaker CPI number, whereas they should be cheering because it means the Fed might get to cutting sooner in the sort of older paradigm, if they haven't heard Powell pound the table on we're not going anywhere fast for weeks now, including today, and if the response to a soft CPI number is, okay, there is a cyclical thing that's not going to get addressed until it's too late here, that'll be a very different read. It's not a 0.3 month-on-month CPI that I think is the most concerning to our conversation from Futures Power Hour, whereas the baseline is 0.2, and that would be even keel. It's something that's lower, 0.1, 0.15, even 0.21 or 0.19, something on the low end of normal. That already would be something interesting if stocks were to take it as a bearish cue.
Rates are at the line in the sand right now. The uptrend from the September, October, December swing lows that we started to break through just last week, we're right back up against it. We're kind of poking our head through it today too, except for the fact that the 1 month average of rates, that's there sitting at 4.534%. We never quite scaled it on the close today, sitting at 4.532. But it's pretty darn close. So you talk about CPI day arriving when the market is more or less trying to pick a direction. This could be the affirmation that rates are now heading back up after what was a false breakdown here, or this is the retest and we're going to head right back down to the 4.4% level, and this is merely the breakout return before we reload and then swing to maybe 4.15. But getting rates lower from here would be exceptionally helpful for a number of different things. It feels like that's very much an oil story, though, because as oil's rebounded here the past 3 days, that's when yields have abruptly turned around. Still, and it's a 6.6 IVR, so this isn't really worthy of discussion from a tasty trader perspective. There's not a lot of vol here to sell, if you will. Better opportunities on the board elsewhere. But Oil continues to move up. Trump's talking about a potential peace deal with Ukraine and Russia, how he's sending Treasury Secretary Scott Bessent over there to negotiate with Zelensky for U.S. protection in exchange for access to rare earth minerals, it seems like. Zelensky is out today suggesting that they are open and willing to talk about land swaps with Russia, territory swaps with Russia. Dylan, are we looking at the oil move from the start there?
The sell, and I don't know. I mean, I'm a little bit. Yes, the answer is yes. We could be. It's less black and white than I'd like it to be. This is. I want. How do I say this in a way that makes sense? A degradation of the Hamas situation or the Gaza situation, which seems entirely plausible, would seem to be a more meaningful trigger to run oil higher that then would be a chance to sell it. And I think, and the reason I hesitate a little bit is I feel like there's a reasonable chance of a further rise in price before it goes lower, as tied to the plausible short-term emergence of a degradation in the Middle East, to speak with all sorts of colloquial and sterile words. But
and after the presser today with the king
Exactly.
of the king of Jordan, that's, I think, a path that makes a lot of sense.
Yeah. So I think you're good to watch, but I would wait for a little bit more chaos out of the Middle East and then sell it.
I got, as we talked about earlier, Chris, I got out of my short here today and took profit. It's been a lovely ride from 77-ish to here, and I'm good for now. I took this off earlier today for exactly the reasons that Dylan is outlining, and of course the technical damage done. We're back into that congestion area. We're really on the last line of former support become resistance type of a defense. If we find some sort of a conclusive evidence of a turn back down, I want to be a seller. I expect, though, that Dylan is right, and we do see some degradation in sort of the chaos premium in that theater, and so we get some sort of a further bounce, but ultimately there is no desire for a bilateral Israel, Iran, or U.S. plus Israel versus Iran conflict, and so ultimately the thing fizzles. And I want to be a seller, just not at this very second.
Dylan, you raised a really important point yesterday about, like, how does Trump work? Trump likes.
You mean the door in the face negotiating premise?
But what you said about how he likes being in the center of attention.
Oh yeah,
his deadline for the hostages to be returned, lest all hell break loose, is this Saturday at high noon. That means that we as market participants will be paying attention to the news flow over the weekend, because if the hostages aren't returned on Saturday,
it's hard to see how oil doesn't remain bid into the weekend.
That's kind of what I'm getting at too, right? Like, if we're thinking about how to play oil here, I see a 6.6 IVR and I go, oof, would I really want to fade this from an options perspective here? And taking a step back, we have these conversations. Sometimes this is directed to the audience, so you can understand how we work through things as traders, right? So we have a 6.6 IVR. Looking to capture any volatility here to collect premium, you got to be really careful about how you do it. If you want to fade the oil move to the upside, are selling calls, is that the best way to go about this? Well, knowing that we have this high noon deadline on Saturday, a day when the markets are closed, is there a chance then that if that deadline passes and Hamas doesn't return the rest of the hostages, that Trump green lights U.S. aid or Israel to resume bombing? What if Iran says, because Israel started the attack, you get some headlines about some missiles flying there? What if the United States decides to go after Iran directly because they have the deadline's passed, and they say, you know what, Hamas, we're just going to deal with your boss, and they just go straight to management. They pull the old Karen card, and we go start going off of Iranian military infrastructure instead to kind of send a message. This is the president that killed the Iranian general back
Soleimani or whatever.
Soleimani. Yeah, right. Like at the start of 2020, and that quickly went out the window because we were all then thinking about COVID a few weeks later. But you know, if I'm trading oil,
Tehran has not forgotten, by the way.
Am I selling calls? Well, yeah, there's still a price tag out on Trump's head and on John Bolton's head
and Mike Pompeo too.
Mike Pompeo, Mike Pence, right? The Trump administration from the first term.
Yeah.
Anyone tied to foreign affairs, basically. So the point I'm getting at here is, okay, would I want to sell calls in a market where there's low volatility facing this geopolitical event risk, heading into a weekend where there is a deadline for something that could dramatically cause a dislocation in price while I have no ability to manage my position? So I'm not gonna, where's my wrong button? So if you're shorting this, like you're doing it short, like MCL, you're holding it short there. If you're going to be short through options, they're much longer dated. That way, if anything happens this weekend, you're not looking at yourself staring down, oh my gosh, this expires Monday. Now I'm $4 underwater and I'm short a bunch of calls here. That's probably not the smart thing to do. Dylan, you packaged all of that into the one eloquent thought, which was, am I interested in selling oil? Yes, but I think that there's a potential for further price expansion, so I'm not going to do it here. I think finally, oil, we have a reason to, I don't want to say anticipate geopolitical risk. Oil prices could move up without the ensuing vol expansion, but trying to fade this bounce the last few days, that may prove difficult given the news flow that we have ahead. And so I'd much prefer not to do it still, and I'd much rather stay long deltas in energy here than look to fade any price movement that's offering very, very little by way of premium selling.
I mean, the tragic situation, though, is let's assume that there's a deal over the weekend, which hopefully there is, then oil will be, I would think, flat or lower on Monday. Let's assume there's not a deal over the weekend, then oil will probably be sideways or higher. And that's the point at which I would actually want to sell that's when I would want to sell the calls.
There's also like the whole notion of like what Trump's trying to achieve here. He just sat down with the Jordanian president and said like, oh no, they're the Palestinians are moving out. Jordanian king, right? The fact of the matter is, like, we can slice this up however you want. There are people out there who are going to look at this and say this is ethnic cleansing to a degree. There are people in the Middle East who are saying that right now, that if this plan were to go through, Egypt has talked out in strong terms. What does this mean then for regional stability moving forward? Is this just a negotiation? Is it the door in the face thing, Dylan? Or is this legitimate? Right? So that's why in terms of fading this doesn't feel the way that oil did for much of 2024. Like we need to see the event come to pass and see how it starts playing out before we say, okay, well, we're $3 higher than we were, at last week's lows. This is clearly related to some of the headlines, so we're just going to fade this pop right now. I don't think it's.
I mean, the other difference is the Biden administration was very much predictably predictable, whereas the Trump administration goes out of its way to be predictably unpredictable, like as a
that is very true
of its policy. And so you're dealing with a predictably predictable American administration. For me, anyway, makes it easier to sort of anticipate. I never thought that the United States was going to randomly escalate in the Middle East under the Biden administration beyond what was already happening.
Well, and the other thing is defining what the
Trump administration could. Sorry.
No,
but it's
by all means.
Predictability.
I think first of all, Dylan's absolutely right. But secondly, it's the defining even what we're trying to predict. Right? We're supposed to have this summit that the president talked about alongside King Abdullah earlier today, saying we're going to have this summit with Egypt. Egypt's got a plan, and they're going to get us all together to discuss this thing. And we're going to figure it out with Jordan and with Egypt and with other partners. Apparently, MBS, Mohammed bin Salman, the crown prince of Saudi Arabia, is going to get everybody together so Egypt can present this thing. And of course, Egypt is of a mind here. Gaza is formerly Egyptian territory, and they're right on the border there. So obviously they have a say or want to have a say. They also have been incredibly touchy about Hamas, which is an offshoot of the Egyptian Muslim Brotherhood, the sort of granddaddy of the Islamist organizations. If you're a student of history going all the way back to Sayyid Qutb, then they're, of course, very concerned that this is going to permeate back into Egypt, where they've been clamping down on the Muslim Brotherhood with a vengeance under the new administration. Sort of all of that kind of Arab Spring normalization of the Brotherhood is gone. Al-Sisi is cracking down on them vigorously. And so they don't want any part of Gaza because they don't want any part of that element flowing back into Egypt. So who knows what event are we trying to anticipate? The actual U.S. Entry into Gaza, or whatever happens at this summit, which may or may not endorse that view, and whatever may come out the other end. Who knows? At this point, there's a long on-ramp for oil to be worried about non-specific things over weeks at least, while whatever the shape of this thing even looks like gets figured out. Never mind an actual U.S. entry into Gaza. What the range of options on the table are is, at this point, in flux. But that Trump was willing to sit with the King of Jordan and have the King of Jordan nodding along while he goes, yeah, we're just going to take it over, it's going to be fine. That tells you that this is not just a bluff per se. This isn't just, we're going to buy Greenland and make Canada the 51st state. This really is the door-in-the-face technique and the theory of the madman theory of geopolitics all in one go. One would think that for King Abdullah to be willing to sit there and do that demonstrates that this is actually a part of some sort of a substantive incentive structure that's getting fleshed out. And we'll see. I mean,
you think that Abdullah knew that he was going to say that America is just going to take Gaza?
He said he was going to take Gaza before this meeting.
And then said it during the...
Trump is on the record. He said it publicly. He just did it again with the King of Jordan sitting right next to him saying, we're going to work with the administration, smiling, shaking his hand, saying, look, we're going to figure this thing out. Obviously, he didn't endorse the U.S. takeover of Gaza. He also didn't not endorse it.
Mm-hmm.
There is clearly some sort of a back of
isn't that kind of a war where if America were to take a landmass in the Middle East, specifically the Gaza Strip, as the United States, and seek to develop the Riviera in Gaza, isn't that a real aggressive move towards World War III?
I mean, it might be the Trump speak for the U.S. is going to provide security guarantees and a security umbrella to the players like Egypt, Jordan, and most importantly, Saudi, to come in and manage the post-war reconstruction and transition, and the U.S. will underwrite this for everyone. And that is how you decipher, we will come in and it will be great.
Mm-hmm.
I think people read a lot of this stuff, again, to your point, Chris. The paradigm seems to be take the president seriously, but not literally.
Yeah, it's like, okay, so he's talking about Gaza. What could he possibly want with Gaza? Like, okay, he's saying that he wants to destroy Gaza and wipe out all the people there, but like that's clearly not what he means. So like, what does he really mean? Okay, he clearly wants a Trump Tower in Gaza. Okay, that's what he's going. Yeah, we're going to play the game for the next 4 years, but
we're going to play the game, and crude oil can have an expanding risk premium in there thanks to geopolitics than for what? A few weeks? Because nothing is certain and nobody has no idea what's going on or what we're doing.
Yeah.
Or what the variable even is.
That, Dylan, I think you brought up the most interesting point about this. And we talk, there's a tool you got to take out of the toolbox depending upon the market conditions. Our job as traders is to identify the characteristics that define a market and learn how to operate within them, right? The characteristic that you identified about trading oil during the last administration was it was predictably predictable. There'd be an attack, there'd be a response, there'd be warnings ahead of time. There's this whole song and dance. It's kabuki theater, right? We fire some missiles, you fire some missiles. We can then pump the propaganda to our respective populations that we're standing strong, and we're protecting them. And the Ayatollah saves face, yada, yada, yada.
And so the whole time oil moves and it's not a problem for anybody. Oil and money move.
Yeah, it's like
oil. And the shuffle continues.
Yeah, it's like oil's up 7 or 8% during this dance, and then the attacks come, and then the oil immediately falls off, and then you get the second wave where it's like the response, and it's just bombs blowing up in the desert. So just to say they responded, and this happens on a number of different occasions, right? It happens in April, and we get another kick up in June, July. We get a kick up obviously in October. But when you hear these headlines, it's like, okay, you price it in for 2 or 3 days, you wait, you fade the move. World War III isn't happening. You always fade the World War III headlines. But there was a predictability there. I keep talking about relearning Trump speak because I don't know how to speak it. And I think a lot of oil traders don't know how to either because we're not pricing in risk that could get us to an escalation point. We're just like, is this risk? What do we make of it? Is it even worth pushing the money around right now? I find oil to be the most perplexing thing. I have not placed a trade in here in months at this point in time. I've been operating mostly in natural gas, which in Europe, we're getting through the winter months, Ilya, so it's not exactly like it was a few years ago, but energy storages are running low. Demand for US LNG is ticking up. There's also an AI story here, which I kind of like, being that bull junkie, as it were. Let's just put a bow on the energy conversation. What are you guys thinking for the second half of this week? We have 3 minutes left.
Oh, what about this economic data, Ilya? Do we care? Do I care?
CPI.
Yes. I mean, I think the CPI data matters, and I think it's going to matter much like NFP. I think it's going to matter more for its passing than it is for its substance. If the story we've been seeing in markets over recent weeks is the Fed isn't going anywhere fast, Powell said as much again, and the market is looking at the data and going, the further out looking data is getting a little bit annoying, and we're going to look at lower rates downwind as a consequence. If CPI comes out and basically does nothing to append that, yields go higher or lower. At the front end, no. But at the long end, what you might see is, again, the markets go, okay, so this just endorses the Fed sitting on its hands. And really what this means is bonds go higher and the curve flattens. That is to say, bonds go higher at the long end and the curve flattens. That's probably negative for the dollar. The real question is, what do stocks do with that? Are they prepared to take a range break on the basis that there is a cyclical concern 6 months out, 9 months out? We're going to have to wait and see. Or are they prepared to say, no, we don't care, and actually have a committed rally? They haven't done that either.
We're going to have to wait to see because overtime is out of time for this Tuesday. We'll be back tomorrow, same time, same place. Every Monday through Thursday, right after last call, 4 p.m. Eastern, 3 Central, here on Tasty Live. Stick around, though. After the break, we have more Tasty coming up, Tasty at Night with Ilya Spivak and Macro Money. So we'll see you there, folks. Good luck trading.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%. and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive, really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using tastylive? Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Fed Chair Jerome Powell doesn't make a big splash for financial markets, but economic data may do the heavy lifting for him as we look to U.S. inflation data. That's what we're going to focus on here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to unpick here is whether we have perhaps a little bit more impetus here on U.S. Fed policy expectations and what they might mean for the broader financial universe, stocks, currencies, bonds, etc. But of course, before we do, we need to first, it seems, take a look at where we started with these Powell comments, what they meant for us, if anything, and how that could translate going forward. So the first thing that we are going to do is just take a look at the way that the markets performed in the wake of Powell's remarks. He began 2 days of testimony here on Capitol Hill. He was in the Senate first. He'll be with the House of Representatives tomorrow. The prepared remarks are usually about the same for both, not surprisingly, but the Q&A is obviously going to be different because different policymakers will be asking different things. Powell managing to deftly walk the line here today with his remarks. We talked about this on the show yesterday, as well as in some of our writing here for tastylive.com, looking at the outlook for the week yesterday. And the idea was that Powell was likely to walk the same sort of gradualist narrative forward that we've heard from him at the last policy announcement. And indeed, gradualism was the name of the game. Powell said that the Fed is in no hurry to move on rates with a view to make more progress on inflation, that is to say, on bringing inflation lower. That, of course, implies that there is a higher for longer kind of perspective from the Fed on rates. That is to say, they are not looking to up the speed of rate cuts. And moreover, Powell even went so far as to say that the labor market, which was ostensibly the reason why the Fed got so dovish back in September, that their concerns about it have diminished considerably, quote unquote, since mid-2024. That, of course, is a very interesting takeaway here for markets, because what we end up with is essentially a goose egg from stocks. They don't end up finding a whole lot of lead out of all of this. S&P 500 flat, the NASDAQ just a touch lower. The real interesting bit here is what happens to yields. In fact, the action really has been in yields for the past several weeks. And what we find is the 10-year moves higher, the 2-year moves higher. So we get a little bit of a hawkish flavor from what Powell says, confirmed here a little bit by what we see in the yen. It comes down a little bit against a U.S. dollar that feels a little bit more muscular for yield-sensitive reasons, not surprisingly, with the whole curve shifting up a bit. Gold also coming in a little. That seemingly also a part of the same story. And so you look at the landscape here, and it seems like the markets ultimately took a slightly hawkish lead from Powell, but that this really didn't translate into broader risk sentiment very much. And for their part, we can see the bonds come in a little bit as yields show that tick up, but ultimately the trend higher from these early 2025 lows here, that remains intact. Moreover, the pullback marks a retest of this former support or former resistance become support, rather, right here about just above the 114 handle. And we stop just right there and hold. What's very interesting about this is, of course, this returns us to the site of last week's breakout to retest it, and marks at this point a retracement, not a change of trend. We're still looking at a series of higher highs, series of higher lows. We're still looking at a breakout from this down move here going back to early December. So it does still look like the bias remains higher, if not for today's price action in isolation, than for the structure as a whole. Moreover, we've talked about the possibility that what this looks like is a head and shoulders pattern, where this is sort of a classic technical bottom, shoulder, head, shoulder. And if you believe such things, or at least if you were to take such things as a kind of self-fulfillment mechanism, that in my mind is how technical analysis is most potent, where everybody is looking at the same thing and trading on it as though it has meaning, and because it is then reflected in the price action, and those actions actually move markets, well, then it has meaning whether it had it implicitly beforehand or not. The important thing is that the markets act on a thing and make it so. If you were to consider that here, then shoulder, head, shoulder with a neckline, again, at this level just above 114, gives you an implied up move back over here into the 120 area. And so we were seemingly retesting the dividing line that confirmed that pattern here, but holding it perhaps to leave open the possibility that we're still going to see an extension upward. Now, for their part, stock markets remain listless. As we've sat in this range since early December, so too we remain, and in fact, the swings have seemingly coiled up even more. Now, in the wake of these Powell comments, we end up with Fed policy expectations that reshuffle slightly, but are ultimately unchanged in the grand total. So 54 basis points being baked in this year and next, 34 basis points for this year, which amounts to almost the 2 cuts that the Fed had in mind when it made its prognostications in December. We can see that here. The Fed anticipated that it would go from 4.4 to 3.9 on the median for the Fed funds rate. Of course, it is set in a range. So if 4.4 is the middle point between 4.25 and 4.5, which is of course where markets ended up, then what we're looking at when we see 3.9 is 50 basis points lower. That is between 4 and 3 and 3/4. So if this is what the markets had from the Fed, 50 basis points in cuts this year, and then down to 3.4, so another 50 basis points in cuts for next year, that's 100 basis points through the end of 2026. And what we see here is the markets are at about half that and have been at about half that, with this year leaning in the direction of maybe 2 cuts, and next year maybe 1 cut, but the outlook for this year looking light, and increasingly that second cut being pushed out into next year. Now, that's, again, a little bit more hawkish, but we can see that the markets have been very stable in their assessment. So there's not been much movement on this front. As a matter of fact, we can see that once the Fed had that very dovish September announcement that Powell was referencing today, the markets very quickly looked at it and said, yeah, that's way too dovish. That's not going to happen. The economy is too hot. Not to mention the November 6th election result gave us the ascent of the Trump administration, which the markets judged as likely to be a tailwind for inflation, both on growth grounds, lower taxes, in particular lower corporate taxes, and deregulation, in so much as they tend to boost growth, but also tend to boost inflation. Moreover, the markets were very clearly concerned that you might see the tariff piece of the Trump administration's economic agenda, as well as the immigration piece, to the extent that it oversees a large deportation effort and thereby disrupts labor markets, that these things would be basically a sales tax on imports and an upward shock on the price of labor, and therefore on the price of doing things with labor, which is most things. And so that would be inflation on top of the growth geared kind. So with all of that, the markets already by November the 7th readjusted to a much less dovish view of where rates are going. And we can see since then, we've only just tinkered around the margins. So we went a little bit more hawkish of this in the December announcement, when the Fed essentially made official its revision on rates. We can see in September, the Fed thought from 4.4 to 3.4 in 2025 and then down to 2.9 already by 2026. At the December revision, 2.9 is nowhere in the outlook, not even out to 2027. So we can see that where there was 3.4 as the destination for this year, it's been pushed out by a year to 2026. So clearly, the Fed endorsed this adjustment. And since then, very little has actually occurred. And so looking at that in context, and of course hearing Powell endorse it again and the markets listen again and go not very far at all, the question then becomes, well, then what's this rally in yields all about? Or rally in bonds, rather, sell-off in yields, all about. And why is it occurring when, in fact, nothing has really changed for the Fed, and Powell just reiterated that it probably won't anytime in the immediate future? Well, this then comes down to what we were just discussing and on the show yesterday, and really the makings of this rally. We just said that the way that this head and shoulders would-be pattern came together was last week with this breakout, this green candle right there. And as a matter of fact, if we look at the meat of this rise, it's really only 3 trading days, and of those 3, really only 2 that make up the bulk of what's going on here. Consider, this pop right here is the previous month's CPI report. That's what forms us this low just above 110. This right here is last week's PMI reporting, and this bit in the middle, which ultimately ends up with some digestion and not much forward progress in its immediate aftermath, this is the DeepSeek news, where the markets clearly took a bit of a risk off tilt, and that of course helped bonds higher. But it's really these 2 candles here that account for the meat of this entire rise. Now, the explanation that we heard from Fed Chair Jerome Powell today, again, by the way, he said something similar after the Fed's January meeting at that press conference, that the rise in long end yields, that is to say, this, is more about risk of uncertainty downwind, that this is not the Fed, that what this is what he called term premium. That is to say, the premium that investors demand, the extra income that they demand, the extra yield that they demand for lending at longer dated maturities. That is to say, because there is uncertainty about where the correct borrowing cost level is as you go out in time. Now, sure, maybe that's not an unreasonable perspective, but of course the question then becomes, well, why are we uncertain, and what kind of uncertainty is animating this? And what these moves would suggest is that as we move higher on the bond structure here, it isn't so much easing uncertainty as it is a growth concern that seems to be emerging. And that's because this move right here follows that CPI number where core inflation came in just a touch lighter than expected, but more importantly, the breakout, last week's decisive move that we are currently testing the wherewithal of, that move came after disappointing PMI data. And what we saw there, PMI, of course, a kind of approximation of the trends that GDP will ultimately trace out, and looks further afield beyond current conditions. This is, of course, a survey of purchasing managers, hence PM in the PMI. And their job is to look 6, 9, 12 months forward and decide inventory levels and decide outlays and budgeting, and of course, that requires an opinion on the future. And what they said in the survey that was just updated for January is that U.S. economic activity growth has slowed to the weakest in a year, primarily because of a downturn in the critical service sector. And so it would seem that what the bonds are telling us here, in particular with this surge, is that it isn't so much that there is easing uncertainty. It is more like the Fed is reluctant to cut now, and the markets are saying, well, if 6, 9, 12 months downwind, the business cycle is doing this, then the Fed's reluctance to move sooner means they're going to have to move more later. And rates are going to have to be weaker. This, of course, is the perfect backdrop to be caring about this incoming CPI report. Not surprisingly here, the expectation is that most inflation remains locked in the service sector, which is why that PMI drop-off is so significant. This is very much the essence of U.S. economic growth here, and of course, by extension, global economic growth, because the U.S. has vastly outperformed every other major economy, and which is not to say anything at all about China, which has been basically at standstill since reopening from COVID restrictions. And so really the U.S. service sector is the essence of the global growth game at this point. So we can see there's next to nothing here by way of demand pull inflation from the goods side. That inflation is next to zero. Energy, that contribution has rebased next to zero, and that's why we've had this slide up in the headline. That's expected to hold unchanged here at 2.9%, but the core is seen ticking lower from 3.2 to 3.1%. That would amount to the weakest core inflation since April 2021. Now, it would be tacit progress, but is that something that's likely to get the Fed to move quickly on rate cuts? Well, hearing Powell speak, the answer is no. Now, looking at the lead-in here, the ISM numbers that we had last week, we can see the price component there seemingly endorses a bit of a downtick on inflation. That critical service sector component, that's this green line right here, showed that the pace of inflation cooled, still positive, of course, but cooled in January. There's a little bit more pep on the manufacturing side, but that, of course, is a very small part of the economy at this point. We're talking about something like a 70-20 split at this point, where about 70% of the U.S. economy is the service sector, and only something like 20% is manufacturing, with the rest falling to ag. And so we have a reasonable argument to say that perhaps core inflation cooled a bit last month, but certainly not to say that it's moved aggressively off the recent averages. Moreover, if we look at the Fed's higher frequency metrics that it likes to look at for where inflation is trending, and we're really focused on the core because what's going on at the headline is largely driven by that overlay of energy and food, and those things are volatile, and the Fed has no agency over them. So it's really that service sector core bit that matters. We can see here that, in particular, the 6-month annualized rate for month-on-month changes in core CPI, that's showing us that over a 6-month horizon, inflation is actually accelerating, or the annualized rate of inflation is accelerating. Helpfully, there seems to have been a downtick in December for the 3-month rate, and that's in part why we got the response from bonds that we did right here. But it's still a mixed picture, and not one that, at least, again, hearing Jay Powell today, gives the Fed any confidence to move anywhere quickly and with strong conviction. Moreover, if we look at the Citi Economic Surprise Index, we can see that the recent path of U.S. economic data has broadly tended to side increasingly close with expectations. When this index comes back in the direction of zero, what that essentially implies is that incoming economic data is, broadly speaking, registering in line with forecasts, that essentially surprise risk is relatively low. So chances are we land at something in this ballpark. And of course, if that happens, then the question becomes, well, okay, so that means the Fed is probably still as anchored as Powell implied. Certainly no hurry to move there. So it probably leaves policy expectations generally in this range. But then, of course, for the bond market, the upshot remains the same. That with this, what we end up with is higher for longer now. That then means lower faster later. And we get further on this move in the long end. Bonds go up, yields come in. That may well be a headwind for the U.S. dollar. But of course, the real question is, what does that do for overall sentiment? And does it ultimately get stocks off their perch here and get them to move in a direction? Now, if the upshot becomes, with relatively in-line numbers, that the Fed is in fact running the risk of missing the boat on cuts, and this actually gets the market animated with some sort of a cyclical concern, then perhaps you could start a move lower here if, again, stocks are prepared to worry about such things. On the other hand, if not, then perhaps you remain here until some sort of conviction emerges. Perhaps the most potent risk for markets here, which clearly opted not to get scared when Powell made the case for delaying rate cuts today, is that CPI is actually a little bit softer. And the conventional wisdom would be, oh, well, goody, it's softer, they might cut sooner. But if the market has become animated by a cyclical concern, as this would imply, especially given how we got here and what the catalysts were, PMI data most recently, then a soft result may actually end up with a more acute concern about where the economy is going, about recession winds gathering in the second half of the year, and about what that could mean for risk. Now, that makes looking at how the CPI numbers come out and the subsequent market reaction, no matter what the numbers are, incredibly instructive. If you get a weak number and stocks don't like it, well, then we know where their head is at. If you get a weak number and the markets do like it, we get that as well. And we get a reenacting of our dynamics that we saw toward the end of last year. If we get a hot number and the markets like it, well, then it is, in fact, cyclicality that's on their mind. And if we get a hot number and the markets don't like it, well, then we've learned something yet again. So the interplay between what happens with this range in response to whatever happens in the bond market, in response to whatever happens in the CPI report, a potentially defining catalyst here. Not just for bonds, not just for the dollar, not just for rates, but for risk sentiment writ large. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris for Futures Power Hour Mondays and Fridays. In just 30 minutes time here, I will be on, as I am every Tuesday, with Victor Jones for The Price of Truth. Back with Victor and Tom for First Call on Sundays. Writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Today, and today is Tuesday. We had Jerome Powell testifying today, but we'll get into some toward the market, go over some of the positions that we had taken today, some earnings. My man's with the flow. My man's hair is flowing. I see you stroking that hair, bro. How we doing today?
It's been a struggle today, at least as far as the hair. It's not a great hair day for me. But on the market,
must be nice. If that's the bad hair day for you, bro, you're in.
It has not been wholly cooperative. It's been quite an effort just to get it to look in the way that it does right now. Sometimes it's always a wild card. It seems most of the time that it looks perfect. It's some Saturday when I have no plans. So
no, I got you. I mean, before we get into it, how are we doing today? What's new? Anything in particular you've been looking at in the market, paying attention to? How are we doing today?
I'm doing good. I caught a nice move on Vertex Pharmaceuticals. Played an earnings trade overnight last night.
Vertex Pharmaceuticals.
Okay. To the downside, it was high risk and kind of stupid, but it totally panned out for me. So I was up $400 before I could really even blink today, and that's good because the rest of the day has kind of been steady ticks down from that point. I have this Shopify position. I was venting about it earlier today with Nick, but it's burning a little bit of a hole in my pocket. I played a inverse condor on them for earnings. Just needed to finish outside of 119 to 123. It closed 123.56 today, but that was about the first time all day it was outside that range for me. We were just plinkoing around, scaring me. And then I was also
that one was what you said, Shopify.
Yeah, Shopify.
Gotcha.
Yeah, and I had planned. It was my basis was that it moves. It's super volatile all the time, but more pointedly, the last 6 earnings had all had gaps that were $10 or greater. So I was expecting something similar to happen, and of course, they just came in right at expectations, slight beat, but it hasn't really moved too much. It seems the market correctly priced this in. So I have 3 DTE. I mean, that's including today, really. Well, I guess no. Wednesday, Thursday, Friday. Expires Friday. So I just needed outside that range by Friday. Hopefully we keep pushing higher at this point. But it seems to be channeling a little bit. So slightly scared on that front. But what about you? What do you have open? What are you eyeing? What's going on? Did we lose Arrow? Did I lose Arrow?
My fault. Kind of want to take a look at before we get into my positions, those things, I want to take a look at Shopify. I know you said you were looking at the earnings for that one. I know Shopify is one of those underlyings that really popped off over the last, I would say post-COVID 2020, especially with a lot more, online services, online websites, all those kind of things. So I think we really saw it take off at that point, but it looks like it's still doing really well. I haven't looked at it in a while. Yeah, earnings before the bell today. But no, this thing has been killing it. And then the one before that what was that pharmaceutical company?
Vertex, VRTX is the ticker.
VRTX, Vertex Pharmaceuticals, nice. No, this is a really volatile one. Just wanted to take a quick look at some of these. But I don't think my side has been as exciting as yours. I haven't been looking at any earnings yet. I know last week and the week before that looked at Microsoft, Meta, and another, I believe it was Amazon. I think I was speaking with Dr. Jim. Dr. Jim put on, no, we were discussing on today's assignment, we were discussing about, he has an intern, right? He has his daughter. That's his intern. She kind of, tells him which directions to trade certain things. So, I took the intern's advice and, it didn't really pan out as well as I should have, or it could have or should have. But that was Amazon. That was the last earnings trade that I had taken. But we'll get into see what earnings are coming up as well. I don't know if any is going to be interesting enough for me to want to pull the trigger on that. But other than that, brother, SPY sold an out of the money call spread on SPY. I usually like to have a position on in QQQ, SPY, or IWM just to express my overall or longer term opinion on the market. So I'll do that. 38 days to expiration. That one's kind of just sitting in the portfolio, cooking day by day. QQQ, I have quite a few things on in here, and a lot of them expired this week. A lot of the 3 DTEs, like you kind of just touched on too. But I had sold a put spread yesterday on QQQ, and then today I had also sold a call spread. So it's a very narrow iron condor now, kind of legged into it. So it's really narrow. But I think tomorrow, if we get a little bit of a pop tomorrow, there's some levels that I'm looking at. If we get a little bit of a pop tomorrow, I should be able to get out of the put spread that I sold unscathed a little bit, maybe make a few bucks on that one. But then the condor the call side will take a little bit of a hit too. But we'll kind of break down what the risk profiles looking like here in a little bit. And then, I did trade a 0 DTE today, so made a little bit of money on the 0 DTEs on QQQ this morning. That was nice. Did not catch the immediate move on that one. I mean, the market absolutely, the floor fell out. Absolutely plummeted. And it was one of those positions where I didn't want to hold it too long because this trade took a little longer to work out than I would have anticipated. And because they're the 0 DTEs, I don't want to hold them too long because they start to lose value so quickly, especially as we get closer to that expiration. So I just made the executive decision to take off those contracts, but I did leave on the one micro that I was trading a little bit longer. So this micro NASDAQ into QQQ was the same exact, idea, just a different vehicle. But other than that, that's all that's going on over here today. QQQ, micros, SPY, a lot of the indices, as you can see, I definitely favor a lot of the indices. But other than that, that's all we got today. Gus, we can check out what, earnings we have coming up. And
yes.
Not as exciting.
Yeah, certainly.
But still some solid trades for the day, though, overall. Yeah.
Yeah, I certainly, there's earnings that have already, a few interesting earnings that have already gone off after close today that I wanted to talk about that I was eyeing. I guess I'll start.
Right.
Well, I'll start with the big one, which is SMCI. I'm sure we have lots of people interested. Narrowly missed expectations, really kind of a nothing burger in terms of the actual earnings call itself. They are up about 9% in post-market trading. They gave, earnings are always so dangerous to trade, and it's something that I emphasize all the time. And particularly in this case, I haven't understood this recovery for SMCI for a little while. They got added to the NASDAQ and all these good things, I understand. But they're up about 9% in post-market action, and all they did was narrowly miss earnings and lower their guidance for next year, for this year, I should say.
That encompasses earnings,
yes,
if you will, but go ahead.
Yeah, it encompasses both SMCI and earnings perfectly. This rocket on pretty negligible news in the grand scheme. But DoorDash also went off. Yep. They came in pretty much exactly in line with analyst estimates. EPS was on the nose, 33 cents a share. That's what was projected. Revenue, $2.87 billion. The estimate was $2.84 billion, so $30 million beat there, which is funny. $30 million sounds like a lot of money, but I guess it's pretty negligible, about 1% in the grand scheme of that. And they're up almost 6% since close. And then Lyft went off as well. And Lyft, this is where I'm kicking myself because I let my Shopify bias play into not taking a Lyft trade. I had the exact same sentiment about Lyft as I did Shopify, big gaps in recent earnings calls, and I was fully expecting that to happen again, but I decided not to play the inverse condor because Shopify is burning me so bad right now, and I was like, gambler's fallacy, I don't want to keep falling into it. What do you know, Lyft is down 10% in post-market trading. They reported EPS of 15 cents on 20 cent per share estimates. They did beat revenue. They came in at $1.6 billion. The estimate was $1.56 billion. And they also announced their first ever share buyback program, $500 million share buyback, and this was their first profitable year. So, bad EPS miss. I mean, 25% miss on EPS is nothing to sneeze at, but everything else there is resoundingly good news. And their first profitable year is crazy good news. I can't believe the move we're getting to the downside on this one.
Again, I mean, that just encompasses, earnings at its core. I mean, SMCI, like you kind of just mentioned, and the type of rally they're having post-market, lifts, finally profitable, first year being profitable, all this good news. And we see an extreme move to the downside. So, I mean, that really does encompass earnings season. And I think this is one of the many reasons why I'm always using defined risk strategies whenever it comes to earnings. I know I've always really, been on the side of iron condors, spreads, whatever the case might be, but I don't know if earnings have ever left a bad taste in your mouth. I would say it's not so much that there's anything wrong with the earnings. I think it's just more so going into the mindset that good earnings can have a negative outcome on the stock price. Bad earnings can have a positive, outcome on the stock price. So it's one of those things that I think you kind of just learn to accept that, the market's going to do whatever the market wants to do, regardless of news and expectations.
It's true. And it's this weird dichotomy where you have analyst expectations, and so the market moves ahead of time to price in those expectations, but then sometimes the market overprices in those expectations or is expecting a beat of the expectations. So you have two sets of expectations with any earnings call, essentially. You have the market expectation and the analyst expectation, and they fight with each other constantly. So yeah, that's why, I mean, it's not uncommon at all to get a good earnings call and have a stock move down. It's just because everybody knew the earnings call was going to be good and priced in that move a little too much. So yeah, interesting, efficient market things happening there.
Most definitely efficient indeed. Volatility still kind of dead over here, Gus. We're into the second month of the year, kind of the same story, starting off 2024, 2025 is looking really similar so far, at least. Really not much of an expansion. Last time we had the pop in VIX was January 24th. What happened? Was that the news about the potential tariffs? It might have been.
Probably. That's right
over
after
the weekend.
Inauguration. I think the inauguration was, I don't know, I guess it was 2 weeks before that. But yeah, I would assume that's tariff news happening.
So it does not seem efficient alone, as he says in the chat. But no, volatility has been a little disappointing, going into the year. I know, again, hopped on the Where Do I Start series with Tom I'm over here talking about back in like it's that long ago, but like back in 2021, we were used to a 20, 30, 40 VIX even, and now we're kind of steadily trading around 16. So maybe it brought us back down to reality a little bit. And maybe that just wasn't, the correct expectations moving forward into the next years to come. But other than that, volatility's been a little bit dead. What are we looking at for the rest of the week? We can look and break down some of these earnings coming up, and then we can also break down, some market expectations for things like the NASDAQ market, because that's the one that I personally favor and look at every single day. So let me pull up NASDAQ, and we'll look at some of the earnings. I'm not opposed to earnings. It's just one of those things where if I'm going to lose money, if I'm going to lose money on something, I want it to be on something that I am confident and convicted in. Not that any other trade, exactly what's going to happen. But if that's going to be the case, sometimes with earnings, it just, kind of rubs me the wrong way a little bit. But I'm not opposed to it because I am sitting on a little bit of a cushion, Gus. And I got to take my hat off to Dr. Jim. When I had gotten into Microsoft and Meta, those both hit for way more than the usual risks that I even put on a trade. So that's why within these next months, I'm like, I have some reserved capital to expose into some of these earnings. So I'm not opposed, even though it sounds like I dislike earnings, Gus.
No, but, I mean, I'm inclined to agree. It's just that I have a general
back in my day,
a general sentiment of hate towards earnings, but I'm not afraid to play them every now and then. And I think you make a great point with, if I'm going to get burnt, I want it to be because of me. And with earnings, you can be so correct, and the market moves the opposite direction. Yeah, I mean,
great point.
Yeah, you can think. I mean, like I was just saying, you're fighting the market expectations as much as you are the analyst expectations. You can tell somebody outright a day in advance what the earnings numbers are going to be, and they still might not be able to properly trade that just because of how crazy things are.
No, completely agreed. You put that in a really good way. But before we get into more of the earnings here, Let's talk about weekly expectations heading into NASDAQ. I know I talk a lot about NASDAQ. Kind of want to just show exactly what I'm looking at, what I'm going to be looking forward to for the rest of the week. Not that that matters, not that the market cares, but this is something that I would like to happen here. Just a quick breakdown on what we have here. This white line is the point of control. So this white line right here is the previous week's price level where there was the most transactions that occurred over last week. So that's what this is for this week. This is derived from a volume profile. I know we have the volume profile tool over here. Maybe we can have another segment one of these days where we kind of break down volume profile and what it's built off of. It's a distribution of volume. With Tasty, especially a lot of the research, we use a lot of distribution curves. We like the data that comes along with them. So we have that bell curve whenever we use a volume profile. So I think a lot of the Tasty community could grow fond to it because, again, we're very familiar with bell curves. I wanted to real quick plop this up on there, but we'll do it another time. But essentially, that's what it is. And essentially what this highlighted zone that I have off here is what we'll call the value area. And that's going to be that one standard deviation in the middle of the bell curve. So this is where 70% of the trading activity occurred from last week. And one thing that I kind of like to keep an eye on is, we talk a lot about price discovery as well. And I know to each their own, people, view the markets through different lenses, have different perspectives. But one thing that I'll be looking out for, at least this week, if we start to see a lot more price action traded above this value area high, that's what it would be, the VAH, the value area high, I would look more for longs, directionally speaking. Or, if we start to get a lot of weakness around the value area high, we could probably get a short and then short back down to the point of control. And that was pretty much the trade idea that I had taken for today. But that would be the expectations for me. I hope we can get some type of upside as well. I'm kind of in a weird position because I sold the put spread, I sold the call spread. These are really close to each other as well. So the best case scenario, I'm going to break even on one of them and probably profit, a decent amount on the other. But one is definitely be break even. I'm not going to be able to suck out the premium on both sides of the market just because those are so close to each other and they're sitting at the point of interest or area that I'm pretty much looking for. So, hey, we get above this value area high and start trending to the upside, I'm going to take that as a sign that the Broncos are going to the Super Bowl next year. So hopefully that pans out. That's what we're looking at right there. I don't know if you have anything else you're kind of eyeing for the rest of the week, Gus, but we can find some more tickers here.
How's your delta on that position holistically? I mean, which direction burns you worse?
So it's going to be, and we can even pull this up. It's going to be the oh, that's a good question. Well, because I'm not going to hold this until Friday and let it expire. I know I did that the other week and I was like, where did my buying power go on my account? I had 100 shares of QQQ. I was like, I'm going to just exit these beforehand. So I'm not going to hold it all the way till expiration, but I will say, I did collect more premium when I sold the puts because, again, I sold that one a little earlier. I sold the call spread today, so I'm not getting as much premium as I, would have if I would have just put them on at the same time. So, if the market just goes up maybe $1 or $2, and then if you could just hold it there, that would be great. But we'll come back on Thursday and we'll see how I manage this. I think when we come back Thursday, this will be a good example on how we can manage something like this and depending on what the market's doing. Because one thing that's not going to change, especially this week, is this value area and the levels that we're looking at right now. In terms of, like I said, back to the point of control from value area high. But yeah, no, these are going to be the same levels we're looking at for the rest of the week. So we'll come back here and manage this together, Gus. But you definitely collected more credit on that put side. So we'll see. We'll see what we get there. And then again, my longer term opinion on the overall market for the next at least month and a half is to the downside a little bit. So that's why I do have that SPY position on there. Sometimes I'll juggle between QQQ or SPY. Oftentimes it's just going to be whichever one is giving me more of a sufficient amount of premium to take in. So I'll use QQQ SPY. I don't have a preference, but when it does come to the futures market and the way that these markets move, I do prefer NASDAQ. ES is a thicker market. I would say if, directionally speaking, if anyone's trading futures, if you want a little bit of a slower paced market, you don't really want, fake outs at highs in a lot of these wicks. And, you might gravitate a little bit towards the S&P 500 because it is a thicker market. And even though it's a slower moving market, the point multiplier on ES, will make up for that as well. But I think they they have two different personalities. I see them as like brothers, or same but different. Same but they kind of have a different personality. So that's how I kind of view Nasdaq and ES. Is this looking at volume or time and price? Is this looking at volume or time and price? This is looking at all the above. So I mean, if we're really thinking about it, we're taking the volume from the volume profile. So that's the distribution of volume. So we're using volume in that sense. Time and price, you kind of mentioned the TPO, which is called the time price opportunity grumpy Mike. Maybe you've used that before, but that would consider time a little bit more. Time isn't as much as a element in this type of trade as it would be in others. But, if you consider using time as the previous week's data, right, again, this volume profile, this distribution of volume is taken from all of last week's trading activity. So that's the time window as well. I mean, I guess you could incorporate time within that as well. But anyways, we got a couple minutes here left. What other tickers are on the board, Gus? So we can go ahead and pull up some of these earnings with this watch list as well.
Yeah, absolutely. Earnings.
Lulu? Oh, no, never mind. Not Lulu. You a fan of Lulu? You like Lulu? You like some Lulu pants? They have some good quality.
Yeah,
I know Nick.
I was going to say.
I know last time I seen Nick is always wearing these Lulu pants.
Yeah, you mean like IRL?
You have to have some. You're the golf. Yeah, you give me that golfer kind of. I feel like you got to have some Lulu pants.
I do golf. Yes. I prefer Bird Dogs, which is essentially the same product, just a different brand. That's where I gravitate. I do have two or three pairs of Lulu shorts and pants and stuff, and they make very high quality stuff. Bird Dogs is just slightly cheaper, but I may have to shift my allegiances soon because they cannot restock this site. I've needed new shorts for a long time, and they will.
So they're popping. They're doing well then.
They're
doing well then. Okay.
Yeah, the restocks are a big deal, and they don't like try to create exclusivity. Like it's not like a sneaker drop where they sell out in 5 seconds or anything. They just genuinely don't have the production to keep up with
high demand right now.
Yeah, exactly. Okay. So I might have to shift gears to Lulu, but I know Lulu and Viore. I've only heard good things.
Yeah, no, absolutely. I mean, I've heard both, but we got FedEx coming up. IV rank not looking very attractive. We're gonna actually just scrap that one. Adobe, shout out. I know Adobe was working on a lot of AI features. AI was like the talk of the town. You put AI in your earnings report, your underlying popped off. And I know Adobe was doing that a little bit as well too. But I don't know what type of progressions they've made in terms of the AI, sector of their software, but they're presenting earnings here, March 12th after the bell. So we'll see what we get there. We have Costco. Costco.
Sorry, go ahead.
What's that?
No, I was.
No,
just
go ahead.
Say,
What's that, bro?
Something else I haven't gotten to mention on air yet is the Texas Stock Exchange.
Mm-hmm.
I'm sure this has been highly discussed. But the TXSE and Y'all Street is coming in full force. They have officially filed as Y'all Street.
What street?
Y'all Street, like
howdy,
y'all.
That is just too on brand.
yeah, exactly.
It was too on brand.
Well, it was a meme when they
obviously done on purpose, right?
Of course, yeah. When they were originally filing with the SEC, it was a meme. Everybody was calling it Y'all Street, and then those crazy people actually went and did it. They formally filed that way. So I'm wondering, as I sit here and look at the earnings for tomorrow, and they're listed all as Nasdaq or NYSE, if that's going to say TXSE or if it will say Y'all. But it's going to be one or the other.
I guess we'll find out. I mean, you're from Texas. You'll be the first to let us know. So let us know.
I will.
But Lone said AI is so 2024. AI.
It's true. They patched,
I know. I think
they patched the glitch where you can just say AI and send your stock price up 10%.
It was a glitch. They did. That's the best way to. Anybody under the age of 30 watching this, put that in Gen Z terms. They patched it. It's patched.
It's patched. Yeah. The new thing now is and it's kind of getting patched with the weight loss drugs too. That's what I've said for a long time, that saying GLP-1 was like saying AI, but in the pharmaceutical space, and that's starting to get ironed out a little bit as well.
I feel like those weight loss drugs. I feel like those will always. I think they're gonna have their cycles. Anything related to health, nutrition, fitness, weight, especially weight loss, I feel like is going to be a sector that's going to be around and pop off forever. I mean, we got Nutrisystem. I just remember, I can see the commercials in my head right now. I feel like they're always going to be trying to develop some pharmaceutical companies trying to develop something at all times.
Yeah, it's just, like. I do just think it's ever improving. I mean, this new stuff is just so easy.
Good point.
That's the appeal. I mean, Nutrisystem, like you had to sacrifice your good food. Now that's not a thing anymore.
This sounds crazy. It does sound crazy. No, other than that, we'll take a look at some other earnings another time. And again, we'll come back here on Thursday. And we can talk a little bit more about the volume profile, just see how NASDAQ is going to play out for the rest of the week. I think we actually have a really nice slot, one in the beginning, one towards the end of the week. So we'll always come back, see how some of these earnings played out, see how the overall indices played out, and kind of just go from there and manage our positions. But anything else you want to add before we're out of here today, Gus?
No real closing statements. I'm a FedEx hater. I hope they donk. I guess that would be my closing
FedEx
remark.
hater.
Yeah, I worked for UPS for 4 years, bro, man.
Yeah.
FedEx, no. I got allegiances. I got allegiances back in Texas. I can't be switching teams now. Don't ship your stuff FedEx, everybody. That's my promo.
I hear you. Drugs rotate down genetics, him still up weight loss. Oh wow, I almost read that out loud. Anyways, today is gonna wrap up the segment. Thanks for taking the time to hang out with us today. We'll be back here at the end of the week, give you a little bit of an update on the NASDAQ market, some of the indices, and we'll talk a little bit about how these earnings are gonna play out. But that's gonna be it. Stay tuned for more, and we'll catch you guys next time. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! I know Eliminate! You were on Eliminate! Oh my God!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
You get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's...
No.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked. She said, "So where are we going on our date then?" He said, "Oh, I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just going to get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custard and beans.
Control.
knocked me off my pivot foot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a
Like,
dessert.
what is this?
It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can't, because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot, because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like man work, and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish, for sure.
No, I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. It was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for 5 out of the last 6 years. And so I really appreciate you guys. And I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing. For guys like me out here, what you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm. Okay, I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm gonna be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right. I know it's on there. It's warm.
No, I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5, just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC style?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce. I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot. Is what he's trying to say. It's an elevated. It's an elevated. It's an elevated nothing. It's a chicken. It's actually pretty good. Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched. I'm Tony Batista. He's Tom Sosnoff.
41. You got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 82,
83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983.
Yes.
It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
What happens when two titans of trading come together to harness the power of their prowess? Yes, let's watch these two dominate this popper shop. Wait a minute, I thought these guys were traders, not contractors. They're putting up a lot of bricks. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.